Alright, so let's start our chapter Companies Cost Records and Audit Rules 2014, which have been amended multiple times. Alright, so guys, in yesterday's class, this chart was left by me. I told you that I will discuss this chart in the next class. Yes, today is the class when we will first of all discuss this particular chart, and then we will move on to the cost record rules and cost audit rules. So now the first fundamental concept that I want to make you learn is that audit is useless without a backing supporting law. So I'll give you a simple example. Okay, you go to Reliance Industries Limited CMD, Mr. Mukesh Ambani, and tell him that, sir, we want to get your accounts audited. Please provide us your accounts. We want to audit them. You tell him that we want to audit your books of accounts. What will he say? What will he say? You know, he will tell you, get out. Who are you? You will tell him, oh, we are CMA's cost and management accountants, rank holder, first attempt qualified in CMA intermediate and final, and I've got 80 plus marks in cost audit. I'm an expert cost auditor. Please give me your cost audit. He'll still say, get out. No businessman is willingly ready to undertake audits. And this is true for us as well. If someone tries to poke into our work, someone tries to analyze our work, or someone tries to check our work and, cull out some mistakes in our work, we won't like it. We will never like it. We won't do it wholeheartedly. So usually the businessman always will resist audit. Every businessman will resist audit. They will not undertake audit wholeheartedly. They will not undertake audit willingly. They will resist audit. Every businessman will resist audit. So now, what is the way that we can force any businessman to conduct audit? The only way is that we have to introduce mandatory provisions, statutory provisions in law regarding audit. So the simple equation is that if you don't get yourself audited, then your company will be locked out, then your business will be shut down by the Companies Act, and you will be prosecuted. So because of this fear, the company will get its audit done. So now I come back to my original statement that without any audit, without any backing law, audit is useless. There has to be a backing law. A backup law should be there, a law that backs up a particular audit. Only if there's a backing law, a backup law which supports your audit, only then will your audit succeed. Only then will your audit perform really well, and any company will be willing to get itself audited. So simple, we need to have a provision regarding our audit in the Companies Act. That is the crux of the matter. Sir, what is that provision which is there in the Companies Act regarding cost audit? The provision is section 148, and yes, this is the mother section of our profession. This is the backbone of our profession. If this section is not there in the Companies Act, we cost accountants lose our shine. Our shine, our vibrance, our brightness is shining and is touching the sky because of this section in the Companies Act. So the growth and the prosperity which cost accountants have earned in market, the major credit goes to this particular section. One of the major reasons why we are shining so much, the credit goes to this particular section, section 148 of the Companies Act. So what does this section tells about costing? Yes guys, so this section first of all lays down the principles of maintaining cost records. So obviously, if you don't maintain your cost records, then cost audit is not possible. So the first requirement that the section will tell you is to maintain your cost records. Because unless until records are maintained, audit is not possible, right? So the first proviso, the first subsection will tell you to maintain cost records. Who is supposed to maintain cost records? And those who are supposed to maintain cost records, out of them, some of the people are required to get their cost audit done. So first requirement of cost records will be enunciated in this particular section, and then out of those people who are required to get their cost records prepared, out of them who will be required to get its cost audit done, these are the twin subsections which we are going to deal in today's class in great detail, guys, in great detail. So the two sections are 148 subsection 1 which tells you about cost records. Obviously, financial records are already being prepared by the company. Now company will be reluctant to prepare cost records. No, what is the need of cost record? We don't want any cost records, but section 148.1 will mandatorily ask certain companies to prepare their cost records. Cost records are mandatory for certain class of companies. So let us see what are the basic principles in which we can see that yes, these are the benchmarks because of which cost records are required to be prepared by any company. So cost records means it is applicable for specific. First of all, the meaning of cost records. Cost records means utilization of material, utilization of labor, and other item of cost should be listed down. And of course, all these things are listed down in our cost sheet. So it is nothing but a cost sheet and the supporting annexures and the supporting accounts. That is our cost records. In very simple layman words, cost records means cost sheet. Simple. Okay. Then it is applicable only for specified companies. Cost records is not mandatorily applicable on all the companies. It's only mandatory applicable on specified companies, but other companies can also prepare their cost records, can prepare their cost sheet voluntarily. There is no restriction in law to voluntarily prepare your cost records. So you can prepare your cost records voluntarily, no problem in that. So if you want to prepare your cost records voluntarily, Companies Act is more than happy. Companies Act is happy. You can prepare your cost records voluntarily, no problem in that at all. Okay. So specified companies are required to prepare their cost records, only specified companies, not all the companies, plus companies who are producing or providing specified goods or services. So there are two thresholds which have been listed by this particular subsection. Number one, you should be specified companies, which means you should fulfill the turnover based criteria which is given in this particular subsection. There's a turnover based criteria which is given in this particular subsection. So if you fulfill that turnover based criteria, then you are required to prepare your cost records, and plus you should be falling under the specified category of goods and services. Not every person who's fulfilling the turnover criteria becomes eligible for cost records. Only those people who are producing specified goods and services, they are eligible for cost records. Now guys, simple as it is, the statutory audit provision which are there in the Companies Act, they are applicable for all the companies. They are applicable for all the companies, irrespective of their goods and services which they produce, irrespective of their turnover. Statutory audit is applicable for all the companies. Tax audit is applicable for certain companies. Section 44AB, it enunciates the turnover limit above which the tax audit is required to be done, right? So there are different provisions for different audits. Similarly, we have specific provisions for cost audit as well. So only if you fulfill these two conditions, only then will you be mandatorily required to prepare cost records. So can we voluntarily prepare cost records? Answer is yes. Voluntarily, even if you don't meet these standards, then also you can prepare your cost records. No problem in that. The government is not stopping you from doing that. Please go ahead, prepare your cost records. It will be beneficial for you only. You will be able to analyze your cost really well. But mandatorily, the government has described only these companies which are required to prepare their cost records. So these are the companies which are required to prepare their cost records. These criteria, if these criteria are met. Okay, sir. Then the goods are specified in the category A and B based on turnover criteria or net worth criteria. This is how cost records mandatorily are required to be prepared. Okay. Now, let me move on to the second subsection, which is cost audit. The first condition which you have to meet for cost audit is that you should mandatorily be falling in subsection 1, because if you do not fall in subsection 1 and you do not prepare your cost records, then cost audit is naturally not applicable on you, because what will be audit when you have not prepared your cost record? So the first and foremost condition of getting your cost audit done is that you should be eligible for subsection 1, preparation of cost records. These conditions should be met by you. So both these conditions should be met by you. That is the first condition of applicability of cost audit. And obviously guys, that's true. Unless and until you are required to prepare your cost records, how will you be expected to conduct your cost audit? Not expected, right? So the first condition is that companies which are covered under subsection 1, only those companies which are covered under subsection 1, that is preparation of cost records, only those companies are eligible for cost audit. So subsection 1 is cost records. So if you are eligible to prepare your cost records, only then will you be eligible to conduct your cost audit. Okay. Now plus means both the conditions should be cumulatively satisfied. Second condition is you should meet the turnover criteria which is prescribed by the rules. So yes, both the conditions are to be cumulatively satisfied. Number 1, you should be eligible for preparing your cost records. Number 2, you should be meeting the turnover criteria which is specified under the rules. If these two conditions are cumulatively satisfied, then guys you are required to get your cost records audited by a cost accountant. Obviously, this authority is only given to cost accountant who has got a certificate of practice, who is a practicing cost accountant. This authority is only given to a practicing cost accountant. So who is a cost auditor? We have already studied in yesterday's class. Cost accountant who is in practice, he is a cost auditor, plus who is appointed by the board of directors of the company to become a cost auditor. And financial auditor or statutory auditor cannot be the cost auditor of the same company. Self-review threat. Self-review threat. Okay, sir, got it. So this was the brief of section 148. This is the brief of section 148. Now let us delve into great detail of section 148. First subsection 1, then subsection 2. Let us delve into depth of section 148. Okay, let me open yesterday's notes as well, because yesterday's note will contain the section 148 language. Yes, these are yesterday's notes. Please open yesterday's notes also. Please open yesterday's notes also. All right. This is section 148. This is our mother section. This is the section that really gives us impetus in market. It clearly makes us stand out from the general crowd in market. This is the section. Section is section 148 of the Companies Act. So what is subsection 1? Okay, subsection 1 relates to cost records. Subsection 2 relates to cost audit. First we are going to analyze subsection 1 and then we are going to analyze subsection 2. So subsection 1, notwithstanding anything contained in this chapter, oh wow, this is known as the non-obtained clause. This is the non-obtained clause, which means this clause overrides the entire chapter. This clause overrides the entire chapter. 148 subsection 1. Notwithstanding anything contained in this chapter, the central government may by an order, so central government may by an order in respect of such class of companies. So there are some class of companies in respect of which are engaged in production of such goods or providing such services. So two conditions are to be cumulatively satisfied. Number one, you should belong to such class of companies. Such class of company means turnover criteria is required to be met. Okay. Plus you should prepare specified goods and services. Specified goods and services is given in table A and table B of the rules. As may be prescribed, direct that particulars relating to utilization of material, labor and other item of cost as may be prescribed shall also be included in the books of accounts. So your cost sheet should also be included in the books of accounts. That is the guidance mandatory requirement which is given under section 148.1. Two conditions are to be met. Number one, you should belong to such class of companies, which means you should meet the turnover criteria, and you should be engaged in production of such goods, specified goods and services which are given in table A and B. If you meet both the conditions, if you satisfy both the conditions, then you are required to prepare your cost sheet included in the books of accounts. Then you are required to prepare your cost records, which is necessary the cost sheet. So the criteria, what is the prescription? Who has given this prescription? Where is the criteria given? Guys, this criteria, this prescription, that was the turnover. What is the goods? This is given in the rules. This is given in the rules 2014. Section has directed you to the rules. Now we will see the rules. What is it which is given in the rules? Now we'll see the rules. Alright, sir, let's see the rules. So we are going to see rule number 3, which is application of cost records. And this is corresponding to section 148.1 of the Companies Act. This is corresponding to section 148.1 of the Companies Act. This section is corresponding to section 148.1 of the Companies Act, which is application of cost records. Where will the cost records be applicable? Who all are required to prepare their cost records? How will you prepare your cost records? All the things will be given in this particular rule. So guys, please tell me whether cost audit will also be given in this particular rule, rule 3. Whether cost audit will also be given, the rules of cost audit be also given in this particular rule, yes or no, please in the chat box. Will the cost audit, provisions of cost audit be also given in the rules? In rule 3? In the chat box, please tell me. Provisions of cost audit, will they also be given in the rule 3? Please comment in the comment section. No, very good answer. No, correct. This rule is only dedicated to cost records. Very good. Answer is no. Perfect answer. No, 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 no. Very good answer. This rule is only related to cost records. So rule 1 is title of the rules. Rule 2 are the definitions of the rules. Rule 3 is the application of cost records. Rule 4 is the application of cost audit. Rule 5 is how to maintain cost records. Rule 6 is how to get cost audit done. This is the brief snapshot of all the rules that we are going to discuss today in our session. Okay, sir, got it. All right, now let us come on to the rule, and very, very important rule from an exam standpoint. Please write, very, very important. And yes, you have to learn the rule number. Some students will ask me, sir, do we have to learn the rule number? Absolutely, yes. You have to learn the rule number. You have to learn the rule number. Rule number is to be learned by you. Rule number 3, rule number 4, you have to learn the rule. Okay, sir, got it. Okay. Okay, let's read the rule. Any company. Rule starts by saying any company, including a foreign company, even if it's a foreign company which is working in India. There's a company who's working in India in its foreign name itself, like a liaison office, like a branch office, like a project office, and it is working in India, including a foreign company, engaged in production of goods or providing services. A company who is engaged in either production of goods or providing services specified in the tables below. Oh, so only those companies who are producing these products and who are providing these services, they are only applicable for cost records. Okay, specified in tables below shall be required to prepare cost records for such products or services in their books of accounts. Now, the cost records are required to be prepared only for such products and such services. Cost records are required to be prepared only for such products or such services. I'll give you a very small example. Okay, there is a company XYZ Limited. It is producing product A, product X, product Y, product Z. It is producing 3 products, product X, product Y, product Z. Okay, product X is classified under tables. Okay, product X and Y are specified under the tables. Product X and Y are specified under the tables, and product Z is not specified under the table. Okay, so product Z is a not specified good, and product X and product Y are specified goods which are being prepared by XYZ Limited. Now my question to you is, assuming that their threshold limit is met, please tell me in the chat box, cost records are required to be prepared of which all products? Cost records are required to be prepared of which all products? Option number 1, all the products. Option number 2, product X and Y. Option number 3, product X and Z. Option number 4, product Y and Z. You have to tell me the cost records are required to be prepared. You need to tell me cost records are required to be prepared. Suppose threshold limit is met. Cost records are required to be prepared of what all products as per rule 3. Let me reiterate the rule 3, okay? Shall be required to prepare the cost records for such products or services in their books of accounts. Now you need to tell me, after reading rule 3, as per rule 3, which all products should cost audit be prepared for? Which all products? Very good answer. Very good answer, guys. Very good answer. Cost records are required to be prepared only for the specified goods, not for all the goods. First and foremost conclusion that we need to understand over here. Because the rule itself says the cost records are required to be prepared for such products. Such products means specified products under the tables, table A or table B, whatever. So cost records are required to be prepared only for such products which are specified under table A and B respectively. Cost records are not required to be prepared for the products which are not specified under any of the table. Cost records are not required to be prepared for product Z. This is a conclusion which you need to really understand. Very thin point of difference, okay? But it will make a big impact on your answer in the examination, because this analysis will fail if you are not able to understand that not specified goods, the cost records are not required to be prepared. Now you tell me, I have not even taught you rule 4, which is cost audit. I have not even taught you, but you tell me whether cost audit is possible for this product or not. Product Z, whether cost audit is possible or not, assuming threshold limit is met. Whether cost audit is possible for product Z or not, assuming threshold limit is met, you tell me in the chat box. I have not made you understand the rule 4 as of now, but I want your answer regarding cost audit right now. You need to tell me whether cost audit is possible for product Z or not. Okay, Rutuja says no. Any other answer? Any other answer? Any other answer? Nageshwar Rao Divile says yes. Yes, 100% possible if they have cost records. No. I'm talking only about product Z. Whether product Z will be eligible for cost audit or not. I'm only talking about product Z. I'm not talking about product X and Y. Please note my question. Please rehear my question. Whether product Z will be eligible for cost audit or not, that's my question. Product Z, correct answer, guys, no. Product Z cannot be covered under cost audit. Why? Because cost records are not required to be prepared for product Z. When cost records are not prepared, then a question of cost audit does not arise. It is impossible to do cost audit if cost records are not prepared. And in this question, since only X and Y are specified, cost records are specified for X and Y only. So for Z, there are no cost records which are required to be prepared. Hence, Z will not be eligible to cost audit. Hence, Z will not be eligible to cost audit. Now, my next question is, please listen to my next question and answer the question. Next question is, assume product Z, cost records are prepared. Product Z, cost records are prepared voluntarily. Assume that product Z cost records are prepared voluntarily. Voluntarily you prepare the cost records for product Z voluntarily. Then will cost audit be applicable or not? There is no mandatory requirement as per law. There is no mandatory requirement. But they produce their cost records voluntarily. They say that, okay, we want our cost records. They produce the product Z, for product Z also they produce the cost records. So they prepare the cost records voluntarily. Now tell me whether cost audit is applicable or not. Your earlier answer was no. Now what is your answer? Even the students who have joined through app, I can see you, but I cannot see your answers. You are not answering anything. Please answer, students who have joined through app. Okay, some students are saying yes, some students are saying no. Not required as per law, but yes, if wants voluntarily. No. In audit, there is no voluntary. Correct. Still the answer is no. Still the answer is no. Even if they prepare cost records voluntarily, even then cost audit is not required to be done. Why? Because let us come to our mother section and let's read our mother section once again. Mother section says, Mother section says that the company must be covered under subsection 1. For conducting cost audit, the company must be covered under subsection 1. So subsection 1 should be mandatorily applicable on that particular company. Only then cost audit is applicable. Otherwise, cost audit is not applicable. And in this case, product Z, on product Z, subsection 1 was not applicable. Even if they did voluntarily, cost audit is not required to be prepared. They will not get their cost audit done. They will not get their cost audit done. There's no voluntary, voluntarily no one gets their cost audit done. So voluntarily cost audit cannot be done. Okay. Voluntarily cost audit cannot be done. So cost audit is not required to be done for product Z. For product Z, cost audit is not required to be done. Okay, sir. Okay, let me come back to our section. Oh, sorry, the rule 3. Okay, so this is the rule 3. This is the rule 3. This is the monetary threshold of rule 3. Now we have already understood that. You know what is the rule 3? Text of rule 3 we have already read. Now this is the chart of rule 3, a very, very useful chart where you can actually revise the entire rule 3 in a very short span of time. Okay, it says any company including a foreign company plus, which means all the conditions should be cumulatively satisfied. Engage in production of specified goods and services, which means specified under table A and B. Plus means the threshold limit of turnover. The threshold limit of turnover should also be met. Is equal to cost records required to be prepared for the specified product or services only. Only the specified goods and services are required to prepare their cost records. Not all the goods, not all the services, but only specified goods and services. For only specified goods and services, cost records are required to be prepared. Okay. Then what do you mean by cost records? What is the meaning of cost record? Cost records means utilization of material, utilization of labor and other item of cost. Necessarily cost sheet. This is nothing but cost sheet. So all three conditions should be cumulatively satisfied. Okay, sir. So we understood any company, we understood engagement in production of specified goods and services. We understood meeting the threshold and therefore cost records will be applicable. Now, sir, let us go deeper into each of these parameters. Let us go a little more into deep of these parameters. Number 1, any company. Okay. So we are not bothered what kind of company are you. Any company, be it a small company, large company or any company which is registered under the Companies Act, including a foreign company. Foreign companies are generally not registered under the Companies Act. They work in India using their branches, using their project office, using their liaison office. So those are also included in our purview. Okay. Then they should be engaged in production of specified goods or services. So what should they prepare? What should they make? They should make any product or service? No. Specified goods and services. So guys, very simple logic is that, we want to get cost audit done, or we want to get the cost records prepared by companies whose costing mechanism is little complex. There are a lot of mechanical procedures, there are a lot of complexities in their costing mechanism. Therefore, we need to analyze their cost in great detail. Or they are so basic to the Indian economy, some basic things which are available to Indian economy, that we need to understand their costing structure so that we ascertain this fact that they are not overcharging. Their profitability percentage should not be huge. So any of the purpose, but we have not included under a cost audit all the products. We have only included specified goods and services. And these specified goods and services are given in table A and B of the rules. In the rules, table A and B is given, and in that these specified goods and services are given. So first of all, we have table A, which is category A. Category A goods contain the regulated goods. Regulated goods means these goods are regulated by some law. There is an act which regulates these goods. Generation and transmission of these goods are regulated by some act. For example, electricity. You and me cannot generate electricity. It has to be strictly governed by the Electricity Act. Insurance. You and me cannot give insurance. It has to be strictly regulated by the IRDA. Then many other industries which are strictly regulated. Petroleum industry, strictly regulated industry. Okay. So this is known as regulated industry. So So not all the regulated industry are under this purview. Only 6 regulated industry are under purview of cost records. Only 6 regulated industry are under purview of cost records. There are many other regulated industries like insurance being one of them, but that is out of scope of cost records as of now. But obviously guys, as we move forward, we can see increase in the list of these cost records. Industries which will be applicable under cost records, we'll see an increase in the list obviously as we move forward. Obviously we want many companies to get covered under the cost records and cost audit. Obviously we want expansion of our profession. So we would like to see more companies being included in this list. But as of now, only these 6 companies are included in the regulated sector. What are these 6 companies? Telecommunication services. You use telephone, mobile phones, SMS, WhatsApp, all the kind of social media apps. So telecommunication services, it includes transmission, reception of signs, signals, writing, images, sounds or intelligence of any nature, and any broadcasting services regulated by the TRAI, Telecommunication Regulatory Authority of India. Generation, transmission, distribution and supply of electricity. This is again covered under the regulated sector, subject to cost audit. Okay, and 4 things are included over here guys. 4 things. Okay, very important. 4 things are included over here. What are these 4 things? Number 1, generation. When you produce electricity, that is generation. Then you have transmission. So the electricity which is generated, it is generated at a very high voltage. You have to equalize the voltage of that particular electricity before giving it to household. Okay, so this is known as transmission. So typically the person who generates electricity, he also transmits the electricity into a lower voltages. Then we have distribution. You have got distribution panels, you have got grids. These are distributed using grids. We have grids like we have Power Grid Corporation, right? PGCIL. So there are grids which actually transfers the electricity from places where they are generated to suburbs, to our house, not to our house but to the state where our house is. So they distribute the electricity. And finally supply. Supply means in Delhi the electricity is coming from Himachal, and when Delhi household the electricity is being supplied, that is known as supply. So there are 4 activities which are included over here: generation, transmission, distribution, supply. So strictly speaking, generation and transmission is production of electricity. It is a good. It is where the electricity is being produced. Okay, this is manufacture. And distribution and supply is actually service, providing of service. So generation and transmission is manufacture of electricity, which means electricity is being produced, and supply and distribution is supply of services of electricity. And both are covered under, all the 4 are covered under the cost records purview, cost audit purview. All 4 are covered under this purview. Again, it is regulated by the relevant regulatory authority, which is Electricity Act. Petroleum products are there. Petroleum and Natural Gas Regulatory Board always regulates this petroleum products. Cost records is applicable on this. Drug and pharmaceuticals, fertilizers, sugar and industrial alcohol. Again, covered under the regulated sector of the rules. Then we come on to the unregulated sector and category B sector. This is unregulated sector. It contains 33 sectors. 33 kind of companies are not companies but sectors are included in this particular category. 33. This is unregulated sector. It is not governed by any law, any act or something is not governing this particular sector, but this is little more liberal sector. There is no restriction by Government of India in this sector. Very less restrictions are there. Almost no restriction are there in this particular sector. So this is an unregulated sector. This includes 33 industries, machinery and mechanical appliances used in defense, space, atomic energy sectors, excluding any ancillary items or items. So machinery and mechanical appliances used in defense, space and atomic energy. So there are some B2B products which are being manufactured and supplied to defense, atomic energy, space, etc., which are included in this particular industry, but they exclude the ancillary items. If they are very small items which are just ancillary to this particular industry, they are excluded. And guys, in the examination you will be specifically given that this is the ancillary item, this is the main item. It will be specifically given in the examination. But you just need to remember, ancillary item is not included in this category. Any ancillary which is linked to machine or machine related items, it is not included in this category. Very important inclusions. Any company which engaged in any item or items supplied exclusively for use under this clause shall be deemed to be covered under these rules. Now, this is the important inclusion which has been included in the rules, which says that if there's any company, okay, machine, mechanical appliances used for defense, space, atomic energy, if there's any company which is engaged in any item or items supplied exclusively for use under this clause. So I'll tell you a very simple example. Okay, there's a company XYZ. It produces some products which it supplies to defense. Okay, there's a company XYZ. It produces some equipments or machinery or mechanical appliances which is supplied to defense. Not the arms, ammunition. No. Some mechanical stuff, some machinery. It supplies to defense. Okay. Now, XYZ requires some products which it has outsourced to ABC, and ABC exclusively supplies those products to XYZ only. ABC doesn't provide those products to anyone else in market, because that are specialized products which are used for defense procurement also. So obviously XYZ is covered under the rules for sure, no doubt about it. Even ABC is also covered under the rules. This is the inclusion. This inclusion is for ABC, which exclusively supplies the goods which are related to these goods. So ABC supplies exclusively those goods which are related to the main goods. Please read the inclusion once more. Any company which is engaged in any item or items is supplied exclusively for use under this clause, then it shall also be covered under the rules. So guys, technically ABC is not supplying to defense. ABC is not supplying to defense. But ABC is supplying something which is exclusively used for defense purposes. So ABC will also be covered under this clause. That is the inclusion. Okay, sir, got it. Then turbojets, turbopropellers, arms, ammunition, explosives, propellant powders, prepared explosives other than propellant powders, safety fuses, detonating fuses, percussion, detonating caps, igniter, electric detonator. So guys, you need not know the meaning of each and every word which is listed over here. It is practically impossible to know meaning of each and every word. I tried and I failed. So don't remember the meaning of each and every word. Just remember the words. Just remember the words. If you read this entire list 3 times, you'll remember the words. And the idea is just to remember the words. Just remember the words, nothing else. Okay, because it's difficult to understand the meaning of the words. Okay. Radar apparatus. Radar apparatus. Radio navigational aid apparatus. Radio remote control apparatus. Tanks and other armored fighting vehicles, motorized whether or not fitted with weapons, and part of such vehicles that are funded, investment and made in the company to the extent of 90% or more by government or government agencies. So any kind of tank, armored vehicles, motorized vehicles which are fitted with weapon, 90% of the holding of that company should be held by Government of India. Then we have port services. Important guys, important services. If anyone is providing port services, so what are the services which are provided at port? Loading, unloading. So on the port, your material is loaded. Now we want someone to pick up that material and put it in the customs warehouse or put it out of the customs warehouse. So stevedoring charges, loading, unloading charges, pilotage, hauling, mooring, remooring, hooking, measuring, loading, unloading, services rendered for a port in relation to a vessel or goods regulated by the tariff authority. So very special thing to be noted over here is any services provided for a port. So a port is requiring some services of a crane. You provide that service of a crane to a port so that port can pick up the vessels and shift it to the port. Port authorities need that kind of a service. Again, that is covered under these rules. So services rendered for a port. Then aeronautical services of air traffic management, aircraft operation, ground safety services, ground handling, cargo facility, supplying of fuel rendered at the airport. Any kind of aeronautical services are included in this particular category. Even supplying of fuel, supplying of ground handling. You've seen your bags are being checked in, checked out, putting in the belt, etc., etc. All these things are included in point number 8, aeronautical services. Fueling services at the airports. Exclusion. All the airports and aircraft operations belonging or subject to control of armed forces or paramilitary forces are excluded. So you've got some small airports which are army airports. They are not commercial airports, they are army airports. Like in Delhi, you have an airport by the name of Safdarjung Airport. That's not a commercial airport, it's an army airport. Only army can use that airport. Services which are provided in those airports, which are used by armed forces, they are not subject to cost audit and cost records. No, they are not subject to cost records. This is the exclusion. Iron and steel, road and other infrastructure projects, very, very important. Any kind of road projects or infrastructure projects, it covers road, national highway, state highway, major district roads, other district road, village roads, including tolls, bridges, highways, road transport providers, and other road related services. Hence, every activity including construction and maintenance of above projects are covered under these rules. So, if you are engaged in construction and maintenance of any of these things, then you are covered under the cost record rules. Rubber and allied products. If you are producing rubber and some products which are related to rubber, coffee and tea included. Railway or tramway locomotives, rolling stone, railway or tram fixtures, fittings, mechanical. So any kind of fittings which are used in railway, like a railway track, rolling stock of railway locomotives, manufacturing of the wagons, the railway wagons, any kind of tramway fixture, anything is included in cost records. Cement is included in cost records. Ores and mineral products, any kind of mineral production, extraction, which is mining sector actually. You are into mining sector. You call out minerals from the earth. That's included in this particular rules. Mineral fuels other than petroleum, mineral oils, etc. Base metal, inorganic, chemical, organic, inorganic, compound of precious metal, rare earth metal, radioactive elements, isotopes, organic chemicals, etc. Jute and jute products. Now you will wonder, sir, jute and jute product is such a simple industry. Why do you want to prepare cost records for jute and jute products? It's not a complicated industry at all. Guys, government want to monitor its profitability. What is the profitability which is there in this sector? And whether the cost is being disclosed to Government of India appropriately or not. Because government gives huge incentive to this sector. This sector receives subsidies, very high subsidies. Okay. So when it includes giving high subsidies to these sectors, so obviously we need to know whether they are earning well or not. If they are earning well, we'll withdraw the subsidies, guys. We will not give the subsidies if they are earning well. So we need to know what is their cost, what is the profit, so that their subsidies can be regulated and reduced. So for that purpose, we need cost records for jute and jute products. Someone is asking whether tea dust will be, included. Yes, tea dust will also be included. इतना याद नहीं होगा, याद करना भी नहीं है. You don't have to remember it. Just read this list 3 times before the examination. Just read this list 3 times and that's it. You need not mug this entire list. Simple. Okay, sir, got it. Then we have edible oil, any kind of edible oil which is being produced, which is being generated, and edible oil can be the almond oil or the olive oil or parachute or the coconut oil or the mustard oil, any kind of edible oil, it is covered under this particular category. Then we have construction industry. Okay, so isn't it a repetition? No, it is not a repetition, guys. In this only road and related infrastructure was included. Para number 10, road and related infrastructure was included. In this construction industry, everything else is included. Everything else is included. So this has got much higher scope. Construction industry, it covers industrial, commercial and social development and maintenance, real estate development including an industrial park or preparing special economic zones. Contractors as well as subcontractors are included in this particular. So this is a much wider list. Much wider list. It's much wider in scope. So this list is quite wide as compared to para number 10. Para number 10 was limited to the road infrastructure, the highway infrastructure or infrastructure which are related to the basic infrastructure of the country. Construction industry. Then we have the health services, and yes, all my female students, all my girl students will be happy after reading this particular clause because it has got a beautiful exemption for all the girls out here. Health services, namely functioning and running of hospitals, diagnostic centers, clinical centers or test laboratories. So everything is included over here. Diagnosis, testing and clinical, the treatment, all things are included over here. Exclusions. Companies running hospitals exclusively for its own employees, provided if such hospitals are not providing health services to outsiders, they are excluded. So if you have a hospital, but the idea is that you need to use that hospital only for benefit of your employees. You are prepared that hospital for your employees, for benefit of your employees only. Guys, sometimes what happens is that industries are laid down at remote places like exteriors, extreme exteriors, the companies are laid down. Over there is no health facility. When there's no health facility, then it's necessary to provide health facility to the employees. Therefore, these companies have their own, they have their own hospitals. So if the hospital is not for a commercial purpose, if the hospital is not for a purpose of only commercial things and to earn money, the objective is not that, and only for employees, then you need not prepare cost records and cost audit for this particular hospital. That is the exclusion number 1. Exclusion number 2, companies engaged in running beauty parlors and beauty treatments. Wow, what an exemption. Companies which are running beauty parlors and beauty treatments, they are exempt from this particular category. I'm very sure while the ministry was drafting these rules, there has to be some female some female member would have been in the committee to have included this kind of an exclusion. For sure it would be there, huh? So all your VLCC, Batra's clinic and the cosmetic surgery and the all the allied industries are excluded from cost audit. Cost records are not required to be prepared. Cost audit is not required to be prepared for any kind of beauty parlors or any kind of beauty treatments. Cost records are not required to be prepared. So yes, happy? All the students, the girl students are happy by this exclusion? Please tell me in the chat box. Students are live on app also, but they are not interacting on live or on app, guys. Guys, the fun of having a live session is interaction. Unless and until we have interaction, the fun of live session is not there. And guys, I sincerely request all of you to at least like the session, huh? Drop in a heart, drop in a thumbs up for the session. That will really help boost the video's credibility, and YouTube is then going to really inform everyone about this particular video. ये हमारे साथ नाइंसाफी हुई है. So boys are saying that this is a partiality for boys, because boys have not been given any exemption, but girls are given exemption. So I'll tell you what, huh? Today even boys are entering into beauty treatments and beauty parlors a lot. Even boys want manicure, pedicure and whatnot. All the boys want all these things also. So it's a benefit of our boys also. Okay, don't say like this. कुछ फर्क नहीं पड़ता. Okay, got it. All right, so health services are excluded. Health services are included in cost records, but specified things, point number 1, point number 2 are excluded from your health services. Point number 1, point number 2 are not included in the health services. Then we have education sector, which again is included in the cost records, like imparting training, education by means of any mode. Okay, so even coaching institutes are categorized under this particular cost records and cost audit rules, because it says any mode. By any mode you can provide education. Even school, colleges, they are all included in this particular category. For any mode, this particular clause can be used. Even coaching institutes, even online coaching institutes, even online courses like Udemy or Unacademy, or any kind of online coaching, that is also included in this particular category. So education services like imparting training or education by means of any mode. Exclusions, auxiliary services. Auxiliary means secondary services like food, like conveyance. Secondary services. Secondary services provided by companies as a separate independent entity to the education institute, like transportation of students, faculty, staff, catering services including midday meal scheme, security or cleaning or housekeeping services in such education institution, services relating to admission to such institution and conducting of exams are outside the purview of cost audit and cost records. So cost records are focused only to educational services, which means providing of education. If the school charges for anything else, like if the school charges for admission fees or conduct of examination fees or transportation or food, that is not eligible for cost audit and cost records. Cost records are not required to be maintained for that particular thing. It should be maintained only and only for the education services. Education services included in cost records. And number 2, the second, the exclusion is Services falling under philanthropy, any kind of charitable, service, any kind of charity, any kind of philanthropy which is being done, that charitable purpose. If you are educating someone for charitable purpose, then it doesn't form part of your, cost records and cost audit. Cost records will not be applicable. Like as many companies these days send their employees to government schools and underprivileged students to teach India project, and some companies as a part of their philanthropic pursuit also do this kind of an endeavor. So that is not included in our cost audit and cost record. Services falling under philanthropy, charity, or as part of social spend which do not form part of any business. Then milk powder, insecticides, plastics and polymers, tires and tubes, pulp and paper, all these are included in cost records. Textiles, glass, other machinery, electricals or electronic machinery, and last is production, import and supply, trading of medical devices. Now guys, before coming on to point number 33, point number 33 is really critical. Point number 33 is really critical. And there's one anomaly which is given in point number 3, which I'm going to highlight now. So for highlighting that anomaly, let me come on to the start of this particular rule. Starting of this particular rule. All right. So the basic fundamental of this rule is that any company which is engaged in production of goods and services, which is engaged in, the word used is production of goods and services. Any company which is engaged in production of goods and services. So if you read the first line, then it is apparent that trading is not included. Trading is not included. It is apparent that trading is not included. If you just see the first line, it gives a feel that trading is not included. And now let me read section 148.1 also. Let's read section 148.1. Even when you read section 148.1, notwithstanding anything contained in chapter, central government by order in respect of such class of company engaged in production of such goods or providing such services. Again, trading is not included over here. Apparently, trading is not included over here. Okay, trading is not included over here. Even in the section, trading is not included. Even in the rule, trading is not included. But the anomaly is, the problem is, the lacuna is, the confusion is that, sir, in point number 33, they have stated production, import and supply or trading of medical devices. Oh, sir, this is a anomaly. This is a confusion. This is a strict violation of the act, of the provisions of the act. This is a contradictory statement. Section says only production is eligible for cost audit and cost records. Rule says only production is eligible for cost audit and cost records. And the table says even trading is included in the category of cost records and cost audit. So the logic which all the cost accountants give for this anomaly is that even trading falls under the category of service. Trading means you are providing service of selling of goods and all the goods which are there. So it's a service. It's not production of a good, but it's a service. So it is very much included in the category. There's no anomaly. There's no contradiction. This is what logic is given to us by all the cost accountants who wants trading also to be part of cost audit and cost records. And of course, we want to expand our scope. So we want everything under sun to come under cost records and cost audit. So we say, no, there's no anomaly. There's no contradiction. No. Trading means services, and services written in section also, services written in rule also. So no problem in that. Services, trading is also included in cost records and cost audit. This is the logic which is given by all the cost accountants. And guys, we as students need no logic. Okay, this is just for your knowledge. For us, trading is also included for these category of goods. Only these category of goods, not all the goods, but only these category of goods. The trading is also included. So trading of medical devices like cardiac stents, drug-eluting stents, heart valves, catheters, pacemakers, intraocular lens, bone cements, orthopedic implants, internal prosthetic replacements, scalp vein set, deep brain stimulators, ventricular peripheral shunt, spinal implants, automatic impalpable cardiac defibrillators, patent ductus, arteriosus, arterial septal defect, ventricular septal defect closure device, cardiac resynchronized therapy, urethra, spinacture, divide, and I'm really not able to pronounce others, guys. I'm very sorry. You need not pronounce all these, you need not remember all these spellings, okay? Now you'll tell, sir, should we remember all these spelling? Sure, if we have to remember such spellings, sir, we should have taken biology in our 11th, 12th. Why we chuck biology? Because we cannot deal with such complex words. That's why we chuck biology, sir. And now you are making us remember all these. No, I'm not making you remember all these. Just read them thrice, that's it. Don't learn them, read them thrice, that's it. Before the examination, just read them, that even trading of these devices is permissible, and cost records is applicable on these services, even if they are being traded. Okay, so import and supply or trading of such medical devices is also categorized under cost audit and cost records, because we want to monitor this sector. The sector is a critical sector, we want to monitor it. So even if you do trading of this sector, you want to ensure that you are not adding too much of profit and inflating the price. We want to ensure that. So if you are in this sector, even trading is covered under the cost audit and cost records purview, even if you are just trading in these equipments, these parts. Okay, sir, got it. All right, so these are the specified goods and services which trigger our rule number 3. Rule number 3 is triggered by these goods and services. Rule number 3 is triggered by these goods and services. All right, sir. And now we come on to the monetary threshold. So what is the monetary threshold of getting this cost records done? The monetary threshold of getting this cost record done is 35 crores. The overall turnover of the company should be more than or equal to 35 crores. Overall turnover of the company should be more than equal to 35 crores. Only then your cost records is triggered. Overall turnover of the entire company. Should be 35 crores or more. Only then the cost records requirement is triggered. Sir, it is saying aggregate turnover of the entire company, which means the products which are not included in the cost audit and cost records, even their turnover is to be added. Yes, their turnover is also to be added. Products which are not covered under cost records and cost audit, even their turnover is to be added. Yes, absolutely. So suppose, I'll give you an example. There are three products which are being supplied by a particular company. Product X, product Y and product Z. Product X, 15 crores. Product Y, 12 crores. Product Z, 10 crores. Okay. Product X is table A. Product Y is table B. And product Z is non-specified. Product Z is non-specified. Now you have to tell me in the chat box. You have to answer my two questions. Question number 1, whether cost records are applicable or not. Question number 1, whether cost records are applicable or not. Question number 2, if yes, on what all products. You have to answer my question. मेरे सवालों का जवाब दो ना. All right, waiting for your answer. Our company is producing 3 products, product X, product Y, product Z. Product X has 15 crore turnover, product Y has 12 crore turnover, and product Z has 10 crore turnover. X and Y are specified under table A and B respectively. Z is not specified at all. Please tell whether cost records is applicable or not. Under rule 3, whether cost records is applicable or not. And if yes, for what products should the cost records be prepared? Not applicable. Cost records are not. Some students are saying cost records are not applicable. Applicable. Yes, absolutely, guys. So first of all, please understand that the cumulative of these 3 is coming out to 37 crores. So the turnover which you need to see is of all the products, which means the entire company, okay, entire company, the turnover is 37 crores. We don't only have to see the products which are covered under table A and B. No, no, no. It is written that overall turnover of the company is to be seen. Okay, overall turnover of the company, including the non-specified goods, also is to be seen. The entire turnover of the company is to be seen. Okay, so entire turnover of the company, which means all the three products, is 37 crore. So the first question, whether cost records is required to be maintained, answer is yes, cost records is required to be maintained. Yes, cost records is required to be maintained. And question number 2, whether what products are covered under the cost records, product Y and product Z are required, product X and product Y are required to be covered under the cost records. Product X and Y are required to get their cost records done. We need to prepare cost records only for X and Y. That's the answer. Yes, cost records is applicable. Very good. On X and Y. Very good answer. Okay. So overall turnover of the company is to be seen, guys. While deciding for cost records, overall turnover of the company is to be seen, and the overall turnover of this company is 37 crore, which is more than 35 crore. Cost record is required to be prepared. Cost record is required to be prepared. Now, sir, please tell us what things are to be excluded and what things are to be included in turnover. What things are to be excluded and what things are to be included in turnover definition. So guys, in turnover definition, you have to include sale, supply, trading of all the products and services. Okay, please remember the word all. All means whether covered under the records or not. All means whether covered under table A or B or not covered. Okay, so all products and services are to be included in the turnover definition. Then second is any job work charges or loan license charges. Okay, we have earned money using job work for someone else, then that is also to be included in the turnover. Export benefits like DEPB passbook, we have earned some credits of DEPB. Okay, that is also to be included. Scrap sale, if you have sold some scrap and because of that some income has been generated, that is also included in the definition of turnover. Then operating income, any other operating income is to be included in the definition of turnover while calculating the aggregate turnover of the entire company. Entire company's turnover is required to be included. What are the exclusions? What are things that are not required to be included? Duties and taxes are not required to be included. Any kind of, say GST is paid and IDC is not available on it, it is not required to be included in the turnover definition. Any other kind of duty that you have collected from your customer and that is coming in your revenue side, not included in the turnover definition. Okay. Secondly, any other income. Other income means income like financial income, non-operating income. Any income which is non-operating income, like you have earned interest on your savings bank account. You have earned interest on your any other account, or the company has earned dividends. If it has invested in shares, then it has earned dividends. So any kind of dividend is to be ignored. Any kind of financial income is to be ignored. So other income are to be ignored. Only the normal income, the business related income are to be included. Only the business related income are to be included in definition of turnover. Only the business related income are to be included in definition of turnover. Okay, that is very, very important. What is the definition of turnover? It is really important to note this aspect. Okay, sir, got it. Now, please tell me in the chat box whether it is clear how this turnover is required to be calculated and how do you specify what products are covered under cost records. Is it clear? Please comment in the comment section if you are clear about how the turnover is required to be calculated. Please comment in the comment section. Is it clear? Okay, so if all the three conditions are met, then you are required to prepare your cost records. So foreign company, now we are coming to exceptions. Okay, but before coming to exceptions, I want your nod on whether you understood these three aspects or not. X and Y only. Very good. Rohit Raj is now answering on the app. Very good. At least one student is answering on the app. Yes, very good. Perfect. Great. Very good. Yes, clear. Very good. Very good. All right. Now we come on to the exceptions of cost records. Situations where even if your monetary threshold is met, even if you are producing the specified goods, even if both the conditions are met, then also you are not required to prepare cost audit. So what are the exceptions to Rule 3? Now we're going to study the exceptions to Rule 3. There are two exceptions to Rule 3. Number one, any foreign company having a license office for product 33 in India. Any foreign company who's only having a license office in India with respect to product 33. What is product 33? That long list of products. Yes, that is 33. So if any foreign company is there who's having only a license office in India, who's supplying these goods through that license office in India, these goods through a license office, it is known as LO. Any foreign company who's supplying any of these goods using a license office in India, those are excluded from cost records, even if their turnover is above 35 crores. They are not required to get their cost records prepared. Because if a company has opened a license office in India, then the primary purpose is to publicize their products, to market their products which are used for medicinal purposes. These are all products which are used for medical purposes. Okay, so the cost records are not required to be prepared in this case. Cost records are exempt, even if the turnover is above 35 crores. Okay, so the first exception is a foreign company having a license office for product category 33 is exempt from cost records. This is the first exception. What is the second exception? Second exception is micro enterprise and small enterprise under the MSMED Act. So there's an act which is Micro, Small and Medium Enterprise Development Act 2006. According to this act, the companies are divided into micro enterprises, small enterprises and medium enterprises. So medium enterprises are not exempt from cost records, but micro enterprises and small enterprises are exempt from preparing their cost records. And yes, in the examination, the question will give you specifically that this particular company is a medium company or a micro company or a small company. Please remember, only micro and small are exempt. Medium is not exempt. Sometimes the examiner will trick you by saying that this company is a medium company under the MSMED Act, registered under the MSMED Act. This is a medium sized company. It is not exempt. Medium size is not exempt. What is exempt is micro and small. Micro and small are exempt. Medium is not exempt. That is a very, very important distinguishing factor that you need to understand. Micro enterprise, small enterprise is exempt. Medium enterprise is not exempt in this particular case. Okay, sir. Got it. So this is how the enterprises are classified and this is how the enterprises are used in an exception. Okay. So this was rule number 3 for you. The rule is not applicable to foreign companies having only license office in respect to product category 33 above, and micro enterprise and small enterprise as per the MSMED Act. And the monetary threshold is on table A as well as table B products is that overall turnover of the company from all the products or services during immediately preceding financial year is 35 crores or more. The overall turnover of the company is 35 crores or more. Now one question to you, one very tricky question to you. Okay, one very tricky question to you. A company produces two products, product X, which is table A, product Y, which is table B. Company is producing two products, product X, which is table A, product Y, which is table B, and the company might also be producing some other kind of products which are not covered under table A or B. My question to you is, please listen to the question very, very carefully. Is it possible under any circumstance that cost records are required to be prepared for product X and they are not required to be prepared for product Y? Is it possible under any circumstance that cost records are required to be produced for product X but they are not required to be produced for product Y? Is there this possibility is there? Under any circumstance, is it possible? Please tell me in the chat box that cost records are required to be prepared for product X but they are not required to be prepared for product Y. Is it possible in a same company? Can we say that table A products, please don't prepare cost records, table B products, please prepare cost records? Is it possible? Please tell me yes or no. Can there be any situation like this? Can there be any situation like this? I want to know your analysis. Can there be any situation like this? No one is answering, huh? Is it that tricky a question? Okay, Rohit has answered no. Okay. Any other answer? Any other answer? So guys, this is not possible. Either cost records will be prepared for both or cost records will not be prepared for any, because the threshold is not table wise. Threshold is for the entire company. So if cost records will be required, it will be required for both. If cost records are not required, it will not be required for both. It cannot so happen that cost records are required to be prepared for one of the product and cost records are not required to be prepared for other product, which is table A or table B product. That is not possible. Yes, in circumstance of not meeting threshold of respective table. No, there is no threshold of respective table. That's the whole point. Ajay is saying yes, in the circumstance of cost of not meeting threshold for respective table, but the catch is that respective table threshold is not there in cost record. It is there in cost audit, not in cost record. In cost record, the respective table threshold is not there. Very good answer. Very good answer. No, sir, for cost audit, this is the criteria. Very good answer. Perfect. So in case of cost records, either both will be covered under cost records or neither will be covered under cost records. There cannot be a situation where one is covered under the cost records, other is not covered under the cost record. This situation cannot so happen. Okay, sir. Got it. Let us see some FAQs which are issued by the institute. Is there any prescribed format for preparation of cost records and cost audit report? So for cost audit report, there is a format which is specified under the rules. But for cost records, there is no specific format which is being prescribed. You can prepare a cost sheet in any format. Whatever format you have studied in SCM, you can prepare a cost sheet in that format. It's just that the rules and regulations which are, which will be studying in our syllabus as well, which is cost accounting standard, they are to be followed while, drafting that cost sheet. That's it. Just remember that you have to follow the rules and regulations and follow the cost accounting standards. Otherwise, there's no format which is prescribed for cost records. But yes, there's a format which is prescribed for cost audit, which is given in CRA 3. There's a format which is given for cost audit. And turnover, we have already studied what are the inclusions and exclusions of turnover. Okay, so that covers our rule 3. Rule 3 is over. Now we come on to rule 4. And you tell me in the chat box, guys. You tell me in the chat box. You tell me in the chat box. What is the first condition of applicability of rule 4? Under what circumstances will rule 4 be applicable? The first condition. First condition, you tell me. First condition of applicability of rule 4. You tell me the first condition and I'll tell you the second one. Yes, the first condition is that, sir, rule 3 should be applicable on you. If rule 3 is not applicable on you, matter over, matter ends, no cost audit for you. So the first condition is cost records should be applicable on this particular company. If cost records is applicable on this company, only then we will, analyze whether turnover threshold is met or not. If cost records are not applicable, then we need not analyze whether turnover threshold is met or not. We straight away reject this company for cost audit. We don't conduct cost audit for this particular company. So the first and foremost requirement is rule 3 should be applicable which means cost records should be required to be prepared. Only then will we analyze the monetary threshold for cost audit. Without analyzing rule 3, we will not analyze rule 4. So rule 3, if not applicable, rule 4 entirely will not be applicable. Okay. So first condition for applicability of rule 4 is rule 3 should be applicable. Plus, monetary threshold of preceding financial year should be met. Monetary threshold should be met for the immediately preceding financial year, which is the monetary threshold which is given in this particular rule. And if both the conditions are cumulatively satisfied, then cost audit to be done for the specified products and services. Again, cost audit is required to be done for the specified goods and services only. It is not to be done for all the goods and services. Only for specified goods and services, the cost audit is required to be done. All right. First, we talk about table A products. For table A products, the monetary threshold is overall turnover of the company should be 50 crores and turnover of the products covered under rule 3 should be 25 crores. So first we analyze the cost audit requirements for table A products. Okay. First condition is that overall turnover of the company's overall turnover, which includes everything, right? Table A product, table B product, other income, other operating income, non-specified goods, everything. Overall turnover of the company should be 50 crores and turnover of the products covered under rule 3 is 25 crores. Now one very specific word which is included over here, which I have specifically written, is aggregate turnover of the products covered under rule 3. Now, moot point of consideration which is to be remembered over here is that while you calculate the turnover of the products covered under rule 3, this should be a cumulative of table A plus table B. This should be a cumulative of table A plus table B. Even when you are analyzing the applicability of cost audit on table A products, the threshold should be a total of table A and table B turnover, because the rules 3 specifies both table A and table B. This is a very big mistake which students does from an exam standpoint. They would only take the turnover of table A products in this condition. Incorrect. For fulfilling this condition, table A plus table B product, both turnover should be taken 25 crores. That is the very important point which you need to really understand. Okay. Then overall turnover of the company for category B product, overall turnover should be 100 crores. Again, this is unregulated sector, so limit is little high. This is regulated sector, limit is little low. Limit is low. Total aggregate turnover of the products covered under rule 3 should be 35 crores. So aggregate turnover of all the products covered under rule 3 should be 35 crores. That is the monetary threshold which is required to be met. If both the conditions are met cumulatively, only then we will say that cost audit can be done for product A, and then can we say that cost audit is done for product B. Now, the important point of consideration over here. Limits are different for A and B. So now, it is very much possible cost audit is to be done for product A and not B, or vice versa. It is possible that cost audit is done for A but not for B, or vice versa. Cost audit is done for B but not for A. This is very much possible because there are individual threshold limits. Now, before entering into the nitty-gritties of this section, let us do one practical question, okay? And once we do the practical question, then you will be able to understand how to apply the monetary threshold limits. Now, this is a practical question which I have extracted from the FAQs which have been released by the CMA Institute on February 2024. So, based on the FAQs, this example has been extracted, okay? All right. So, you have to fill these columns, guys. You have to fill these columns. We'll together fill these columns, and if you know the answer, you can put the answer in the chat box in advance. That will be really good. If you know the answer, please put the answer in the chat box in advance. Case 1, 2, 3, 4, 5, 6. You can just write case 1, what is the answer? Case 2, what is the answer? You can write in the chat box. Okay. Okay, sir. Case 1. Table A product, which is regulated sector, turnover is 5 crores. Table B, unregulated sector, turnover is 10 crores. Table A plus B, which means the goods which are covered under rule 3, 15 crores. Other products which are not covered under A, not covered under B, 19 crores. Total turnover of the company, 34 crores. 19 crore plus 15 crore. 19 crore plus 15 crore is equal to 34 crore. Now the question is whether cost records are applicable or not. Of course not. Cost records are applicable? No, because it is less than 35 crores. Overall turnover of the company is less than 35 crores. So cost records are not required to be prepared. Rule 3 should apply? No, rule 3 should not apply. Cost records are not required to be prepared, right? And if cost records are not required to be prepared, then of course cost audit is out of question. So I'm not even analyzing cost audit. I'm just putting a no, no. No, no. Cost audit is no, no. Okay, case 2. Product table A 5 crore, table B 10 crore, table A plus B 15 crore, other products 25 crore, which means total turnover of the company is 40 crore. So is cost records applicable? Yes, cost records is very much applicable. On which products? Both A and B. Table A products, table B products, cost records is applicable. So on both A and B, cost records are applicable. Right, that is the answer. Cost records is yes. Now we analyze cost audit. First of all, we'll analyze for table A products. What is the applicability of cost audit for table A products? First condition is for table A products, overall turnover of the company is 50 crores. So is first condition met? Answer is no. First condition is not met. Overall turnover of the company is less than 50 crore. So should I analyze the next condition? No, because one condition is not met. Cost audit is not there. I will simply write a no. I will not even analyze the second condition. I will not even analyze the second condition. I have simply written a no. Cost audit is not required to be prepared. Then for B product, for product B, whether cost audit is applicable, okay. For B, the limit is overall turnover of the company should be 100 crores or more. Sir, the overall turnover of the company is only 40 crores. So again, for B also it is a no. Again, for B also it is a no. Case 2 understood? Please write a yes in the chat box if case 2 is understood by each one of you. Case 3. Now we start case 3. Okay. Case 3. Case 3. Table A products 10 crore. Table B products 15 crore. Table A and B taken together 25 crores. Table A and B taken together 25 crore. Table A and B, rule 3 products. Okay. Other products 26 crores. 25 plus 26. Total turnover of the company 51 crores. Will cost records be applicable? Absolutely yes. Cost records will very much be applicable. Cost records will very much be applicable. Okay. Now talking about cost audit, let us first analyze product A, whether cost audit is applicable on table A product. Okay. Now, first condition is for table A, overall turnover of the company should be 50 crores or more. Is overall turnover of the company 50 crore or more? Yes, sir. Very good. Answer is yes. First condition is met. So table A, first condition is overall turnover of the company should be 50 crores or more. Yes, condition met. Second condition is aggregate turnover of products covered under rule 3. Rule 3 has table A and table B should be 25 crores or more. Let's see if this condition is met. So what is the aggregate turnover of table A and table B products? The aggregate turnover of table A and table B products is 25 crores. So yes, second condition is also met. First condition is also met. Second condition is also met. 50 crores above and 25 crores above. So will cost audit be eligible for product A? Answer is yes. Now in this part, mostly students make a mistake. Instead of looking at this turnover for the second condition, instead of looking at this turnover, they look at this turnover. This is an incorrect approach. This is an incorrect approach. Because the second limb says that aggregate turnover of products covered under rule 3, and rule 3 has both A and B and not only A. So you have to analyze the total turnover of A and B products. Rule 3, total turnover of A and B products. Please remember this thing very carefully. Although we are analyzing cost audit for product A, right? Table A product, right? But this leg will cover A and B both turnover. Aggregate of turnover of A and B, that should be more than 25 crore. Mostly students make this mistake that they take this figure while analyzing instead of this figure. This is the correct figure. Table A and B products which are covered under rule 3. Rule 3 products are these. Very critical point from an exam standpoint, very critical point from an applicability understanding standpoint. Okay. So is cost audit applicable? Yes. For Product B, table B, no, because 100 crore turnover is not met. If 100 crore turnover is not met, then of course there's no a point in analyzing the next condition for table B. Table B, cost audit is not required to be prepared. Table A, cost audit is required to be prepared. Table B, cost audit is not required to be prepared. Okay. Next, case 4. We are not producing table A product. Table A product is not being produced. Table B product, 25 crore turnover is table B product. Table A and B is 25 crore. Other products are 26 crore. So 25 plus 26 is 51. Whether cost records are required to be prepared? Yes, cost records are required to be prepared for table A, table B both. Okay. Cost records are yes, required to be prepared. Now, the next question is whether cost audit is required to be done for table A product. Let's analyze. The overall turnover of the company should be 50 crores or more for table A products audit. Is it? Yes, it is. Very much. And the next condition is that the turnover of table rule 3 products should be 25 crores or more. Is the second condition also met? Yes, the second condition is also met. So both the conditions are met for table A cost audit. But still we will write a no over here. Why sir, why sir, why? This is not fair sir. This is why sir? Both the conditions are satisfied for table A. First condition, more than 50 crore overall turnover. Second condition, turnover of table A and B products 25 crore. Both the conditions are satisfied. Then why no? Should be yes. No guys, it cannot be yes because we are not producing table A products at all. When we are not producing table A products at all, what will you do cost audit for? It's a 0. It's a 0. So we will not do cost audit for table A because table A product is not prepared. That's the catch which is there in this particular question. Okay, so this is a no, and of course for B also it's a no because 100 crores turnover is not crossed. 100 crores turnover is not crossed, so it's a no for product B also. Okay, next is case 5th. In case 5th, table A product is being produced for turnover of 20 crores. Table B product is being produced for 14 crores. So total of table A and B products is 34 crores. Okay. Total of table A and B product is 34 crore. Okay. Other product is 75 crore. 75 plus 34 is 109 crores. So first of all, is cost records applicable? Yes. I am writing yes to next also because I know that is also a yes. So cost records is a yes. 35 crore turnover is crossed. Now let's analyze product A whether cost audit is applicable or not. Number 1 condition, overall turnover of the company should be 50 crore or more. Is it crossing? Yes. Condition number 2, the table A plus B product turnover should be 25 crore or more. Is the condition applicable? Yes, very much applicable. So product A cost audit is a yes. Product A cost audit is a yes. Very good. Manisha has written a detailed answer. Very good, Manisha. Very good answer. Your answer is very detailed. Perfect. Next, table B product, whether cost audit is applicable or not. Condition number 1, overall turnover of the company should be 100 crore or more. Condition is met. And the second condition is the aggregate turnover of table A and B product should be 35 crore or more. No sir, this condition is still not met. 35 crore or more is the turnover which is table A and B combined together for table B audit. Please see this. Table B turnover products covered in rule 3 should be at least be 35 crores. Overall turnover should at least be 100 crores. So that is the monetary limit. Next is case 6. In case 6, the overall revenue is 101 crore, 20, 20, 40, 61, 101 crore. So is cost audit applicable for A? Answer is yes. Is cost audit applicable for table B product? Answer is again a yes because both the conditions are satisfied. Table A and B is 40 crore. Overall turnover is 101 crore. Both the conditions are satisfied. So it's a yes and a yes. Very, very critical analysis. Kumar Singh Visen says yes, yes, no. No, your answer is incorrect, Kumar Singh. Answer is yes, yes, yes in the last part. Case 6 is yes, yes, yes. Cost audit is applicable for both the products. Yes, that is the correct answer. Perfect, perfect. So very, very critical point to be noted over here. Very, very critical thing to be noted over here. You really need to understand that this particular limb, this is very, very critical. Students make mistake in this particular limb. So in this, rule 3 aggregate turnover is required to be calculated. Rule 3 aggregate turnover is required to be calculated, and not only the turnover of the product for which you are analyzing the cost audit. No, entire rule 3 turnover is to be calculated in this particular limit. That's the requirement. Very, very important from an exam standpoint. Now we start our next topic, and the next topic is profit reconciliation statement. Very, very important. In every attempt, yes, in every attempt, this question is coming regularly. 7 marks question coming regularly. Do as much practice as possible. Do as much questions as possible of this particular topic. In the last attempt also, there are many good adjustments which have come in from this particular topic. All your practice will enhance your capability of doing this question. This question you cannot go wrong. You cannot go wrong in this question. You cannot go wrong in this question. This question should be correct. At any cost, this question should be correct. Simple. So do as much practice as possible. Do as much questions as possible. You have plethora of ways to practice questions. You have plethora of sources for practicing this question. Please practice this question as much as you can. As much questions as you can. Okay. Simple. We have to reconcile the profits of financial profit versus costing profit. Okay. Reconciliation of profit financial books as compared to costing books. Okay. Very simple method that I have taught you in the class. Simple method that I have taught you in the class. I am using the same method. Okay. So on one of your hands, and do it with me. Come on, do it with me. Search for a sketch pen. Search for a sketch pen from your drawer. Bring a sketch pen from your drawer, and in one of the hands just write F. In one of the hands, please write F. Like this. Write F in one of the hands. In one of the hands, write F. Any one of the hands, either left or right. You write F in one of the hands, okay? And in the other hand, write C. Write C in the other hand. On the other hand, please write C. F C. F C. If you have written, please say a yes in the chat box. Please say a yes in the chat box if you have written. And using this method, you can solve any question of profit reconciliation statement. Any question. It's the most easiest method of doing the profit reconciliation statement. We'll do this question in class, and I'll demonstrate how you use this technique. It's a very simple technique. But please confirm in the chat box. Have you written F in one of your hand? Have you written C in another hand? Okay, now let's start the question, and I'll tell you how to use your hands. Okay, the financial profit of company Panwood Limited is manufacturing company for the year is 1,15,71,480. So the company has given its financial profit. Okay, financial profit is given to us. So this is what? This is financial profit. Finance books of accounts. Okay, profit and loss account. This is financial profit. During the course of cost audit, it was noticed the following. So these are the adjustments which we need to do. These are the adjustments which we need to do. You are required to prepare reconciliation statement between two accounts and work out profit as per cost account. We need to find the costing profit. Okay. So this has been given to us. Financial profit is given to us. We have to compute the costing profit. Financial profit is given to us. We have to compute the costing profit. Okay. So we will start with figure of financial profit. Profit as per financial account. We will start with that figure. 115,71408. 115,71408. This is profit as per financial accounts. We will start with figure of financial account 115,71408. Now we are going to add some things. We are going to reduce some things. Okay. Both of things are required to be adjusted. Now we'll see one by one which is to be added, which is to be reduced. We'll see that. Now, please remember the first principle of computing the reconciliation statement. The first principle is the thing which is taken as a base This freezes the thing which is taken as a base. This is variable. This changes. Okay. And the thing which we need to compute, that is cost audit. This freezes. Which means what? I'll tell you what. The profit which is taken as base is financial profit. Okay. This is the financial profit. So this is a balance. This is like a tarazu. This is a balance. We need to keep both of them equal. Whenever they are unequal, we need to shake our hands. Which one is taken as the base, that we need to increase or decrease. The other hand will remain freezed. So costing profit will remain freeze. We will not change this hand. We will only change this hand. Whatever addition subtraction needs to be done, it's done with your financial profit hand, because the base is financial profit. Now we can do changes in the financial profit itself. So we will change the financial profit hand. So this hand, financial profit, changes. Costing profit hand remains fixed. That is the principle. Okay. Let's start first adjustment. First adjustment is some discarded asset is sold off which fetched a profit of 95,000 rupees. So yes, there's a discarded assets which are sold off and they have fetched an income of 95,000 rupees. So this is an additional income according to financial accounts. This income would not have been there in the costing accounts. Costing accounts, this kind of income is not recognized. This income is never recognized in costing accounts. This is always recognized in financial accounts. Okay. So what will happen is, my financial account is more, costing account profit is less. Because the income is recognized in financial accounts, my financial account profit is more, costing account profit is less. Okay. Now there's a disbalance. So now I have to either increase the costing account profit or decrease the financial account profit. Now I've already told you, this hand cannot move. It has freezed. It is made of stone. It is freezed. This hand has freezed. What will move? Only financial account hand will move. So we are going to reduce the financial profit by that amount to equate both these things. So the treatment is less this amount. This amount will be reduced from financial profit. That is the treatment. So we are going to reduce the 95,000 rupees. So less 95,000 rupees. In examination, you cannot take 1 hour to decide whether to less or add. You have to be very quick. So this method is very quickly telling you whether to reduce or add. Okay. Okay, sir. So financial profit hand moves. Costing profit hand remains fixed. Financial profit hand moves. Okay, sir. Next. Interest was received amounting to rupees 1,05,000 from outside the business investment. Okay. So there has been some business investment. We have received interest amounting to 1,05,000 from outside the business investment. So there's some other income which has been earned to us. We have earned some income from outside the business. Obviously such income is recognized in the financial profit. It is never recognized in the costing profit. So in this case also, financial profit is more, costing profit is less. Financial profit is more, costing profit is less. Then you tell me, add or less? Less. Financial profit hand will move, less. It will be less. 1,05,000 will be reduced. $1,05,000 will be reduced. Interest received from other investment. Next. Voluntary retirement payment of 3,80,000 was not included in the cost accounts. So we have made some voluntary retirement to our employees and this payment was by mistake not recorded in the cost accounts. Again, cost expense not recorded in cost accounts, which means costing profit is more, financial profit is less. Please understand, it's in the nature of expense. Expense not recorded in cost accounts. So costing profit is more, financial profit is less. This is the situation. This is the situation. Costing profit is more, financial profit is less. Right? We need to equate it. Should I reduce the costing profit? No. Costing profit hand is freeze. It cannot be moved. So what should I do? add financial profit. We need to add this amount in financial profit. Okay, so this treatment will be add. Amount is 3,80,000. Add voluntary retirement payment. This should be added. 3,80,000. This is a very easy method, guys. You can just keep it like this, do like this. In the examination also you can do like this. It's a very easy method of ascertaining whether add or less. Okay. Do you find it easy? Please write in the chat box. Next. Some renovation work was carried out at cost of 6,20,000 and its useful life was only 5 years. Now this is a tricky one. There's an assumption also in this particular part. That assumption is also required to be, understood by you. There's a very important assumption. Okay. So this is the renovation work, capital expenditure which has taken place, 3,20,000. Its useful life was 5 years. So there's an assumption that in the financial accounts, you have written it off completely. 6,20,000 has been written off completely in the financial accounts. That's an assumption. Although it's not given in the question, but there's an implicit assumption that by mistake, in your cost accounts, you have written it off completely. Completely you have reduced from your financial accounts. However, the reduction should have been only 1/5 of the amount. So, your financial accounts are reduced. Your financial profit is reduced. Your financial profit is very less. Your costing profit is high. So, what are we going to do? Add financial profit, 4/5 of the amount. We will add financial profit, 4/5 of the amount, because the amount which was required to be reduced was only 1/5 and you have reduced entire amount. So we will add 4/5 to equate it to costing profit. So 4/5 of this 6,20,000 will be added. 4/5 of renovation expense amortized, 6,20,000 multiplied by 4 divided by 5. Next adjustment is donation of 1,20,000 towards CSR commitment was not considered in the cost accounts. So there was a donation, CSR commitment. Okay, it reduced my financial profit. Financial profit was less, but in costing account it was not undertaken. So obviously what I'm going to do is add that amount. Add this donation amount. 1,20,000 will be added. 1,20,000 added. Next, insurance claim of 18,05,000 relating to previous year received during the year. So there was an insurance claim which was for the previous year loss. It has been received during the current year. So obviously my financial profit would be more, cost accounting will be less, because in costing profit we don't consider insurance claim which is received. So financial profit is more, costing profit is less. What are we going to do? Less, reduce. Only financial hand is variable. 18,05,000. 18,05,000. Next, loss on sale of investments amount to 32,800. So there's a loss which has been incurred on sale of investments. Of course, financial profit would be less, costing profit will be high, because loss on sale of investment is always recognized only in financial profit. Financial profit is less because it's an expense. Financial profit is less. So we're going to add the financial profit. Add financial profit. 32,800. 32,800. Next, the closing inventory of raw material was undervalued 30,600 and that of finished goods was overvalued in the financial records. Very, very important. Please mark it as very, very important. Most of the students get this wrong. They are confused in this adjustment and they are not able to understand what is this adjustment and they just get it wrong. Okay. So first of all, you need to understand one very important fact. Closing stock comes on credit side of your profit and loss account and therefore it is in the nature of income. Opening stock comes on debit side of your profit and loss account and therefore it is in the nature of expense. Closing stock comes in the credit side of your profit and loss account, therefore it is in the nature of income. Opening stock comes in debit side of your profit and loss account, therefore it is in the nature of expense. Please remember this thing very, very carefully while solving this. Closing stock, income. Opening stock, expense. Remember the nature. Mug up the nature. Now let us come on to the adjustment. The closing inventory. Oh, closing means income was undervalued rupees 30,600 in the financial records. So income was less in the financial records. Income, closing raw material, was undervalued, means it was less in the financial records. Oh, income was less in the financial records, so this is the situation. Financial profit is less, costing profit is more. Income was less, undervalued, it's written undervalued. Income was less in the financial records. Tell me, add or less? Add. It will be added, right? So 30,600 will be added. Okay, in this particular question, they have done an adjustment. They have done a set off. So we can also do the set off, guys. Okay, that is also possible. You can also write both of them separately. That is also possible. Both the treatments can be done by you. Okay. Okay, so we are going to add this treatment to financial profit. This is required to be added. So 30,600 required to be added in the financial profit. We can write over here. Let's see the other adjustment. Next is the closing inventory of finished goods. The closing inventory of finished goods, again in the nature of income. Income was overvalued by 2,30,000. Again, in this case, the finished goods were overvalued by 2,30,000, which means there was an overvaluation, means income was more in financial records. So situation is this. Income was more in financial records. So situation is this. Financial profit is more, costing profit is less. This is the situation. What are we going to do? Less. This amount is required to be reduced. So this amount is required to be added and this amount is required to be reduced. If we net off both of them, then 230,700 minus 30600, the net figure comes out to 200,100. This is required to be reduced from the financial profit. We are doing set off. Okay, this amount is required to be reduced. This amount is required to be added. So net we need to reduce 20100. So we're going to set off both the adjustment and write one adjustment which is reduced over here. So in the bracket we can write 230,700 minus 30600 comes out to 200,100. 200,100. Now what you can do is add up all the negatives, add up all the positives and find the ultimate answer. Is there any other adjustment which is left? Please see that. Is there any other adjustment? Oh yes, two more adjustments are written. Two more adjustments are there. But before coming on to the next adjustment, please confirm whether inventory adjustment is clear to you or not. Could you understand the inventory adjustment or not? Because it's very, very important. Inventory adjustment is very, very important, and how to proceed with the inventory adjustment, that is also very, very important. Perfect. Very important how the inventory adjustment is to be given. And use this method, guys. Use this method. This method is very, very easy. Okay. Next is post-retirement medical grant given to 2,20,000 not considered. Again, expense in the financial account. So financial profit is less. We need to add it. 2,80,000 add. Okay. Next. Profit from retail trading activity amounting to 1,90,000. Retail trading never goes in cost audit because cost audit is only for manufacturing. Okay. So this profit is in financial records. So financial profit is more. So we need to reduce this amount. 1,90,000 reduce. Now you tell me the total of both adds and lesses. Tell me total of additions. Total of additions, please tell me. This is the total of additions. and total of subtractions. And what is the profit as per cost accounts? Perfect. This is the answer. You can write the conclusion also. As per the reconciliation statement, the cost accounting records profit is computed as rupees 10493180. You can write the ultimate conclusion also. So let's start the first cost accounting standard. First cost accounting standard is the classification of cost. So very, very important, in a cost sheet, you always classify cost into various heads like direct expenses, indirect expenses, overheads, material cost, labor cost, then research and development cost. All these costs are classified on some basis in the cost sheet. So cost sheet cannot have one cost taken together. It has got classification of cost into various subheads: interest and finance charges, depreciation, royalty and fee for technical services, labor cost, material cost, factory cost, prime cost. Now the question is how to classify cost in any cost sheet. Cost accounting standard will tell us this thing. Cost accounting standard 1 will tell us this thing. How to classify cost? What are the ways in which cost can be classified in cost sheet? Cost can be subgrouped in the cost sheet. This will be told to us by cost accounting standard 1, and therefore cost accounting standard 1 is classification of cost, where we are going to classify the cost on the basis of various parameters. Okay. All right. So okay. So let's see the definitions first. Abnormal cost. What is abnormal cost? Abnormal cost is unusual cost or atypical cost which does not usually occur. Okay, it's irregular and unexpected. You don't know when will this cost get incurred. You don't know that. Okay, it's irregular and unexpected. That is abnormal cost. What is administrative overheads? Administrative overheads relating to general management and administration of a particular company. Two words are very, very important. Please highlight over here. General management of the company and administration, both of them are covered under administrative overheads, and administrative overheads shall include production overheads, marketing overheads and interest and finance costs. So administrative overhead does not include production overheads, does not include marketing overheads, but administrative overhead do not include administration costs related to production, factory works or manufacturing. So administrative overhead also does not include the administration cost at the factory. So if there's an administration work which is going at the factory, it's production cost and not administrative overhead. Administrative overhead usually is only considered for the head office, not the factory. If in factory you are considering some administrative overheads, then they are also related to production only. Then what are the classification of cost? First of all, let's talk about some typical classifications. So bonus to manufacturing staff. When you give bonus to manufacturing staff, it is an employee cost. So the classification can be done by two methods. You can classify your cost on the basis of nature. Nature means what kind of cost is it, or purpose, which means for what department is this cost being incurred. What is the purpose of this cost? For what department is this cost incurred? That is, the second is purpose. First is nature, second is purpose. So nature of the cost is this is an employee cost, and employees are really incurring this cost. The organization is incurring the cost on behalf of the employees. So this is an employee cost. Okay. So this is an employee cost. But if you look at the classification on the basis of purpose, the purpose is production. So it will go under cost of production. Okay. Similarly, selling staff, employee bonus given to selling staff, it's employee cost if you talk about nature. If you talk about purpose, then it's a selling cost. Then you talk about quality control staff, it's an employee cost on the basis of nature. It is cost of quality control on the basis of purpose. So it depends on what is the cost. It will vary according to nature as well as purpose. So cost accounting standards allows us to classify the cost on both the bases, either on nature or on purpose. It's up to you. You can choose either one of the two methods. Either you can choose, on the basis of nature, you can classify your cost, or you can classify your cost on the basis of purpose. Both are acceptable according to the cost accounting standards. Then what is cost of production? Cost of material, direct employee, direct expenses, production overheads. Again, cost sheet, entire cost sheet element, that is the cost of production, and you are already aware about it. Entire cost sheet elements which are there, these are the cost of production. Okay, entire cost sheet elements. Then cost units. What are cost units? Cost units are the measurements according to which a particular cost is, a particular thing is measured. For example, cloth is measured using inches or yards or meters, but the liquids are measured according to liters. Solid is measured according to kgs. So it depends what kind of thing are you measuring. According to the kind of measurement that you are doing, according to that your measurement changes. So measurement changes according to the product that you are actually measuring. So you are measuring milk, a different cost unit is to be used. If you are measuring some solid, then different cost unit can be used. So different cost unit for different things. So automobile, the cost unit will be in numbers. Okay, you will calculate cost of the automobiles using number. Cable, rope, road construction, meters or kilometers. Iron, steel, sugar, cement, tons. Chemicals, liter, kilogram, ton. Gas or casting, cubic meter. Metal plating, fabric printing, square meter. Nuts and bolts, grooves, back of standard weight. Power, kilowatt hour. So there are different units according to which your cost is always measured. Cost is obviously measured on the basis of rupees, but units, cost units are measured on the basis of these units. That's how. Okay. Now here we have some basis of classification which you can use in your business. These are basis of classification that you can use in your business. Most of the companies use this basis. Most of the companies use the classification on the basis of nature of expense. Material, labor, overhead, factory cost, administrative cost, selling and distribution cost, so on and so forth. On the basis of nature, the company constructs their cost sheet. On the basis of nature, what kind of expense is it? So this is the usual way in which the cost can be classified in your cost sheet, and you must have prepared tens of hundreds of cost sheet in your SCM paper, of course, and you must have used these measurements only. So this is the most popular way of drafting cost sheet and classifying your cost. Okay, but there are other methods too which you can use. Direct expenses, indirect expenses, okay, which are directly attributable to production, which are not directly attributable to production. Direct and indirect expenses. On the basis of functions also you can classify your cost. Like production cost different, administration different, selling different, distribution, research, development different. On the basis of behavior also you can classify your cost. Fixed cost, variable cost, semi-variable cost. Okay, so there are various ways of classifying cost. You can choose any one of the ways which are given in the cost accounting standard. Cost accounting standard is open. You can you can choose any of the way in classify your cost. The only ask is that cost of operations, cost of cost of per unit cost of production, and margin should be you are able to compute. That is the only ask. Okay, so there are various ways in which expenses can be classified. These are all the ways in which expenses can be classified. So you can read through all these ways in which expenses can be classified. Again, theoretically not very important, guys, because theoretically the examiner is not going to ask you all these classifications, but yes, you should read all of them. Reading is very, very important. Reading these types of classification, and what do you mean by, say, process cost, batch cost, variable cost, fixed cost. One-liner definition should be remembered. One-liner definition should be remembered of each of the classification of cost. Okay, so got it. Now there are some presentation requirements with respect to this CAS. So whenever you are classifying your cost according to one of the bases, you please first of all, the cost should be done on basis of relevant classification. So the classification should be done on the basis of your industry, whichever is relevant to your industry. So you choose your industry. So if you are into construction sector, then of course you are going to choose the contract costing. Okay, so depending upon what is relevant to your industry, you can choose a classification on that basis. Classification of cost items should be followed consistently from period to period. So the basis should be consistent over the period of time. The basis should be consistent. Okay. Then there are some disclosure requirement with respect to cost. The change in classification should be made only if it is required by law. So you cannot change the classification every year. Okay, you cannot say that, oh, last year I chose nature as the basis of my classification. Next year I will choose purpose as the basis of my classification. No, this cannot happen. Your basis of classification should be same for each of the year, unless and until it is required by law. If law says that don't use nature as the basis of your classification, then only you can change your principle. Principle once adopted should be adopted forever. Then if it is required by cost accounting standard itself says that do not use purpose as the basis of your classification, then also you can not use that particular mode. Then change would result in more appropriate presentation or preparation of cost statements. If you are 100% sure and you can convince the cost auditors also that if I change my way of classification, as per my industry, this is a better way. If you can convince that, if you have convincing evidence, proof that yes, if I change my way of calculating my cost or classifying my cost, it will improve my cost accounting statements, then you can do it. Okay. So either of the three conditions should be satisfied to change any classification. But otherwise, the change should be absolutely, the change should be not done in usual circumstance, because we don't want that in one year you choose one way of classifying your cost and next year you choose another way of classifying cost. This will be utter confusion. So that is not accepted. Then second is any change in classification of cost which has material effect on cost of product. So, whenever there's a change in classifications, for example, during 2025-26, you are using nature as the way of classifying your cost. And in the year 2026-27, you use purpose as the way of classifying cost. So you change your basis of classification. Okay. And of course, any one of the three reasons you already have. Okay, perfect. Now, CAS is saying that, due to this change, whatever is the monetary impact on the profit, you need to disclose it. Which means that by adopting the new cost accounting principle, by adopting the new method of classification of cost, what is the change in profit that you are expecting? What is the change in costing profit that you are expecting? Had you chosen the earlier way, now you are choosing a different way. Okay. So what is the change in profit? You disclose it to your users so that users are aware that this change in profit is due to the change in method and not the real profit. Okay. So you have to disclose wherever there is a change in classification of cost which has material effect on the cost of product. It should be disclosed in the cost statements. Where effect of such change is not ascertainable, you should disclose it also. Where you say that no sir, I am not able to estimate the change, the profitability change, I am not able to ascertain the change, then guys, in that case you have to state this fact that I am not able to actually assess the change. The change is not assessable by me. Yes. Alright, if you have any queries, you can drop in the chat box. And yes, guys, please do hit a like button while the live is going on. Please hit the like button and give me some hearts and emojis, etc., etc. Okay, just to inform you, yesterday's class was conducted in the app. Today's class is being conducted on YouTube Live. Yesterday's class was conducted on app, and the future classes will also be conducted on app. So please get yourself registered in the WhatsApp group, and the WhatsApp group is 9643929913. And the students who are not watching it live, students who have taken the batch afterwards, you need not worry. You need not get yourself added to any batch. The PDF of the notes are already there in your app. You will get the PDF notes in the app. Okay. Okay, sir, got it. All right. So yes, a very, very important question that comes in the examination, guys. Computation of abnormal cost. How do you compute the abnormal cost? That computation, a practical question, comes in the examination. So now we are going to start that. Okay, so what is the computation way of computation of abnormal cost? There was a strike from 13th September 2024 to 16th November 2024 in a company of which you were the cost auditor for the year ending 31st March 2025. Although the company began working from 17th November 2024, production could effectively begin only from 5th December 2024. The expenses incurred during the year ended 31st March 2025 were these. So these are the total expenses which are given to you for this particular company. Detailed examination of records reveal that of the above, following relate to period from 13 September 24 to 16 November 24, which is the strike period. So during the strike period, there is some expense which has been incurred, and these are those expenses. Calculate the amount which in your opinion should be treated as abnormal for exclusion from the product cost. You need to calculate the abnormal cost in this particular case. Okay. So this is a very typical question that comes in the examination, guys. And for solving this question, you first should make a line chart denoting what activities have happened during what tenure, at what time what activities have happened. So just prepare a line chart. Okay, in this question a line chart is mandatory. So this is a line chart which you have to prepare in such questions always. Please prepare this line chart and denote all the activities which have happened during the year in this line chart. Okay, one question is coming on the YouTube. Can you please help me understand imputed cost? Okay, imputed cost is actually, the cost which is a notional cost, and no outflow has happened because of this imputed cost. I'll give you an example. Okay, now this studio which I have created for my business, this is actually created inside my home. If I would have taken this studio on rent, I would have paid 10,000 rupees cost extra, which I am saving right now. So this 10,000 rupees, which would have been spent by me if I did not have this space in my home, this is known as imputed cost or notional cost. This is actually not a cost, but it might sometimes be used in decision making. It's not used in cost accounting, but it might sometimes be used in decision making. This is known as the imputed cost. Rekha Bua. Yes. So inter students might know that this is Rekha Bua. Samay Rekha banao. Samay Rekha. Yes, this is Rekha Bua. Inter students know about Rekha Bua and the story behind Rekha Bua, right? All right. So when did the strike occur? When did the strike occur? 13th September 24 to 16th November 24. To 16th November 24. Okay. Then from 17th November to 5th December, the production could effectively start. So 4 December 2024. Okay. So this is the abnormal strike period. This is the abnormal non-strike period. This is the normal period. This is the normal period. So this is period A, period B, period C and period D. These are the 4 periods which we are talking about. Okay. Strike happened during 13th September to 16th November. Although strike ended on 16th November, but from 17th November to 4th December, production was off. Production was not there during 17th November to 14th December. Production was not concluded. Production did not take place. Okay. So there are 2 abnormal periods. The abnormal periods are, in this question, the abnormal periods are A, B plus C. Abnormal periods are B plus C. B and C are abnormal periods in this particular question. Okay. So what we need to find out is the cost which has been incurred during these 2 periods. That cost will be termed as abnormal cost. So we need to find the cost which is for period B. We need to find out cost which is for period C. That is the ask. Okay. Now, fortunately, question has already given us the cost which has been incurred during period B. Wow, very good. Perfect. Already the cost which has been incurred during period B has been given to us by the question. So we are happy. Half the answer is already solved by the examiner itself. Okay. So computation of abnormal cost of the company, expenses incurred in period B. These are the total expenses which have been incurred in period B. 70 plus 60 plus 90 comes out to 220. Comes out to 220. So period B cost is already given to us. We are happy. Half the question is already solved by the question itself. Now the ask is, we need to compute the expense incurred during period C. If we compute this expense, then we get the total abnormal cost. So for computing the period C cost, we will use working note number 1. Working note number 1 will help us to calculate the expenses incurred during period C. That is the biggest challenge in front of all of us now. Okay, that is the biggest challenge. Okay, now question has not given us the expense which has been incurred during period C, but the question has given us the expense which has been incurred for the entire period. We have got the total expense. Total expense is already given to us. What is the total cost? This is the total cost. So what is the total of all these expenses? Let's do it. Let's do the total of all these expenses, guys. So this is 300 plus 200, 500, 500 plus 300, 800, 800 plus 240, 1040 is the total cost which has been incurred during the entire year. So, okay. So out of this, we need to compute the cost which has been incurred during period C. So 1040, cost which has been incurred for entire period A plus B plus C plus D. We need to find the cost which has been incurred during period C out of this total cost. Okay, that is the ask. Okay, sir, got it. Now, let us see how can we compute. So what is the total expense incurred during the entire period? It is 1040. 1040 has been incurred during the entire period. Okay. Now, we already have the cost which has been incurred for period C. Let us remove that cost. That is to be completely removed. Okay. 220 we remove the cost which has been incurred for period B. 220 has been removed. Okay. Okay, sir. Now, we also analyze these costs. Okay. These are the various costs. Now, during period C, I am focusing on the power variable cost, which is power. Okay. Now, you tell me in the chat box, whether during period C, power expenses would have incurred or not. Power expenses would have incurred or not. Please tell me in the chat box during period C, whether power expenses have been incurred, because power expenses, guys, are primarily related to machinery. When a machinery works, then power is consumed. Please don't get bothered about those small power which is used in electricity, fan, AC. This is very minuscule. This is very small. Power means power which is used in factory for running the machinery. Heavy machineries are there. Their heavy power is, incurred. So do you think that this power expense would have been incurred in period C? Will this power expense would have been incurred in period C? Do you think that? Answer is no. Very good answer. Very good answer. Power expense would not have been incurred in period C. So what I'm going to do is, I'm going to reduce 120 rupees from my, power. 120 lakh rupees will not have been incurred during period C. I need to compute the cost which has been incurred during period C. Period C is the main focus for me as of now. Power would not have been incurred in period C. Okay, got it. Okay, so this is power 120 lakhs. Now, there's another variable cost, guys. There's another variable cost. What is that variable cost? Salaries and wages direct. This is also variable cost. Guys, this is also variable cost. Now, please tell me in the chat box whether these salaries and wages, direct salaries and wages, would have been incurred during period C or not. Please tell me in the chat box whether direct wages would have been incurred in period C or not. Please tell me in the chat box. Direct wages and salaries, whether this would have been incurred in the period C or not. Direct wages and salaries. Proportionate deduction, sir. Okay. So many of you might say, no, sir. Direct wages would not have been incurred. Why? Because production was not on. Guys, so what? Even if production was not on, but strike was over. This is the non-strike period. During this period, the strike was over. So even the daily wage workers who are back on work, whether they perform work or not, they will be eligible for salaries, direct wages. They will be eligible for it. So this expense would have been incurred in period C also, guys. Please note. Many students get confused. Sir, this is variable. So period C, we don't have to calculate because this is variable. They would not have charged salaries during period C. Guys, they would not have charged salary during period B. That is true because that was the strike period. So salaries direct would not have been given to our workers. That is for sure. But during period C, they have joined back their business. They have joined back work. So they are eligible for salaries. They will be given salaries. So I'm not going to reduce the direct wages. I'm not going to reduce the direct wages because direct wages would have been incurred during period C. In period C, this wage has been given to the employees. So I will not reduce that. Okay. Now this is the total expenses incurred during period A plus C plus D. I have removed the B, portion. B means the strike period. I have removed that. So A plus C plus D. What is the total cost which has been incurred during A plus B plus A plus C plus D? So let's calculate that. This comes out to 700 lakhs. So total expenses which have been incurred in A plus C plus D. Total expenses which have been incurred in A plus C plus D comes out to 700 lakhs. Comes out to 700 lakhs. So total expense comes out to 700 lakhs. Now I have to split this expense into only period C. What will be the expense which is incurred only in period C? What I'm going to do is I'm going to proportionate it, prorate it on the basis of number of days which are there in period C. Number of days which are there in period C. Okay. So number of days which are total in period A plus C plus D is 300. What is the 65 days? 65 days is period B. We have reduced period B number of days. Okay. This is period B number of days. 65 days is period B number of days. We have reduced 65 from 365. 365 is the total number of days. Okay. 65 is the days on period B. So now this is the number of days for period A, C and D. Now number of days in period C. Number of days in period C. What is the total number of days which are there in period C? Period C we have. Period C starts from 16th of November till 4th of December. Starts from 17th of November till 4th of December. 14 plus 4, 8, 18. So C period number of days is 18. Okay. So what are we going to do? 700 divide by 300 multiply by 18. 700 divided by 300 multiply by 18. Okay. Yes. So this actually should be 64. Period B number of days should be 64. Please change the period of days. 1 day is coming excess. Okay. So period of days is 64. So you can write 64 over here. So this becomes 301. And then you make your computation. Then you calculate the answer. Answer comes out to be 42 lakhs. Answer comes out to be 42 lakhs. So 42 lakhs is the expenditure that has been incurred during period C. So total expenditure, total abnormal cost which has been computed is 262 lakhs. What is the total abnormal cost? Total abnormal cost is 262 lakhs. So you can also write the conclusion. Hence, the total abnormal cost excluded from cost of production is computed as rupees 262 lakhs. So yes, this is an important question from an exam standpoint. Also, this kind of questions recur in the examination. So you have to really do them well. Okay, sir, got it. Now, illustration number 2. Okay, illustration number 2. You are the cost auditor of ABC Textiles Mills Limited for the year ended 31st March 2022. The company had strike from 15th August 21 to 18th November 21. Again, this question is related to strike. There is an abnormal strike period which has been incurred. Okay, there is an abnormal strike period which has been incurred. Although the company resumed working on 19th of November, normal production was achieved only from 8th December 2021. The expense incurred during the year ended is given to you. This is the total expense which has been incurred. This is the total expense which has been incurred during the year. Okay. And this is the period B expense. This is the period B expense which has been incurred. What is the ask? Ask is the calculate the amount in which your opinion should be treated as abnormal for exclusion from the product cost. You have to compute the abnormal cost. Okay. Same data given in a little difficult manner. Okay. That's it. So I'm going to change my my chart. I'm going to just change the dates of the chart. Rest everything remains the same. Only the dates are going to change for me. So I can employ this shortcut, guys, but you cannot employ this shortcut. Okay, you cannot employ this shortcut. You don't employ this shortcut. I have this liberty of using this shortcut. 21-22 is the year. 21. 22. 21-22 is the year. Okay. And when did the strike start? When did the strike start? Strike started on 15th August 2021. August 2021. 18th November 2021. And the normal production could be achieved from 18th December, which means this continued till 7th of December 2021. 7th of December 2021. Okay, 41.86. Yes. So your answer can be a little in numbers also. And yes guys, even in this particular part, no, although there's a very slight difference, but yes, you can in this part also take 65 itself, because 13 is included, 13 September is included in the calculation. You should include 13 September. Okay, so you can take 65 days only, and 300 days you can take for your calculation. Minor difference will be appearing in the answer, because 13 September is including. Okay, we have to include 13 September. That's right. Your answer is also right. Okay. Okay, so now let us see what are the figures which are given for this particular question. Again, we need to compute the total expenditure. So for computing the total expenditure, period B expenditure is already given to us. Okay, period B expenditure. This is the period B expenditure. So we are going to take the period B expenditure as it is. This is the expenditure which has been incurred during period B. Okay, so 1280 is the expenditure which is incurred during period B. We will take this as it is. 1280, we will take it as it is. And for period A, we are going to calculate in working note number 1. Period C. Okay, period C we are going to calculate same way in which we have done in our earlier on the earlier question. This is working note number 1, guys. Okay, so we'll start with the total expenses. What are the total expenses which have been incurred during the entire periods? 5780. 5780 are the total expenses which have been incurred during the entire year. Okay, out of this we have to exclude the power variable cost. Variable cost is 500. 80% of 500 is 400. So 400 we are going to reduce. 400. 500 multiplied by 80% we are going to reduce. Then variable repair and maintenance cost. Repair and maintenance cost variable 70% of 580. 70% of 580. Okay, so this comes out to 406. $580 multiplied by, and yes, we are going to reduce the period B expenses also. Period B expenses we are going to reduce. What is that? 1280. 1280 is the period B expenses that we are going to reduce as it is. Okay. So what is the net expense? This is 3694 and the total is 4974. 4974. Fixed expense and fixed expense during non-strike period. This is the fixed expense during non-strike period. Okay, so this is the total expense which has been incurred during the period A plus C plus D. This is the total expense which have been incurred during period A plus C plus D. Now we are going to do the calculation of dividing this in the strike period and the non-strike period. So the strike period was 96 days, 15th August to 18th November. The non-strike period is 269 days. Hence the fixed expenses attributable to 19 days, that is this particular period C, is 19 divided by 269 of 3694. So 3694 multiplied by 19 divided by 269. Same process that we employed in our last question. So this comes out to 261 lakhs. Okay, this comes out to 261 lakhs. This comes out to 261 lakhs. So what is the total amount of abnormal cost? $1,541 lakhs. Total amount of abnormal cost is 1,541 lakhs. What is the total amount of abnormal cost? 1,541 lakhs. So this is how questions are going to come in the examination, and this is how the abnormal cost computation will be done. So it's an important question from the exam standpoint. 1541 lakhs. And yes, I've given plethora of practice questions for all of you. Please practice these questions well on a piece of paper, in writing, okay, in writing, because these are important from an exam standpoint. All of them are important from an exam standpoint. So please practice them well. It's really important for you to practice these questions well. Many practical questions I've given at the back side. All right, so let's start the next cost accounting standard, and the next cost accounting standard is capacity determination. Next cost accounting standard is capacity determination. If you've been able to understand cost accounting standard 2, cost accounting standard 1, please write yes in the chat box. If you are able to understand cost accounting standard 1, please write yes in the chat box if you have been able to understand it well. Yes, yes. It's really important, guys, from a practical standpoint especially. It's very, very important. So please do it well. All right, let's start cost accounting standard 2, capacity determination. Capacity determination actually determines the capacity on the basis of okay. So capacity determination determines the production capacity of any business. How well is a business willing to get its production done, how well the business is producing its utilizing its resources to produce well, because last thing that we want is that we have a plant which can produce 1 lakh units per year, but we are producing only 60,000 per year. We are wasting our capacity. We are wasting our capacity. We don't want our capacity to be wasted. We don't want our capacity to be, unutilized, remain unutilized, or it go waste. We don't want that. And if we don't want that, we want a capacity to be absolutely perfect. We want to disclose it in our cost audit report. Also, in our cost statements, we need to disclose this fact that what is our capacity and how much capacity are we utilizing on a regular basis, so that our shareholders are aware that yes, this much capacity is idle. Because guys, sometimes what happens is the stakeholders don't even know that we have this amount of excess capacity. Shareholders also don't know. Okay, sometimes this happens a lot. So the capacity determination CAS will tell us that yes, this is the capacity that we are aiming at. This is the capacity that we are actually attaining in our working, and we need to disclose all the surrounding capacities which are to be disclosed to the stakeholders. Stakeholders should know that this is our capacity and this is our actual production, and what is the reason why we are not able to perform well. This reason should also be very clear to the stakeholders. So yes, next CAS is capacity determination, which is the father CAS. So this is the basis of costing. Costing is really based on this foundation of capacity, because if capacity is not utilized well, then costing goes for a haywire. It goes for absolute chaos, because capacity determination is the first element which we need to really control to attain maximum costing profit. So yes, it's called the father CAS. So what is the installed capacity? Installed capacity is the maximum capacity of producing the goods or services. So assume that the factory is working for 24/7 and for entire year, 365 days. Then what is the capacity? It's unrealistic. Okay, it's unrealistic because worker needs rest, worker needs holidays off, plus the gazetted holidays are there. Okay, Gandhi Jayanti, Independence Day, Republic Day is there. So that off is there. But assuming nothing is there, no off is there, what is the installed capacity? How much is the capacity able to produce under a circumstance that it works for 365 days a year, 24/7 non-stop our machinery is working? What is the capacity then? That is known as installed capacity. But is it practical to achieve installed capacity? Answer is no. So the second capacity that we need to determine is practical capacity. What is achievable capacity? What is that thing that we are able to achieve, which is after reducing the normal lost days, like the holidays are excluded from it, gazetted holidays are excluded from it, normal loss is excluded from it, any normal like breaks are excluded from it. The worker needs 1 hour break for lunch, right? For snacks, it needs 15 minutes break. So those break times are avoided, they are excluded. What is the capacity then? That is the practical capacity. And next is the normal capacity. Normal capacity means what have been able to achieve over a period of time under normal circumstances. Normally, what is the expected capacity that we have been able to achieve over the past years? That is the normal capacity. And the actual capacity is the capacity which we have obtained during the year. During the year, what have been able to obtain? That is the actual capacity. So in a question that will be asked from this particular cost accounting standard, you will be required to compute all these capacities. Computation is required to be done for all these capacities. That is what this cost accounting standard will ask you. Okay. Theory is rare, theory you won't encounter from this cost accounting standard, but yes, practical question you will be encountered. Okay, I'll explain you this chart during my deliberation in the question itself. Okay, so let's start the question, and in the question itself, I'll tell you about these formulas and how are they to be applied. I'll tell you all of them. So illustration number 1, calculate the installed capacity, available capacity, normal capacity, actual capacity from the following data and as per CAS 2. As per CAS 2, you have to find out the capacities using the data which is given over here. Manufacturer specification. So manufacturer is telling you that capacity per hour is 500. So if the machinery is run for the entire year, then 500 units per hour is the capacity which can be achieved. Number of shift. Each shift is 8 hours. So 3 shifts are required to be undertaken. So we need to work during 3 shifts, and 8 hours per shift is the the standard hours that we need to work. Holidays in a year. Sundays, there are 52 Sundays. Sundays are non-working. Then other holidays like gazetted holidays are 14. Annual maintenance is done within 14 days. So annual maintenance, you need not spend anything extra. Within these gazetted holidays only annual maintenance is done. Preventive weekly maintenance for machine on Sunday. Normal idle capacity for the batch changeover, lunch, personal needs is 1 hour per shift. That is the idle capacity which is for normal reasons. Okay, eating food, lunch, personal needs, 1 hour is given per shift. Production based on sales expectancy in past 5 years. So this is the production for last 5 years. Last 5 years we have been able to obtain all these numbers. Okay. Now you can observe from these numbers, one is abnormally low, one is abnormally low, and one is abnormally high. So in the examination also you will be able to clearly decipher that yes, one number is abnormally low and one number is abnormally high, and you can treat it accordingly. We'll treat it accordingly. We'll see how we'll treat it. Actual production during the year is 34.13 lakhs. This is the actual capacity which we have obtained during the year. So now the ask is that you have to compute all the capacities: installed capacity, practical achievable capacity, normal capacity, actual capacity, all the capacities you have to compute. Okay. So how are we going to compute it? First of all, the installed capacity. It is the capacity which is utilized if no Sundays are there, no holidays are there, and we take no breaks. This is a hypothetical capacity. Installed capacity is a hypothetical capacity. Yes, sir. So what will be the installed capacity in this case? So 365 days you are working non-stop. Okay. How many shifts? How many shifts? 3 shifts. 3 shifts are being employed. Each shift is of 8 hours. And in 1 hour, how many products? 500 units are produced in 1 hour. So 500. This is the calculation of installed capacity. This is the calculation of installed capacity, where we are not reducing the abnormal loss, normal loss. We are not reducing anything. 365 days we are working for 3 shifts, and in 1 hour we are producing 500 units. Okay. 43,80,000 units. This is the installed capacity. Next is, what is the practical capacity? Practical capacity will exclude all the normal, reasons for our capacity being reduced, like Sundays, holidays. We are not going to work on Sundays and holidays. Okay. So practical capacity, for computing practical capacity, I'm going to reduce from 365 days. First of all, I'm going to reduce all the Sundays. Sundays is 52. Okay. Sundays is 52. Then I'm also going to reduce the leaves, the offs, the holidays. 52 Sundays are there. Other holidays are 14. 14 are other holidays. Again, number of shift is 3. Hours, 1 hour is lost due to personal needs. Due to personal needs, 1 hour is lost. So I'm going to reduce 1 hour for the personal needs. So minus 1, 8 minus 1. And how many number of units? 500 number of units. 500 units will be produced. Now what is the capacity? What is the practical capacity? Please tell in the chat box. What is the practical capacity? $31,51,000 units. This is the practical capacity. Now we need to compute the normal capacity. And normal capacity is to be computed by ignoring the abnormal years. We'll ignore the abnormal years. We will ignore the abnormal years. 1 year is extremely high, other year is extremely low. So we'll ignore the high and the low year. And we'll also write down a note about it. Okay. Ignoring the abnormal years. Which years are we ignoring? Year in which 38.5 lakh units are produced and the year in which 28.30 lakh units are produced. These are abnormal years. Apart from this, we are going to average the rest of the three. Rest three are 32.48 plus 35.45 plus 36.14 divided by 3. 32.48 plus 35.45 plus 36.14 divided by 3. This is the calculation for the normal capacity. Okay, the answer is 90 lakh units. So I hope you are able to understand how to compute these capacities. Installed capacity, take full full account of how many days are there in a year, how many units can be produced per year, how many shifts are there. Take everything. For practical capacity, don't take the normal normal blockages, normal stopovers like Sundays, ignore holidays, ignore those normal things. Then normal capacity is average of past few years capacity. That is normal capacity. Okay. Then you have actual capacity. Actual capacity is already given in the question. Actual production for the year is 34.13 lakhs. 34.13 lakhs. No. I think this 90 lakh is erroneous. This 90 lakh is an error. Let me recalculate. 90 lakhs is an error. How can it be 90 lakhs? $35.45 plus 36.14 divided by 3. It is coming out to be 34.69 lakhs. 34.69 lakhs. This is not 90 lakhs. This is 34.69 lakh unit as the capacity, a normal capacity. 34.69 lakhs. Please check, guys. Please check the answers. Simultaneously, you please check the answers also. Okay. So this is the actual capacity. Now the question is, what is the actual capacity utilization? How much of the actual capacity have we utilized? So actual capacity divided by the installed capacity. Installed capacity is 43.8 lakh units. Guys, there is error in this calculation also. Why are you telling me wrong answers, guys? There's a calculation in this. There's an error in this calculation also. Please recheck the calculation before giving it to me. This is 31.39 lakh units. 31.39 lakh units is the answer. Answer to the practical capacity is 31.39 lakh units. Let me recalculate once again. Please recheck the answers before giving it to me. 365 minus 52 minus 14. 299 multiplied by 3 multiplied by 7 multiplied by 500 units. 31.39 lakh is the practical capacity. 31.39 lakhs. Normal capacity is 4.69 lakhs. And this is the actual capacity utilization. Okay. Now what is the actual capacity utilization? Please calculate and tell me. 34.13 divided by 43.8. This comes out to approximately 78%. This comes out to approximately 78%. 78% is the actual capacity utilization. 78% is the actual capacity utilization. So that is how we are going to answer these practical question relating to CAS 2. All right, presentation and disclosure. What are the things that we need to present in our cost sheet relating to capacity determination? We need to disclose the installed capacity, the normal capacity and the actual production. Then we need to disclose the actual capacity utilization. What is the utilization that we have achieved during the year? Then basis of arriving at capacity. Any variables or assumptions that are used for arriving at the capacity. Any variables or assumptions that are used that we need to disclose. Changes in installed capacity and normal capacity. What are the changes in installed capacity you need to disclose? In case machineries are taken on lease and there's additional capacity because of leasing of machinery, that also needs to be disclosed. Just hold on, guys.
ये भी जाएगा नीचे।
Okay, then in case of low capacity utilization, wherever the capacity utilization is low, then installed capacity, controllable, uncontrollable reasons should be analyzed and disclosed. In case of excess capacity utilization, in case you find that you are overutilizing your capacity, then the same should be disclosed in absolute terms, in terms of percentage as well. You need to disclose how much excess capacity are you utilizing. Abnormal cost due to underutilization of capacity also you should disclose. This is an abnormal cost which we are incurring because of low capacity utilization, because low capacity utilization will definitely result into a loss for the company. Company will be at a loss if you are utilizing your capacity in a shorter way, in a lesser way. If you are utilizing your capacity, then you will incur a loss. Yes, very good answer. Perfect answer by Manisha. Very good, Manisha. Perfect answer by Manisha. The Nidhi Gupta has told me all the wrong answers, no? Okay. All right. So this was cost accounting standard 2. Please practice it well. Plethora of practice questions that I've given you. Theory questions also I've given you in the in the practice section. Please practice all the questions well, because it's going to be a important case from an exam standpoint. Now we turn up to our demon case. Okay, cost accounting standard 4. This is the demon case or the Rakshas case, because this case is directly related to your revenue. Yes, taxes. This is directly related to your taxes. So guys, you are studying GST also in your group 4, right? So in GST, if you turn to chapter value of supply, valuation, value of supply, then you would realize that for valuing our supplies, we have different kind of methods. We have different kind of ways in which we value our supplies. Rule 27, 28, 29, 30 and 31. Okay. Now, rule 30 that we have for valuing our valuing our supply is that if rule 27 is not applicable to you, 28 is not applicable, 29 is not applicable, then you turn to rule 30. And rule 30 says your value of supply should be 110% of the cost of production. It's a very simple rule. Okay. It says 110% of the cost of production should be your value of supply. Rule 30 says this. Okay. Now the question is, so how do you compute cost of production? Rule 30 says 110% of the cost of production should be value of supply. That's perfect. But how to calculate the cost of production? So this calculation of cost of production is given to you by CAS 4. And that is the reason why I tell you that CAS 4 is a demon CAS, because it is going to extract money out of business. If you do any hanky-panky stuff in CAS 4, then it is directly going to affect your GST. It is directly going to affect your indirect taxes. So you have to be very careful while following the principles of CAS 4, that you don't mess up with any of the provisions of CAS 4. CAS 4 provision should be absolutely accurately followed by you. CAS 4 provision should be absolutely clearly followed by you. So it's really important to enumerate the principles which are given in CAS 4. It's really important for you to do that. Okay. So CAS 4, the provisions which are given in CAS 4 are to be enunciated over here. And cost of production, the cost of production should be analyzed or should be computed using the elements which are given in CAS 4. Cost of production should be computed using the using these principles. So it says that cost accounting standard 4 says that the cost of purchase or acquisition shall be computed using purchase price, import duties, net of trade, discount, rebate, refundable taxes, transportation, handling, storage, and any other cost attributable to acquisition of goods or services. Cost of production should be material consumed, direct wages, direct expenses, overheads, quality control, research development, packing, administrative overhead relating to production. Very important. Only the administrative overhead relating to production should be included while computing the cost of production. Then cost of provision of services, if you are providing any services, again all the expenses should be added while computing the provision for services. Okay. Then there are certain principles of measurement, like abnormal cost should not be included while computing the cost of production. Obviously abnormal cost is always excluded while computing the production cost. So abnormal cost must not be used. Then we have interest and other finance cost shall not be used. Interest cost and finance cost, which are the costs which are related to loans, advances, or any kind of business liabilities, they are to be excluded. Impairment loss on assets. So if you have incurred any impairment loss, which means your value of asset has suddenly declined as compared to the market value, then there is an impairment loss, okay, as per accounting standards. So that impairment loss is to be ignored while calculating the cost of production. Imputed cost, that is the notional cost, that shall also not form part of your cost of production. And generally guys, costing principles do not envisage including notional cost in your cost figures. According to us, notional cost is absolutely a figure with a cost which is absolutely not really a cost for us according to costing standards. Then subsidy, grant or incentive which are received, that shall be deducted while ascertaining the cost of production, shall be deducted. Okay. Any grant recognized as deferred income in the financial assets shall also be reduced. Whatever grant you have received, that should be reduced while calculating the cost of production. Then cost of production, acquisition, supply shall be determined on the basis of normal capacity or actual capacity, whichever is higher. So the principle of determining the cost is normal capacity or actual capacity, whichever is higher, and the unabsorbed cost shall be treated as abnormal cost. Any unabsorbed cost should be treated as abnormal cost. Fines, penalties, demurrage charges are to be excluded while computing the production cost. Forex component means if you have paid extra because of foreign exchange fluctuation. Okay, so I made an agreement with a foreign party to pay them $10,000 after 1 month. Today $10,000 were worth 86 per rupee per dollar. After 1 month it was 93 per dollar. So I have to incur more expense for paying that amount. Okay, that expense shall be converted on the rate of date of transaction. So date of transaction shall be the rate. Any subsequent change in the exchange rate till payment or otherwise shall not form part of cost of production. This is a financial loss. This is a financial expense. This is not your regular production expense. So this should not be included in your production cost. This shall be included in your financial cost. Credits and recoveries relating to element of cost, including facilities provided to outside parties, shall be deducted from the total cost of production. Any kind of the recoveries or credits which are made to any element of cost shall be reduced. Work in progress or work in process stock shall be measured at cost computed for different stages of completion on the basis of stages of completion as per cost accounting principles. So whatever work in progress, you need to ascertain that work in progress is to be computed using the stage of completion method. Whatever stage your production is, according to that method you can compute your work in progress. Opening stock, closing stock shall be adjusted for any calculation of computation of cost of production. Opening stock should be added, closing stock should be reduced. Similar way, guys, you do this in your costing also. Cost of production is to be adjusted for the closing stock and opening stock. Same thing you have to do in this particular case also. Okay, then there's some presentation. Appendix 1, 2, 3, 4 are required to be prepared according to this particular cost accounting standard. And yes, the cost statements are to be verified by the cost accountant for making this rule, for using this particular statement. Okay, so even the GST authorities would require a certified copy of cost of production from a cost accountant for using this rule. Even GST authorities will require that. Okay, so yes, that is the rule. Then disclosures are required to be made wherever material significant. And then if there's any change in cost accounting principle, then it has to be applied. Then opening stock, closing stock, if it is not readily available, same should be disclosed. Any fact which have material impact on the cost shall be certified. Okay. Now, sir, what kind of questions can we expect from this case? Yes, a practical question can be expected from this case, and a very simple one, very straightforward one. Okay. The question will not be very technical. The following particular pertaining to product A are extracted from records of Protect Limited for the half year ended 31st March 2014. Material cost is given to us: wages, expenses, indirect material, factory overhead, administrative overhead, 25% relating to production. Very, very important that the portion which is attributable to production of administrative cost, that only is included in cost of production according to CAS 4. Okay. So the production is attributable to 25%. Quality control cost, research and development cost, selling and distribution cost, sale of scrap realized, whatever scrap we have realized, the sale of scrap realized is 180. Profit margin is computed as 15%. Profit margin is 15%. You are to determine the cost of production in terms of Rule 30 of CGST Act, and as per CAS 4, the assessable value is required to be produced. So two things you have to compute. First is cost of production as per the CGST Act and assessable value as per CAS 4. Both the things you need to ascertain, and obviously, guys, the aim is to ascertain the GST liability of a particular company. Okay, sir. So what is the cost of production? Let us include all the elements which are there in the question. Let us include all the elements. Okay. So yes, direct material cost 17401260. 17401260. Then we have direct expenses. Direct expenses is 200. We have some works overheads also. Indirect material is there and factory overheads is there. 253,677. This is the works overheads. 930. Then we are going to take the administrative overhead related to production only. 1240 multiplied by 25%. Relating to production only. $525 is the quality control cost. Then we have the research and development cost. Okay, selling and distribution cost is not to be included while computing the cost of production according to CAS 4. So we are ignoring the selling and distribution cost. Okay, sir. Sale of scrap, yes, to be included. 180. Sale of scrap to be included. Then finally we'll get the cost of production. Cost of production comes out to 5145. Now profit margin is given as 15%. Profit margin is given as 15%. Should we take 15% or not? Answer is no. Because profit margin is stated in the rule itself. It has to be 110% only. It has to be 110% only. It cannot be anything apart from 110%. So profit margin is only 10%. Profit margin is always 10%. Okay. So 10% is 514.5. 514.5 is the profit margin. So what is the assessable value? Assessable value is 5659.5. 5659.5. So assessable value is 5659.5 and the cost of production is 5145. Yes, perfect answer. Very good. 5145 and 569.5. A very easy and a straightforward, guys, question. And in examination also, straightforward question is going to come in the examination. Okay, not very technical. So these are the practical questions that you can expect. These are the other, numerical questions that you can expect from this particular chapter. I've given you many questions. Please practice all of them well. If you do these questions, nothing else remains to be done. All things are already done. If you just do these questions, that's it. Nothing else needs to be done from this particular cost accounting standard. Nothing else or nothing else. Yes. So if you understood CAS 4, please write in the comment section, yes, sir. If CAS 4 is clear to you, please write in the comment section, yes, yes, sir. So we can start the next cost accounting standard, and again, an easy cost accounting standard, guys. An easy cost accounting standard. Please write in the chat box, yes, if you understood the cost accounting standard. About the particular CAS. About that particular CAS or some directly. What is your question? All right, let's come on to the to the next cost accounting standard, cost accounting standard 6. Again, 6 and 7 are brother sister. Brother is the material cash and 6 is the sister cash. Brother cash and sister cash. So cost accounting standard 6 is the brother cash, because brother is actually responsible for fulfilling the material responsibilities of the home, and sister is actually responsible for all the physical activities of the home, which is including keeping the home organized and employing labor to keep the a home clean, etc., etc. Just a way to remember it. Okay, just a way to remember it. Don't take it literally. Directly some answer can be done. No need to write any 2-3 points about the cash. If question asks you to write about cash, then only write about cash. If directly question is given, you directly write the answer. No need to write 2-3 points about the cash. That's not required. Okay. Okay, sir. So material cash, again, we already know about the material cost. Material cost includes all the costs that we have incurred for producing that particular good with respect to material, like any kind of raw material which is used, additives which we use, accessories which we used, spare parts which we have used, spares or nut bolts which have used. All these are categorized as material, and material cost is incurred when we add up all the things that we have utilized in that particular production process with respect to material. That is the material cost. Now, two important elements of this particular cost accounting standard from an exam standpoint. Number one, what are the various types of material cost? What are the various type of material? Number two, the practical questions which comes up in the examination, which are calculation of the material cost. What is the material cost calculation? That is the question that comes in the examination. So these are the two important aspects of material cost from an exam standpoint. Okay, let's start material cost. Okay, so definitions are also important, guys. Defectives. What are defectives? Defectives are material that do not meet the quality standards. Their quality standards is not met, so they are not up to the mark. They are not up to the quality which is expected, which should be there. So they do not meet the quality standards. They are known as defectives. It includes reworks and rejects. Reworks are defective, which can be brought up to standard by putting in additional resources. So if you put in some additional money, then reworks can be can be rectified. And rejects are the defectives which cannot be met up to the standards, so they are sold as seconds. They are sold off at a lower price. Okay, so they are known as rejects. Intermediate product means captive consumption. So these are the products which are used for intermediate purpose, and they are to be further processed to be ultimately sold to the customers. Scrap means discarded material having no or insignificant value, which is usually either disposed of. So scrap is always disposed of as waste. What is waste? Waste is the material which is which is actually consumed during the production process. It evaporates or it just gets waste due to whatever reason, it just gets wasted. That is known as wastage. So material loss during production or storage due to various features like evaporation, chemical reaction, contamination, unrecoverable residue, shrinkage, etc. This is known as waste. So whatever is left over, which is during the production process, whatever gets wasted, that is the waste. Then we have spoilage. Spoilage means production that do not meet with dimensional or quality standard in such a way that it cannot be rectified economically and is sold for disposal value. So spoilage is things which have been spoiled due to some mismatch in the quality standards or the dimensional standards. Property, plant and equipment. This is the Ind AS name for fixed assets. Fixed assets is termed as property, plant and equipment under the Ind AS. Okay. Then types of material. Very, very important. Very, very important. What are the various types of material which can be used in a production process? Raw material is the basic or the main ingredient of a production process. Basic or main material that is used in the production process, that is raw material. Process material or additive. Additive is the secondary material which is used in the production process. So one is the basic material which is used in the production process, like for making sugar, we use sugar cane. Sugar cane is the main product. And additive or process is the sulfur or the gypsum which we use, like the lime which we use, that is the additive. Manufactured or bought out components, components which we don't manufacture but we typically procure it from somewhere else. Like in fans, fan belt is not manufactured by the fan manufacturer. He procures it from outside. They are known as the manufactured or bought out components. Sub-assembly. So sometimes we don't produce everything. We all assemble it. We only produce engine, Engine produced by the engine manufacturer. So engine is produced by the engine manufacturers. Rest everything is outsourced. It is received from outside and it's just assembled. That is known as assembly or sub-assembly. Also known as aggregates. Accessories are components, like small components which are used in addition to that particular product. For example, in a car, they usually give us a music system. Music system is an accessory. Okay, that is known as an accessory. Consumable stores and spares. Stores and spares are small items which are used during the production process, like lubricants and oils. We use lubricants and oils in a machinery so that machinery runs smoothly. So that is an consumable or spares. Other indirect material, any kind of other indirect material like nuts, bolts, all these are the material. It is added to the material cost. So there was a very big dilemma whether other indirect material should be also included in nut bolts cost is included in the material cost or not. There was a very big dilemma earlier, but the cost accounting standard has removed this dilemma, and now even the small indirect material like nuts, bolts, etc., we say that these also should be included in the material cost. So very important, CAS 6 does not deal with packing material cost. CAS 6 only deal with normal material cost. Packing material cost, we have a separate cost accounting standard, which is cost accounting standard 9, which deals with the packing material cost. The CAS 6 does not deal with the packing material cost. Material acquired in exchange of other materials, values at cost of material acquired plus other applicable costs like freight, etc. So whenever you exchange goods, then whatever you have taken in return of your goods, that is the actual acquisition cost, which is to be considered by you. Then valuation is done by adding all the things, all the expenses that you have incurred for procuring that material cost. And if you have manufactured your material, then direct material, labor, overhead, everything that is related to your manufacturing process is to be added. Okay, sir, got it. All right, so these are the normal principles which we've already studied in our CAS 2. These are the normal principles. Okay. These are some special miscellaneous points on principles of valuation of receipt of material. What are the things that we need to incorporate while we are receiving the material? Cost of material is to be determined as per the invoice. Whatever is the invoice, that should be the cost of material. Supply of material is X works of purchaser. There will be no freight and cartage. So if X works is the contract, then cartage and freight is not there. In case inward freight is incurred, it shall form part of cost of procurement. Okay, inward freight is part of cost of procurement. Preparatory cost. Sometimes you incur some cost to prepare the raw material for manufacturing. For example, to manufacture whiskey, you need to store grapes for a really long time so that they develop the texture and the taste of whiskey. So that is known as preparatory cost. Preparatory cost is also material cost. Handling cost up to works factory is also, loading unloading cost is also material cost. Inspection cost is also material cost. Whatever inspection you are going to do, that is also a material cost. Insurance cost, whatever insurance you are claiming, whatever insurance you are paying for your material, that is also material cost. Cost of containers for carrying on material, whatever containers you are using for carrying the material from one place to another place, that is also a material cost. Okay, but if the containers are returnable, then whatever is the refund amount, that is not a container cost. Obviously, you will get a refund of this container if you return this container to the manufacturer, right? So if it's returnable container, then cost is not there. Whatever is refund, that will be reduced from the cost. Otherwise, the container's cost is the cost of material. Normal loss is to be absorbed in other products. This is a very important principle that you need to really understand, that normal loss is always absorbed by the other units. Abnormal loss is not absorbed by the other units. Abnormal loss goes to the costing P&L account. Same principle which we have studied in our costing as well. Okay, important material will come shortly. First, let's see one very simple question relating to the material cost. Okay, illustration number 1. Purchase of material rupees 4 lakhs inclusive of GST of 20,800. Fee on board is 18,000. Import duty paid is 12,000. Freight inwards 22,000. Insurance paid for import by sea 12,000. Rebate allowed 6,000. Cash discount 4,000. Subsidy received from government for importation of material 22,000. Compute the landed cost of material. What is the landed cost of material? That is the thing that you need to really compute. Okay. So purchase of material is 4 lakh rupees. Material has been purchased for 4 lakh rupees, but GST also included in it. We assume that GST is refundable. ITC can be claimed for this GST. We are assuming that. So we are reducing the GST from the material cost. This is This is 20,800. We're going to reduce 20,800. Okay, so what will be the amount? 4 lakh minus 20,800. 3,79,200. 3,79,200. Fee on board is included, which is 18,000. Import duty paid is again included, which is 12,000 is the import duty. Then we have freight inwards, of course, included. 22,000 is the freight inwards, which is included in the production cost. And insurance paid for import by sea, again included, 12,000. Rebate is allowed. Yes, it is reduced, 6,000 rupees. Cash discount. Now, please understand from a costing perspective, cash discount is a financial income. It's not a production related income. So it will not be reduced from the cost. It is a finance income. Cash discount is always a finance income. Therefore, it will not be reduced from the cost. This is a very important point that you need to really understand. Okay. Subsidy received from government, yes, to be reduced. 22,000 to be reduced. So this is reduced and this is reduced. So now you need to tell me the material cost. Minus So what is the material cost? Material cost is 4,15,200. Please check the answer once. Please check the answer once. 4,15,200. No, Nidhi Gupta should not check the answer because she always tells wrong answer. Manisha should check the answer. Answer should be 4,15,200. Please check the answer. Please check the calculation. Okay. So this is how you compute the cost of material. $4,15,200. Very good. Perfect. Perfect. Please write a conclusion. Hence, the material cost is computed as rupees 4,15,200. Material cost is computed as rupees 4,15,200. Okay. So now certain principles with respect to imported material. So guys, in case of imported material, when we import material from outside the country, there are certain additional costs that are incurred for the importation. Now, whether those costs are to be included in the material cost or not, that is what we are going to see. Actual custom duty paid on the basis of classification by the customs authority will be assigned net of any credit. So, whatever is the actual custom duty paid, that will be added to our cost of material. Material imported free of duty. So, if you have imported material free of duty, sometimes, if you import material under a scheme, you fulfill certain conditions and you import the material, raw material under a scheme, then you need not pay any custom duty. But the condition is that you have to fulfill the conditions which are given by the law. You have to fulfill those conditions. Now, if a cost auditor feels that, currently the company has imported the material under the scheme, but telling a lie, it is not fulfilling the condition. Tomorrow, if audit happens, then custom duty is going to be recovered. If the auditor feels that, he can add the material, add the custom duty in the material cost. The management is claiming, no, we fulfill all the conditions, but the cost auditor knows that you do not fulfill one of the conditions. and cost auditor has the proof that you do not fulfill conditions. So cost auditor can add the import duty in case of this particular case. So it all depends on the cost auditor. It all depends on the cost auditor. Okay, so material imported free of duty at concessional rate will be accounted for at the actual rate of duty applicable, so long as there is a reasonable expectation that the entity will satisfy the conditions. So if you think that entity will satisfy the conditions, then you can ignore that custom duty. But if you don't think that, then you should add the duty also. Harbor dues, stevedoring charges, loading unloading charges, congestion charges, and the like are to be added to cost of material. So any kind of importation cost, whatever cost has been incurred due to importation of material from outside country to India, that is to be added. Loading, unloading, stevedoring, congestion, all things are to be added on the basis of actual. Import as a part of basket of other materials, then proportionate charges will be allocated to the imported value. If you import a basket of raw material, many raw material you import together in India, then guys, proportional value should be attributable to the import value. Charges incurred on intermediate storage are to be included in cost. So if you store your goods while it is traveling from say US to India, you store it temporarily in say Singapore, okay, or some other intervening place, then that storage cost is also included in the material cost in case of imported goods only. Bank charges are in nature of administrative overheads and will not form part of material cost. Bank charges will not form part of material cost. Okay, sir. Okay, this is important. While issuing the material to the production process, when you are issuing the material to production process, then what is the principle that you need to follow? Which CAS are important in terms of theory? I will tell you during the session. I will tell you, don't worry. I'll only do those CASs which are important from theory as well as practical standpoint. I'll do that. Okay. Now there is some variance. Whenever you are using standard cost for valuing your material, there will be a variance. Okay. Variance can be classified into two parts: price variance and usage variance. Price variance is always added to material cost, whether it is abnormal or normal. Whether price variance is normal or whether price variance is abnormal, you always add it to material cost. Usage variance, whenever there is abnormal cost, you don't add it to cost, you take it to costing P&L account, and whenever there is normal variance, you take it to material cost. This principle you have to remember, because in the examination, the examiner is going to give you that there is a price variance for a good. What will be the treatment? You will add it to the cost of material. Okay. Transportation cost incurred in transport material to product line, inward freight shall be added to material cost. So any kind of inward freight should be added to material cost, and transportation cost should be added to material cost. Presentation, how do you present the direct material cost? It should be bifurcated into raw material, component, semi-finished, some assembly. These details are to be disclosed in the cost sheet. Direct material shall be classified as purchased, indigenous, imported or manufactured. Indirect material shall also be classified separately under the cost statement. Disclosure, separate disclosure is required to be made for what all things? Very, very important. First disclosure is very, very important, guys. So quantity and rates of items which form 5% of the cost of material. So whatever is the raw material cost, there are various kind of raw material which are used in the business, like the basic raw material, then the additives, then the accessories, then whatnot. Okay. Now you have to disclose each one of them in a separate line item. But yes, very small material, they can be clubbed together and write miscellaneous material. Very small price material can be clubbed together and written as miscellaneous material. But what is the definition of very small material? So the item of raw material cost which is more than 5% of the total cost, it should be disclosed separately. So if your total raw material cost is 10 crores, if your total raw material cost is 10 crore, then each of the raw materials who have their value as more than 50 lakhs should be disclosed separately. And if you have less than 50 lakhs raw material, less than 50 lakhs material, that can be clubbed together as miscellaneous material. So 5% is the threshold which is given by the CAS. So quantity and rates of items which form 5% of the cost of material shall be disclosed separately, while the other items could be aggregated. So if your raw material is forming say 10% of the entire raw material cost, okay, if your raw material is 10% of the entire raw material cost, then it has to be disclosed separately. It has to be disclosed separately. Okay. Next, the basis of valuation of material work in progress. What is the basis of valuation? You need to disclose. Any change in cost accounting principles, whatever changes are there in cost accounting principles and methods, it is to be disclosed, in the cost sheet. Any abnormal cost, whatever abnormal cost is there, which you need to exclude from material cost, that is to be disclosed. Any demurrage charges, detention charges, penalty, that is to be disclosed in the material cost. Any subsidy, grant, incentive that you reduce from the material cost, that is to be disclosed. Cost of material procured from related parties. If a related party transaction happens and you procure raw material from your related party, because related party values can be different, okay, you can manipulate those values. So those have to be disclosed separately, whatever material you have purchased from your related party, like your holding company, subsidiary company or group companies. Any imported cost is to be excluded, disclosed. Disclosure shall be made wherever significant, material and quantifiable. Disclosure means below the cost sheet you should mention by way of a note that yes, these are the abnormal costs which we have excluded while computing the cost of production. That is known as disclosure. Disclosure means below the cost sheet you need to disclose these items. So yes, this was your cost accounting standard number 6. Yes, disclosures are also important from an exam standpoint, guys. Sometimes 4 marks question is asked, tell us 4 disclosure requirements with respect to material costs. This kind of a question can be asked in the examination. Sometimes this happens. Okay, sir. Then yes, again practice questions are there. Many practice questions which I have given in the practice question section. Please do all of them yourself and understand their nitty-gritty so that you are able to perform well in the examination, because a question is mandatorily going to come either from material cost or employee cost. One of them comes in the examination, either material cost or employee cost. One of them comes in the examination for sure. There's no doubt about it. Okay. So this was your cost accounting standard number 6, and that's all for today's session, guys. Now we'll be meeting in our tomorrow's session for the further discussion on cost accounting standards. I don't know how many classes do we take to cover all the important cost accounting standards, but maximum 2-3 classes we'll take in for covering the entire cost accounting standard, important cost accounting standards. And yes, class from tomorrow onwards will happen in the app. So get yourself registered in the WhatsApp group. WhatsApp group is given in this mobile number. Over here, you will be given all the information about the app, how to access the further classes. Further classes will be on the app itself. All right, yes, very good. So guys, today we are going to start our cost accounting standard 7. Yesterday we completed cost accounting standard 6, which is the material cost accounting standard, material cost. Today we are going to start employee cost accounting standard, and today we are going to touch base upon how is employee cost determined in every cost sheet. So you have seen a lot of cost sheets and labor cost, okay, direct labor, indirect labor. You have seen it very commonly in your costing subject. Since intermediate you have been studying the cost sheet and how to prepare a cost sheet. The costing subject you are studying since your intermediate, and you have been seeing this this phenomena of how to compute the labor cost, the direct labor cost, how to compute that. You have been seeing it since your intermediate. Now the question is, sir, what are the ingredients that are to be incorporated while calculating the material cost, while calculating the employee cost? Because of course bonus, gratuity, provident fund, salary, basic, dearness allowance, all the allowances, all these are of course forming part of the material cost, but there are some peculiar items which we wonder whether they are to be included in the employee cost or not. For example, voluntary retirement. If you want to pay some amount, a lump sum amount for someone to retire early, you want someone to get out of your organization, you want someone to retire early, voluntary retirement scheme. Then if you make a payment for a voluntary retirement scheme, would that be included in your employee cost? Should that be incorporated in your labor cost? That is the question that we are going to answer. Such many other questions we are going to answer in this particular cost accounting standards, because it sometimes become really tricky, and if a solution is not given to the cost accountants regarding what can be the treatment of this particular item, then everyone is going to do different things. You are going to treat it differently, I am going to treat it differently, so everyone is going to treat it differently. We don't want that to happen, that every person is treating item of employee cost in a different way. So that therefore, to ensure uniformity and consistency, we will now enunciate all the important principles that are to be followed while computing the employee cost. That is the aim of this particular cost accounting standard. So yes, employee cost. Now what do you mean by employee cost? Of course, the employee benefits paid or payable. Payable means the the retirement benefits which are to be paid at a later point in time, but the organization is making a provision for it right now. Right now, the company is making a provision for it. It is contributing something to the provident fund. Of course, employee is not going to get it now. Employee is going to get it after retirement, but company is incurring the expense. So what should happen of that expense? Of course, it's an employee cost. So any employee benefit which is paid or payable in all forms of consideration for service rendered by the employee, including temporary employee, part employee, and contract employee. Now, please note this very important aspect, contract employee. There will be two kinds of items which will be there in your examination. One is contract employee salary. Second is contractor's employee salary. Contractor's employee salary. There are two kinds of expense which you will see in your questions, and treatment of both of them are different. So what do you mean by contract employee salary? Contract employee salary means employees who are on a contract, on a temporary contract. They are with us, and they are going to be in that contract for temporary phase. Okay, so for say 2 months they are with us, for 2 months they are on the contract with us. So this is known as contract employee salary. Contract employee salary, and this will form part of our employee cost. This will form part of our employee cost. This is very much an employee cost for us, right? Second is contractor's salary. Contractor salary means the employee is not on our rolls. The employee is on the rolls of the contractor, the employment contractor, the human contractor, and that contractor is paying salary to that employee, and you are paying a lump sum amount to that contractor. That is not an employment contract. It's not an employment contract. It's a contract for service. The contractor is providing you service of manpower, so you are paying for contract of service. You are providing, you are paying to the contractor. So this contractor's employee salary will not form part of employee cost. You have to remember this thing very, very clearly, because the CAS says that contract employees is included in the employee cost. Contractors employees are not included in the contract employee cost. So this distinction you have to really remember very, very profoundly, that contract employees salary will be included in the employee cost, but contractors employee salary will not be included in the employee cost. So this is an important distinction that you need to remember. You can write over here, contractor's salary not included in the employee cost. You can write by putting an asterisk, you can write over here. Okay, sir, got it? Okay, what are the principles of measurement? Employee cost would include all the components of labor cost. So whatever are the components of labor cost, whatever are the elements of labor cost, all the elements are to be included in the employee cost. Employee cost includes the gross pay, all the allowances or perquisites, anything guys, allowances or perquisites, right? Then cost of retirement benefits charged in the financial statement, everything is included in the employee cost. Of course, we know that. In case companies to which Ind AS applies, any remeasurement of cost recognized in the other comprehensive income shall not form part of the employee cost. Now, this is a very peculiar feature of Ind AS. You might have studied in your CFR, right? Other comprehensive income. If there's a liability which is being carried forward from past, and this year we are converting into Ind AS, then there'll be some opening balance difference which will go to the other comprehensive income. The opening balance, like we have provision for gratuity. According to Ind AS, provision of gratuity is little higher of the past years. According to our books, it's little lesser, right? So you'll put in additional a provision for gratuity. So that shall not form part of your employee cost, because it is not actual employee cost, it is actually a remeasurement cost, because you are remeasuring the provision for gratuity liability. So it's sort of a remeasurement cost. So it will not go as a part of your employee cost. So whatever goes into other comprehensive income, whatever cost goes into other comprehensive income, that shall not form part of the employee cost. That is the principle that we are going to see. Remuneration payable to non-executive directors. Okay, directors who are non-executive directors, and you are very well aware about what are the executive directors and what are the non-executive directors. You have to remember this point very carefully. The remuneration paid to non-executive directors shall not form part of employee cost, but it will form part of administrative cost. It's like administration. They are not doing anything for the organization. They are just using their name, their brand. That's what we want. We are just using their names so that our credibility is increased. They are not performing any activity of an employee. They are not working for the organization. They are not providing any service to the organization. So what are we going to recognize it as? We are going to recognize it as administrative overheads and not as employee cost. So non-executive director's salary is to be treated as administrative overheads and not as employee cost. Point to be remembered very, very carefully. Employee cost shall not include compensation paid to employees for past period on account of any dispute or court order. So if owing to any court order, your employee deserves a compensation from you, right? So you need not, you shall not include that compensation, in your employee cost. That shall go into, any other account, but not an employee cost. That is not your employee cost of the current year. That was your employee cost of the previous years. So any kind of remuneration you have to pay, compensation that you have to pay pursuant to a court order to employee, pursuant to past years, that will not form part of your employee cost. Short provisions of prior period made up in the current period shall not form part of your employee cost. So you had to make provision for bonus. Okay, bonus which was to be paid was 1.5 crores, but in the last year you made a provision of 1.2 crores. You added bonus provision this year, 30 lakhs. But that 30 lakhs doesn't pertain to this year, it pertains to last year. So this 30 lakhs will not come as a part of employee cost. Earlier, if you did not create a provision for bonus and you're creating it for the current year for the salaries of the previous year, then that shall not form part of your employee cost, Employee cost does not include workers hired through contractor or agent, as they are not on the payroll of the entity and payments are made to the contractor and not to such workers. Very, very important point. The point I was emphasizing upon. This is contractors employee. These are not contract employees, these are contractors employee. A very fine difference. Contract employee, contractors employee. You need to appreciate this difference, and the examination treat the cost accordingly, because contract employee cost to be included in employee cost, contractors employee cost not to be included in employee cost. Employee cost does not include imputed cost, so any kind of notional cost is not included in the employee cost, and this holds true for all the cost accounting standards. Cost of idle time is ascertained by idle hours multiplied by the hourly rate applicable for the idle hours. Okay, so idle time, if you have some idle time, then you have to recognize that idle time also, that yes, employees were sitting idle during this period, during this phase the employees were sitting idle. So what will be your idle time? Cost of idle time will be idle hours multiplied by hourly rate of that employee. That you'll ascertain. But sir, what is the use of ascertaining this cost of idle time? Guys, the use is that if this is normal idle time, then it's okay, shall go to the employee cost and the other units will bear the burden. That's okay. But if this is abnormal idle cost, then you have to take it to the costing P&L account. It shall not hit the employee cost directly. That is the reason why we are calculating the idle cost. So normal idle cost is to be included in ascertainment of the normal cost. Abnormal idle costs are not treated as part of cost and are directly charged to costing P&L account separately in a separate head. This is abnormal. You have to disclose it in a separate head in the costing P&L account. That is the reason why idle cost is always computed and bifurcated into two parts: normal idle cost and abnormal idle cost. Normal idle cost and abnormal idle cost. This will be the two bifurcation that you need to do for your idle time cost. Then while accounting the employee cost on standard basis, okay, if you are using standard cost, right, you are using the cost of employee as per your previous standards which you have established, then obviously there will be variances, right? Variances will be there. What shall be the treatment of those variances? Variances due to normal reasons shall be treated as part of employee cost. Variances due to abnormal reasons shall not form part of your employee cost and shall be treated as abnormal. So now variances you have to account for. The normal variances are to be charged to the employee cost. Abnormal variances are to be left alone. Okay, they are not to be charged to the employee cost. Okay. Yes, sir. So these are the principles, guys. Principles are almost the same for all the cost accounting standards. If you remember one of them, you'll be able to figure out all the cost accounting standards provisions. So yes, that is the thing. All right, the next provision is any subsidy, grant or incentive. If there's any subsidy which is given by government, or any grant or any incentive which is given by government, or any such payment received or receivable with respect to any employee cost, that shall be reduced from the employee cost in the financial year in which subsidy is received. So, you know, if government provides you some subsidy, government says that, okay, you have opened a factory in a very rural area, so you get a discount, which means if you pay a salary of 20,000, 10,000 will be borne by government of India and 10,000 you pay from your own pocket. This is a subsidy which is granted for employee cost, and if any subsidy is granted for the employee cost, then that shall be reduced from the employee cost. Penalties, damages paid to statutory authorities shall not form part of employee cost. This is a standard, you know, provision which is there in all the cost accounting standards. Same provision. Okay. Cost of perquisites like free housing, free conveyance, any other similar benefits provided to the employee shall be determined on the basis of total cost of all resources consumed in providing such benefits. So whatever benefits as a company, if you are providing to the employees, then you will be, you will be calculating the value of those benefits by adding all the resources which you have incurred to provide those benefits, and that will be treated as employee cost. Any recovery from the employee shall be reduced from the cost. If you are recovering anything, you have given a flat to the employee, and rent that you are bearing, the company is bearing for that flat is 50,000 rupees per month, and the employee is paying 10,000 rupees per month to the company. So 40,000 will be the employee cost which company is incurred. So 40,000 rupees will be employee cost which is added to the employee cost of the company. That is the principle. Okay, sir, got it. Now very, very important, treatment of certain specific, employee cost. Number one, recruitment cost and training cost. This is a fixed cost which is incurred for all the new joiners. Whatever new joiners are there, whoever persons have joined in the company new, their recruitment is done. Recruitment means that, for 1 week they'll be trained on the policies, on the procedures of the company. How do they have to fill their time sheets? How do they have to perform their work, upload their files? All the procedural aspects of work is taught in that 1 week. That is a recruitment phase. Okay. Recruitment phase can also be, 2 days or 3 days. It necessarily not be, 1 week, but it entails a fixed cost, a heavy fixed cost. Any kind of initial training also undertaken by all the employees who have joined new, that also is taking a heavy cost on the organization. The company has to pay hefty amount for this training cost or recruitment cost, whatever it is, the company has to pay a heavy amount for it. Now, since company has to pay a heavy amount for it, so this is treated as overheads and dealt with accordingly. Means it's treated as indirect taxation, indirect cost. It is treated as indirect cost, and cost incurred in recruitment activities is to be treated as overheads and assigned to cost object on the appropriate basis. So yes, this will also go into cost only, but as overheads, not as direct employee cost, but as overheads, indirect employee cost. This will not be treated as direct employee cost. It will be treated as indirect employee cost, overheads, and it will be apportioned on an appropriate basis. It will be assigned to cost object in an appropriate basis. Overtime premium, if you are paying overtime to your employees, if you are paying something extra than their salary because they have sat extra during the day, then you pay some overtime, right? Now that overtime you have to assign to cost object or treated as overhead depending upon circumstances which leads to overtime and economic feasibility. Now this is very, very important point to be noted over here. Okay, now if you think that this overtime is related to some cost object, there was some project which was undertaken at that point in time, and therefore this extra time has been incurred. If you think there is some specific cost object because of which this overtime has been incurred, so there's some specific cost object pertaining to this overtime. If you think that, then you assign the entire overtime on that cost object. For example, sales was at peak at certain point in time, so the production department ordered all its employees to work for 1 hour extra, right? So now we know that sale of that particular product B, is the reason why overtime is paid. Therefore, what we are going to do is we are going to add all this overtime premium and assign it to that particular cost object which is that good. Okay. Now, secondly, if the overtime is not attributable to certain cost object and it's general overtime which has been incurred, and general cost which has been incurred by all the employees due to general overtime, the overtime is general in nature, it's not specifically assigned to some cost object, then it will be treated as overheads and allocated according to whatever measure you want to allocate it. So that is the treatment that is proposed by the cost accounting standard. Yes, you have to remember it. Why? Because in examination, 3 marks, 4 marks question can be asked, what shall be the treatment of overtime premium as per the employee cost, CAS. So you have to remember all of this. Idle time cost. Now this is idle time cost. Okay, this is a sort of a wastage. This is a waste time which our employees are spending. Now this needs to be controlled. This is very critical. Our employee cannot sit idle. Okay. So what are we going to do with idle time cost? Idle time cost may be assigned to the cost object or treated as overheads depending upon the economic feasibility and specific circumstances causing such idle time. So first you need to know what are the circumstances because of which this idle time is there. Circumstances can be bifurcated into 2 parts. Normal circumstances or abnormal circumstances. Normal circumstances or abnormal circumstances. If normal circumstances are there because of which the idle time has occurred, then like normal lunchtime, holidays, it is normally loaded to the employee cost. It will be taken care of in the employee cost itself. Okay. But if it is in nature of abnormal employee cost, then it is taken to the costing P&L account. It is not treated as employee cost. It will be taken directly to the employee to the costing P&L account if it is abnormal in nature. So now you have to first ascertain what is the nature of this idle time cost. Idle time cost is normal. Please assign it in the employee cost in a usual manner. Just add it to the employee cost. If it's abnormal, then you need to charge it to the costing P&L account. And this question has been asked in the examination as well. Separation cost, very, very important. Sometimes the cost which we bear for in respect to an employee is not related to the work that he is doing. It is related to the work that he is not doing. We don't want him to work, therefore we are paying him. So whether it will be classified as employee cost or not, because this separation cost is being paid to the employee for not the work which he is doing, but for the work which he is not doing. That is a thin line of difference. Okay, so separation cost related to voluntary retirement, retrenchment, termination, etc. shall be amortized over the period benefiting from such cost. Lump sum payment under the above scheme shall be amortized. Normally over 5 years will form part of employee cost. So usual tendency is that you amortize this cost over a period of 5 years, right? But the question in the exam shall specify what is the amortization years, number of years in which this cost should be amortized. If the question is silent, don't amortize this cost. That is the rule that you have to follow. If the question tells you that yes, for 4 years this cost should be amortized, for 4 years the cost should be amortized. If the question tells you this, perfect. 1/4 of the amount you add to the employee cost. But if the question is silent, then do not treat this cost at all. Ignore the retrenchment cost or the voluntary retirement cost. The amortized separation cost for period shall be treated as indirect cost and assigned to the cost object in an appropriate manner. Okay, then separation cost related to discontinued operations, very, very important. If one of your branches is discontinuing, if one of your products is being discontinued, one of the processes is being discontinued, if that is the scenario, then the employee cost that you are paying for those employees, the unamortized amount related to discontinued operation shall not be treated as employee cost but should be charged to P&L account. If it is related to discontinued operations, then it shall be charged to the P&L account. Costing P&L account means not to the employee cost. It is not direct cost because your business has altogether discontinued. That branch or that product is altogether discontinued. Therefore, it will not form part of your employee cost. It should go to the profit and loss account directly. So this table is really important, guys. You have to remember this table. This table is really important with respect to employee cost. And yes, practical questions also come from this particular chapter. We'll be dealing with it. Direct employee cost shall be presented as a separate cost head in the cost statement, obviously. Indirect employee cost shall also be presented as a separate head under the overheads. Cost statement shall furnish the resources consumed on account of employee cost category wise. So category wise, you have to split the employee cost like wages, salaries to permanent employees, temporary employee, part-time employee, contract employee, piece rate employee. So this splitting is required in the cost statement. You need to bifurcate your employee cost into various kinds of cost like temporary employee cost, permanent employee cost. This bifurcation is required in the cost statement. That is the most important thing. This bifurcation is very much required. Disclosures. What disclosures do you need to make in your cost sheet? Employee cost attributable to capital works or job works, which means if you are making some fixed assets and owing to that fixed asset you are spending the employee cost, you have to disclose it in your cost sheet, because that employee cost you will add most probably to the cost of the machinery or cost of the plant. During current year, modernization of assembly line was carried out departmentally, amount to 50 lakh rupees, out of which 2 lakh is for employee cost. So you have to disclose like this you have to disclose, make a disclosure in the cost statement that our employee cost is incurred for development of some fixed asset. It is to be separately disclosed. Then separation cost payable to the employees, that needs to be separately disclosed, that so much employees have left the organization and therefore separation cost has been incurred. Abnormal cost has to be excluded from the employee cost. Penalties, damages which are excluded from the employee cost, that is to be disclosed. Subsidy grant which is excluded, that is to be disclosed. Employee cost paid to related parties to be disclosed separately, so that arm's length consideration is can be taken care of. Employee cost incurred in foreign exchange, if you are incurred any employee cost in foreign exchange, that is to be disclosed. Then any change in cost accounting principles is to be adopted only if 3 conditions are satisfied, right? You cannot change your cost accounting principles unless those 3 conditions are satisfied. Disclosure can be made in the cost statement or footnote as a separate schedule. Wherever you want, disclosure needs to be made, right? The stakeholders who are reading your cost sheet should know what treatment has been done to what kind of employee cost. They should know, they should be aware about special employee cost where treatment is done in a special manner, that they should be aware of. Okay. Okay, sir. Now let's do one illustration number 1. And yes, this has come several times, guys. This question has come several times in the examination. So yes, this is an important one. Okay, so let's start. A steel company which produces iron casting pipes, wrought iron, is covered under cost audit according to cost accounting record rules 2014. From the expenditure data relating to 1780, determine the employee cost according to CAS 7. You have to determine the employee cost. Okay. Salaries and wages are given, bonuses given, contribution to provident fund is given, wages to contractors, employees is given, employee welfare, abnormal cost due to strike, VRS payment for closure of rod division, area salary, compensation paid against past period against court order. All these things are given. You have to compute the employee cost. Of course, let's start with salaries. Of course, that is to be included 750. Then there is bonus 100 rupees. Okay. Then there is contribution to provident fund. Yes, so that will also be included because it's a retirement benefit. 90 rupees is to be included. Employee wages to contractor salary not to be included. Please note, because it is contractor's salary, not to be included. Employee welfare 40 rupees to be included. Abnormal cost not to be included. VRS payment for closure of a section not to be included. Area salary, past year salary not to be included. Court order salary not to be included. All these things are not to be included. So only these things are to be included. That shall be your answer. Please tell me what is the answer, because I have deleted my answer. So the answer is 980 lakhs. 980 lakhs. Very good. And guys, for all the items, you should write a note like this. This note is expected. Okay, for all the items, you should write a note like this. This note is mandatory to be written. Yes, 980. Perfect. Perfect, guys. Perfect. All right, there are again plethora of practice questions which you have to do yourself, because you know that in one attempt they are giving CAS 6, another attempt they are giving CAS 7. So alternatively they are giving both of them CASs, and these CASs are really important. All right, let's now start the next cost accounting standard, and a very important cost accounting standard, which is cost accounting standard 8 on utilities. If you understood cost accounting standard 7, please tell me in the chat box, yes sir. Tell me in the chat box, yes sir, if you understood cost accounting standard 7. Perfect. Guys, you also have to, remember all the provisions. So simultaneously, I hope some of the provisions you are able to remember. All right. Yes. Let's start the next cost accounting standard, which is cost accounting standard 8. And cost accounting standard 8 is cost of utilities. Utilities are the, during the production process, we do something on a side, we need some things which are not the main product, but they are side products, like pickle. Pickle we eat along with any vegetable, any curry or any dosa, idli, paniyaram, uttapam or roti, sabzi. Pickle is always used as a side. Okay. Now, utilities are also used as a side. For example, some companies use steam for generating their, electricity. Some companies use oxygen as a part of their process of production. Some company uses water as a part of their production. Sir, how can water be used as part of production process? I'll give you a very interesting example, guys. Water can be used to cut steel. Yes, steel can be cut using water. So there are turbojets which throw water in with so much of pressure that steel is cut into two parts, or holes are developed inside the steel. So I was doing audit of one of the companies which manufacture engines for the Indian Railways, and those engines were constructed using heavy sheet metal. Okay, and inside those engines, those sheets were used, and those sheets were cut using water. So I was restricted to go in that area. It was a area where it was surrounded by glass walls, and glass walls were closed. And then the process started. So we could see what process was going on, inside through the glass walls, and we could see the water being thrown at such high speed that it is used to make holes in the steel heavy sheets. This was the entire concept. So water is used as a production material. But water is not forming part of that engine, but it is used as a part of production process. Similarly, steam, oxygen, carbon dioxide, there are many such things which are used as utilities. Electricity is also a utility. There are many such things which are used as utilities during the production process, and therefore these utilities are discussed separately in this particular class. Now the common question, hydropower, sir, for electricity. Yes, hydropower is also a good example. Now the common question which is asked to me by students is that, sir, sir, the utilities which are there, sir, how are they different from raw material? They are raw material only. How are they different from raw material? No, they are different from raw material, guys. Material CAS, cost accounting standard 6, deals with material. Material means something which is incorporated in the final product. That is material, which is incorporated in the final product. In the final product, there is some element of that material which is there, like Fevicol, like nuts and bolts, like accessories, like assembly. But utilities do not form part of final product. That is the difference between utility and raw material. Material in some way or the other forms part of the final product, and utilities do not form part of final product. That is the difference between utility and material. So yes, utility is actually significant inputs such as power, steam, water, compressed air and the like, which are used for manufacturing process but do not form part of the final product. They do not form part of the final product. That is the key. Committed cost means the cost of maintaining standby utilities shall be the committed cost. Now sometimes the utilities which are being produced, standby equipments are also there for those utilities, so that if the first equipment fails, we have a standby equipment ready to produce that utility. Now imagine a situation where we are producing electricity for our factory, and the electricity meter goes for a toss, DG set goes for a toss, then entire factory will come to a standstill. So usually company keeps two DG sets, diesel engine sets. Two DG sets are there. One is the main DG set, the second is the backup DG set. So if by any chance the main DG sets is spoiled or is not working, then we can have the standby DG set for us. That is why the standby utility is essential, because without utilities company will come to a standstill. So now the cost of maintaining the standby utility is known as the committed cost. Committed cost means the cost which is committed. This cost will be incurred whether that utility is used or not. This cost will be incurred. This is known as committed cost, and cost of maintaining standby utility is the committed cost. Then what is the standby utility? Any utility created to safeguard against failure of the main source of input. So if the main DG set goes for a toss and electricity is not generated, we can use the secondary DG set as a source of power. Principles of measurement. So there are some principles of measurement of utility. Cost of utility purchase. Sometimes we purchase electricity, right? We don't produce electricity, but we purchase electricity from outside, like BSES sells us electricity. We tell them that we have a factory, so we need more electricity, more velocity electricity is required, and they do whatever we want them to do. They will charge us for it. Okay. So if the utility is purchased, then cost of purchase, duties, taxes which are attributable to the purchase, transportation cost and insurance cost, all of these are included in the cost of utility, and any other expenditure which is directly attributable to procurement. So whatever you are procuring, if you are procuring electricity, whatever expense is incurred to procure that electricity, everything will be added to the cost of utility. This is the cost of utility purchased. Now what if we are self-generating the utility? We are self-generating the utility. We are generating the utility for ourselves, and that too for our own consumption, not for selling it to outside, but for our own consumption. Then how can we ascertain the cost of that particular utility? Direct material, direct employee, direct expenses and factory overheads. You add all of these three and you will get the cost of utility. So I have electricity plant within my factory. I produce my own electricity. How will I value or compute the cost of that electricity? Because I need to disclose it in my cost sheet that this is my utility expenditure. Simple. Add up material, employee and other expenses and overheads. Add up all of them and then you will get the cost of utility. Now suppose you are generating the utility and you are transferring it within the company in different units. For example, you have a different unit in your company which produces electricity. There are other divisions also of your company, like plastics division, steel manufacturing division, wood division. There are different parts of your company in which different activities are done. Now some of the electricity is attributable to is going to the steel division, some of the electricity is going to the wood division, some is going to the plastic division. So electricity is being distributed inter-unit. Inter-unit means within the same company. Inter-unit means within the same company. Okay. So it's not going outside the company. It is going within the same company. Then you add up direct material cost, employee cost, direct expenses, factory overhead. You add up one more thing, which is the distribution cost. Because obviously if there are different units, then it will take time and expense to transfer your electricity to that particular unit. And that unit might be 1 kilometer away, half a kilometer away. Okay. So any kind of distribution cost is to be added if you are doing an inter-unit transfer. Then you have cost of utility generated for intercompany transfer. Now this time there is a group within same group. Now this time within the same group you have holding company, you have subsidiary company, you have sister concern, you have brother concern. You have multiple companies. One company is producing electricity, it is supplying electricity to all the companies of that particular group. So this is that case that cost of utility generated for intercompany transfer. The electricity is being transferred within one company to another company, intercompany transfer. In that case, direct material cost, direct employee cost, direct expenses, factory overheads, distribution cost and share of administrative overheads as well. So why were administrative overhead not included over here and over here? Because guys, in these two cases, company was the same. The cost was being transferred within the same company. In these two cases, company was the same company. and administrative overhead of one company remains the same. However, whenever you talk about intercompany, then administrative cost is also to be allocated extra, because it's intercompany. It is getting supplied from one company to another company. So administrative cost will always be extra. So proportion of administrative cost is further to be added, if it's an intercompany transfer. Now, what if we are selling it to the outside party? Not an intercompany transfer. It's not a company within the same group, but we are selling electricity to outside party. Suppose we have excess electricity. We have excess electricity and we are supplying it to someone outside our organization as well. Then one more thing will be added: market overheads, marketing overheads plus margin will also be added. All the other things will definitely be added as in the above column. One more thing, marketing overhead will also be added. Marketing overhead plus margin, some amount of profit you will be charging from third parties. These two things will also be added, because there can be some marketing spend also if electricity is being supplied outside your company, outside your group. Then you need to market your electricity, that yes, we have extra electricity, please purchase it. Marketing cost will be there. So marketing overheads will also be added and margin will also be added. That is how these allocation principles are computed, and yes, these are very, very important. Theoretical question, practical question, both can come from this particular section. Then principles of measurement of cost of utility. Finance cost, of course, shall not form part of the cost of utility. Cost of utility shall include cost of distribution. Also, distribution of utility shall also be included in the cost of utility. Cost of distribution will consist of cost of delivery of utilities up to the point of consumption. Cost of utility shall not include the imputed cost. Where cost of utility is accounted on a standard basis, if standard costing is being used for calculating the cost of utility, then the price variance related to utilities shall be treated as part of cost of utility. Portion of usage variance. So price variance, whether normal or abnormal, price variance, whether normal or abnormal, shall form part of cost of utility, and usage variance, wherever it is normal, it shall form part of cost of utility, and wherever it is abnormal, shall form part of abnormal cost. Now, very, very important, and yes, we have studied it earlier also. Variance, if it's price variance, then added to the cost, whether it's normal or abnormal. Okay, normal plus abnormal, it is added to the cost. And if it is usage variance, then if it's normal, then it is added to the cost. Which cost I'm talking about? Employee cost. Okay, and if it's abnormal, then it is not to be added to the cost, it goes to the costing P&L account. It goes to the costing P&L account directly. In a different head, it will be disclosed. Okay, it should not be added to the employee cost, that is the and utility cost. Sorry, it should not be added to the utility cost. This is not a utility cost if it is abnormal. It shall go to the P&L account directly under a different head, which is abnormal cost. Okay, that is the principle. Then any subsidy grant shall be reduced from the cost in financial year. Okay. Any cost of production distribution of utility shall be determined on the basis of normal capacity or actual capacity, whichever is higher. Cost of standby utility shall include the committed cost of such utility. Any abnormal cost, wherever it is material and quantifiable, shall not form part of cost of utility. Penalty damages shall not form part of cost of utility. Credits or recoveries which are done, they shall not form part of, shall be deducted from cost of utility. So all these principles remain the same, and they remain the same mostly in all the cost accounting standards. That is the benefit, that is the beauty of cost accounting standards, guys. You remember the general principles of one cost accounting standard, you will be able to reproduce it in all the cost accounting standards. All the cost accounting standards general principles are the same. Presentation, disclosure are also almost the same. You remember one, you remember all. That's the beauty. So utility, presentation, it shall be denoted as a separate cost in your cost statement. Utility is a separate cost. A separate line item is there in your cost sheet as utilities. Then where separate cost statements are prepared for utilities, cost of utilities shall be classified as purchased or generated. So purchased or generated utilities shall be differently classified. Purchase utility, different disclosure should be there. Self-generated should be differently disclosed. Such statement shall also include cost of utility consumed along with quantitative information by individual consuming units. So sometimes what happens is some of the utility is consumed, some of it is transferred, sold outside. So clear bifurcation should be given in the cost sheet, that this utility is consumed within the company and this utility is sold outside the organization to a third party. This bifurcation should be presented. Disclosures, what disclosures are required to be made in the cost sheet? Number one, basis of distribution of cost of utility. Cost of purchase, production, distribution of utility, cost of utility disclosed in standard cost. If there's utility which is disclosed in standard cost, price and usage variance should be disclosed. Cost and price of utility received from related parties to be disclosed separately. Cost and price which is received from inter-unit transfer is to be disclosed separately. Inter-company transfer to be disclosed separately. Cost of utility incurred in foreign exchange to be disclosed separately. And subsidy in grant which is received is also to be disclosed separately. These are separate disclosures required. Creditors and recoveries should be disclosed separately. Abnormal cost is to be disclosed separately. Penalties, damages, change in cost accounting principles, everything is to be disclosed separately. Separate disclosures are required. Okay, sir, got it. Now let us do one practical question regarding the utilities. Okay. This is illustration number 1. And this kind of question only will come in your examination, guys. You know, you'll be required to create the cost of utility. Hello, mic check. Hello, mic check. Hello, mic check. Am I audible now? Mic check. Hello. Am I audible now? Yes, now audible. Okay. So this is the question. Okay, various cost is given in this particular question. How many employees are working? That is also given in this question, and you have to calculate the cost of power generation. Whatever power generation is being generated, that you have to calculate the cost of. And by this captive generation plant, we could understand that the utility which is being generated is electricity. The utility which is being generated is electricity. We need to compute the cost of power using this data which is given to us. Okay, sir. So yes, one by one we'll add up all the expenses that has been incurred for generating this electricity. First one is coal consumed. 155 tons of coal is consumed for 500 rupees. So the total cost of coal is 77,500, and we are recovering 4,000 out of the sale of ash. Coal is generating ash. We are earning 4,000 rupees as sale of ash. So 73,500 is the cost of coal which is being consumed. Then we are purchasing some oil, 220 liters multiplied by 39.5 per liter. Okay, this comes out to 8690. Then we are also purchasing water, 1500 gallons, rupees 60 per gallon. Cost of water is 90,000 rupees. Then stores and consumables is there, 4,000 rupees. Salaries of generating plant, 2 supervisors there are there, 6,500 multiplied by 2, so 13,000 is the salaries of the supervisors. Then 5 skilled workers are there, 3,500 per skilled worker is the salary. 5 skilled workers are there, 17,500. 3 helpers are there, 2,200 multiplied by 3, 6,600. Salary of boiler attendant, okay, 2,200, and 8 boiler attendants are there. So the total cost is 17,600. Now depreciation is required to be computed. For generating plant, we have 12 lakh rupees as the cost, 75,000 is the residual value, and it is, its useful life is 15 years. 15 years is the useful life. 15 years is the useful life. Okay. So per month cost is 6,250. Depreciation cost per month is 6,250. No. So we are computing this on a monthly basis. Therefore, salary will not be divided by 12. No. Multiply by 12. No. Multiplication of 12 is not required because this is computed on a monthly basis. Okay. Produced for month of June 2014. This is computed on a monthly basis, June 2014. So the entire calculation is on a monthly basis. Yes. Okay, so depreciation is 6,250. And for boiler, the depreciation is 4,167. For boiler, the depreciation is 4,160. Okay, then there's some repair maintenance expenses also. 8,500 is the repair maintenance expense and 5,500 is the boiler repair maintenance expenses. Share of administrative overhead is 6,250. Share of administrative overhead is 6,250. Now many students get confused over here. I'll tell you why. This share of administrative overhead, okay. Many students come back and tell me, sir, administrative overhead is to be added. Administrative overhead is added only when there is an intercompany transfer. And in our question, there is no intercompany transfer. Therefore, why will this administrative overhead be added? Administrative overhead is added only when there is an intercompany transfer. Otherwise, it is not added. Look at this calculation. It is not added. Many students come back to me with this question. Guys, please understand, whenever this treatment is required to be done, question will specifically ask you, please generate cost of utility for intercompany transfer or for inter-unit transfer. Question will specifically ask you. Then you think about this treatment. Now question is silent. If question is silent, I'm going to add all the expenditure that are usually added to any cost. If question tells you that yes, please compute the cost of utility for inter-unit transfer or for own consumption transfer or for intercompany term, if the question specifically asks you this, then you have to follow these principles, not otherwise. So this is a common doubt which students ask me. Okay, now what is the total cost of power? Please tell me. 4 lakh is the number of units which are being generated. 4 lakh is the number of units which are being generated. Total comes out to 261,557. So what is the per unit cost? Per unit cost is 0.65. What is the per unit cost? Per unit cost is 0.65. You can also write the conclusion. Hence, the cost of power generation is computed as rupees 2,61,537, and the cost per unit of power generation is computed as rupees 0.65 per unit. 0.65 per unit. This is the conclusion. So this kind of a straightforward question can be asked from you, where you will be required to compute the cost of utility on the basis of the data which is given to you. Another kind of question which is being asked in the examination is to compute the cost of utility of two utilities. One is steam and one is electricity. If a company is producing two utilities, company is first producing steam, then it is using steam to generate the electricity, then you might be required to compute cost of both of them, and this is that complexity which you can face in your examination also. Let's see illustration number 2. Sun Flag Sugar Limited. So there is a company, Sun Flag Sugar Mills Limited, located at Maharashtra, has a boiler used for its own byproduct bagasse as fuel for generating steam. The high pressure steam generator is first used for generation of power. So first the steam is generated for the generation of power, and then exhaust steam is used for process of sugar manufacture. So I'll draw a diagram of this, this particular thing to tell you what is happening. Okay. So first you have water. You have a lot of water. And you have fire which is burning. There's a vessel, there's a very big vessel, and there's a fire which is burning below the vessel. And you have a pot full of water. You have a pot full of water. Okay. Fire is burning below this vessel. Now, there is steam which is being generated from this boiling, and this steam is actually going to a steam turbine. This is a boiler, and this is a steam turbine. And after steam turbine, sugar is being manufactured. Sugar manufactured. So what is happening is, steam is first going from boiler to the steam turbine. The hot steam, the steam which is absolutely hot, is first of all going in the steam turbine, and electricity is being generated from the steam turbine. Okay. Electricity is being generated from the steam turbine. So here the steam is absolutely hot and absolutely powerful. Steam is very hot, steam is very powerful in generation of electricity. Steam is used, so 100% powerful steam is used over here. Then when the steam loses its velocity, that kind of vigor, that kind of strength, then the steam is being sent to, the tired steam is being sent to manufacture of sugar. Okay, and over here sugar is being manufactured. So steam is partly used to make electricity, partly it is used to make sugar. Steam is partly used to make electricity, partly used to make sugar. That's the data which is given in the question. Okay. Now what has been given to you? You have been given these details. High pressure steam generated. High pressure steam which is generated in the boiler is 34780. This is the boiler, and high pressure steam is generated in this boiler. The quantity of steam is 34780 metric tons. Power is generated in the steam turbine, 25,40,000 kilowatt hour. Cost which is incurred is water and fuel. This is incurred in only boiler. and stores and chemicals used in both, salaries, wages used in both, repair maintenance used in both, depreciation, other expenses used in both. To calculate the cost of power generated, credit for exhaust steam to be taken as 80% of the cost of steam. So whatever cost of steam is being, produced, 80% is credit is to be taken for 80% of it. Okay, so 80% is transferred to the next process. You are required to prepare two separate cost sheets for steam and power as per the company's cost accounts and record rules for the year ended 31st March 2015. You have to prepare the cost sheet. Okay, so first we are gonna prepare the cost sheet for boiler, which means this is the cost of steam which is generated. Then we are going to calculate the cost of electricity, steam turbine, and let's see what happens. Let's see what happens. Okay. All right. So let's start with the total cost of producing the steam. What will be the total cost of producing the steam? Let's start with that. Now, let me just bring my calculator. We'll be requiring calculator in this particular question. So first of all, let's calculate the cost of steam. Cost of steam which is produced is 34,780 metric ton. Water, cost of water. So what is the cost of water? $1,048,170. And what is the cost of water per metric ton? So you simply have to divide the total cost by the production of final units, 34780. Okay. Fuel 921,43460. This comes out to 2649.32. Stores and chemicals. $7.39. Guys, please don't just copy it from the board, calculate yourself also. Don't just copy paste from the board. Okay, so what is the cost of steam? Cost of steam which is generated, ten crore 86 lakh 89,450. This is the total cost of steam. Per unit cost is 3125.06. This is the total cost of steam which has been generated. Now this steam is used to make electricity first. So we'll calculate the cost of electricity which has been produced using this steam. So the first input is the cost of steam itself, 108689,450 per kilowatt hour. This is per kilowatt hour. So we're going to divide it by the kilowatt hour units. For 2.79. Okay, then there is stores and chemicals. $65,695 divided by kilowatt hour. Then there is salaries and wages, 732,900. Kilowatt hour is 0.29. Then you have repair and maintenance, 257700. Depreciation. $120,700. Okay, so these are the total costs which are used to generate the electricity. Now we are going to give credit for the exhaust steam. So 80% credit is to be given for the exhaust steam. So 80% of cost of steam is to be reduced while compute the electricity cost, which in effect means 20% of the steam is used for electricity generation and 80% is used for sugar manufacture. So 80% of the cost will be transferred to sugar manufactured. Only 20% of the cost will be retained by the steam turbine. 20% of the cost is retained by the steam turbine. Okay, so 80% of this amount is to be subtracted. This comes out to 869,51560. Okay, so per unit cost is 34.23. So this is to be subtracted, and then we are going to compute the total cost of electricity. This will give us the total cost of electricity. The total cost of electricity comes out to be 235,644.85. 235,644.85. That is the total cost of electricity. You can conclude by saying that hence the cost sheet of steam generation, electricity generation is prepared as above. This is the total cost sheet which has been prepared for steam generation and electricity generation. And yes, today we are going to start one of the important chapters of your syllabus, which is management reporting issues in cost audit and analysis. Management reporting issues in cost audit and analysis. Just a second, guys. Okay, so in this chapter we are going to study some management reporting tools. Now first of all, let me tell you the background of this particular chapter. What is this management reporting? We are the auditors. We have to furnish our cost audit report in form CRA 3, and that's our role. What more is expected out of us? We have to follow the cost accounting standards while doing our cost audit, and we need to ensure that the cost statements which are prepared, they are as per the cost accounting standard. We need to ensure that. That's it. What else is expected out of a cost auditor? What is this management reporting? So guys, as a cost auditor, we are experts in looking at the key costs which are impacting that particular industry. We are looking at the key, responsibility areas, the key cost areas which are important from an profit and loss standpoint of costing. So we need to find out what are the costs which are heavy, what are the costs that can be economized, which are the costs which can be controlled. So this is our responsibility. I know cost audit is your duty. It is, you have to perform cost audit and you have to analyze whether the cost accounting is done as per the cost accounting standards, whether it is done as per the rules. That is your duty for sure. But this is an added benefit that you give to your clients. This is an addition, value addition that you can give to your clients. And guys, you think for yourself, how happy you become if any shopkeeper gives you something extra. You become so happy, right? If they give you some value addition. So you go buy a say lunch box and they give you a water bottle for free. Okay, ma'am, since you are a regular customer, we will give you water bottle free. You become so happy, right? So value addition is something which customers expect, which clients expect. So this value addition is key to our profession also. If you want to be good cost auditors, if you want to be good cost accountants, if you want to be good at our work, then guys, value addition is something which we should give. And since we are capable of giving value addition, therefore the Institute of Cost Accountants of India has introduced this chapter in your syllabus, which says that apart from cost audit, please give something extra. Please give some more analysis. Please give some of your expertise to the client. Please tell them how can they be more efficient? How can they be more resourceful? How can they reduce their cost? How can they control that cost? All these things, please give to the client. Client will be very, very happy. I know it is not part of your statutory obligation. Companies Act is not asking you to do this. Companies Act doesn't require you to do this. Companies Act only requires you to fill form CRA 3. That's it. That is the requirement which Companies Act has given to you. I know that. But apart from that, you can give some bit of value addition. You can give some bit of, additional services to your client in form of management reporting. So, sir, what kind of management reporting should we do to the management? So, guys, the kind of management reporting which can be done to the management, tell them how to introduce efficient ways of working. Process improvement. How can we improve our processes? How can the client improve their manpower resources utilization? How can utilization be enhanced? How can capacity be utilized to the fullest? We have studied cost accounting standard 2 on capacity determination. How can we use the capacity to the fullest? This this knowledge you can give to your clients, because guys, you are cost accountants and cost accountants work in so many manufacturing industries. You have done cost audit of so many companies. You are an expert in determining whether cost is optimum or not. You are experts in determining whether working capital is up to the mark or not, whether the receivable management is up to the mark in the company or not. You are the experts in it. When you are experts in it, then guys, please use your expertise and give some additional benefit to your clients, and that additional benefit is entailed in management reporting. So this chapter is introduced by Cost Accountants Institute of Cost Accountants of India, not as a statutory obligation. The statute is not asking you to do anything, but it is your responsibility. It is your duty. It is your, ethical duty. Ethically, you should give it to the client because client will be happy. And if client becomes happy, he will give you cost audit again and again and again and again. He will give you cost audit for any number of times, right? So yes, this is a management reporting concept which has been introduced by the Institute of Cost Accountants of India. They ask you to analyze the cost statements of a company in a proper way, in a very detailed way, and then you give your a PPT, a PowerPoint presentation, or normal Word document or Excel, anything, whichever you like. There's no format for it. Give a report to the management that, sir, we have analyzed your costing, and your costing can be improved by using 1, 2, 3, 4, 5, 6, 7, 8 techniques. Give it to the client. That is the purpose of this particular chapter, which is management reporting. So please tell us from an exam standpoint, how important is this chapter? Very, 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 very important. From an exam standpoint, theoretically as well as practically, this chapter is very, very important. And one strange part about this chapter is that, practical from this chapter can range from anywhere to anywhere. There's no limit. So your entire costing, SCM of your group 3 can be asked in this particular chapter. Your costing concepts can be asked in this particular chapter. The things that you have done in your costing syllabus, that can be asked in this chapter. How to optimize cost, how to control cost, all those topics can be asked in this particular chapter. So this chapter in that respect is a little, weird, a little unending. There's no end to this chapter. Anything and everything can be asked from this chapter in your examination. That is the, a difficult part, but I will be able to guide you on how to tackle this difficult part, how to ensure that you perform well in your examination, even when you are not aware what kind of questions will come in the examination. Even then, how to tackle the practical questions and the theoretical question, I'll be able to guide you on that. Okay, all right. So management reporting, issues and analysis, characteristics of management reports. So management reports are something which we expect you to give to the management as an addition to your cost audit report. Cost audit report is of course a statutory requirement, but this in addition to it will be a add-on to your cost audit report. So what are the characteristics of the management audit report? Management audit report are purposive. They follow a particular purpose. They are used for a particular purpose, like cost control, like inducing efficiency in the organization, inducing some better utilization of resources in the organization. They are purposive and they depend on management requirement. Whatever management requires at that point in time, according to that, management reports are prepared. So management reports, the reports should be simple, they should be clear in respect of various operating activities. So what kind of reports can be prepared? Financial reports can be prepared, where you can comment on the performance and budgets which the company has. Use cash flow reports, borrowing versus cost of borrowing, whether huge interest rates are being paid by the company on borrowings, which can be optimized, which can be reduced by changing the mode of borrowing. Okay, that kind of analysis you can do. Normally current period and comparative with earlier periods, annual prior years are considered for comparison purpose. You can give a comparison of what borrowings were there last year, what borrowings are there current year, and why has then been increase in the interest cost. Anything, any kind of financial analysis can be done in this particular report. Then information reports. Information reports means trend reports. What is the trend that has been followed by the company in their expenses, in their cost? Earlier the labor cost was 5 crores. This year it has increased to 8 crores. What is the reason? Why has labor cost increased? Why has direct wages cost increased? All the analysis can be done on the basis of the trends. Then analytical report. These analytical provide information about comparison of different activities of a particular period. So analytical report means, we analyze a particular period and we analyze what kind of expenses are there in that particular period, and how can they be controlled. We analyze all the matrix, like the working capital in this particular year has increased, but the sales have not increased. So if working capital has increased, obviously that will entail extra cost. If inventory has increased, it will entail extra storing cost. Storage cost is extra if inventory has increased. So any kind of analysis, analytical reports can be made by the cost auditor to give the performance appraisal to the client. Activity reports. When reports are prepared for any particular activity of a business, then they are known as activity report. If you focus on a particular segment like sales, I will give a detailed report on sales. Okay, so that is an activity report. When you produce a detailed report on sales, what kind of sales have happened, why those sales have happened, which product has performed well, which product has not performed well. That kind of activity report of sales can be, an activity report that can be given to the management. So activity reports are also important, a report for our performance analysis, management performance analysis. Then there are control reports. Various responsibility centers are established in every business to have effective control. To know the performance of each responsibility center, periodically reports are prepared. So what are the centers? What are the, responsibility centers? Which cost is increasing and who's responsible for that cost? So there are various cost centers. So who's responsible for a particular cost? A cost has to be assigned to a cost object. And then we analyze whether this cost object is increasing, therefore the cost is also increasing. This kind of analysis, and you have done this kind of analysis in your costing a lot. In SCM, strategic cost management, you have done this kind of analysis a lot. So yes, this is your expertise. Please benefit the client by your expertise by giving this performance appraisal report. Not necessary, okay, it's not mandatory. It's not that client will not pay you money if you don't, give it to the client. It's not that, but still, it will be beneficial. It will be good if you give these reports to your client. Next can be a report based on nature. So what kind of report is based on nature? Number one, enterprise report. Enterprise reports are reports which give detailed description of the various operating activities and financial position of the business. They are generally meant for external users like banks, financial institutions, shareholders. So, sometimes banks and shareholders want some kind of a report for the cost effectiveness of the company. Then these reports can be prepared, which are enterprise reports. Then investigative reports. If any problem has been identified by the cost auditor and cost auditor needs to investigate more into that problem after taking permission of the management, not suo moto, not on its own account, okay? After taking permission of the management, if the auditor wants to investigate deeply into a particular issue or a problem, that is known as an investigative report. These reports are specifically prepared only when it's to investigate to a particular problem. So these reports also can be prepared, and you are very much aware, guys, cost auditors are really good at doing forensics audit. Forensics audit is one upcoming area which cost auditors have entered into, and it's a very booming area. Every company requires forensic audits now because frauds are increasing by the day. So every company requires forensic auditors. So investigative reports can be, the forensic reports as well, that they can also be the additional reports that you can give to the management. And guys, you must be thinking, sir, why should we do all this for free? We should charge something from the client. Of course, yes, no one is asking you to do anything for free. You can charge from the client, but you have to show to the client that this report is worth it. Only when you prove that, yes, whatever work I'm doing is worth it, only then you will be paid. So you go to the market, the shopkeeper tells you this particular cloth is for 500 rupees. You say, no, it's not worth it. I'm not buying it, right? Similarly, client will say, no, I'm not buying it if it's not worth it. So you prove that your investigative reports are worth it. Client is going to pay you n number of amount. Client is never, miser in paying. No big MNCs, no big clients are miser in paying. They just have to, see the value addition. If you have given good value addition to the client, they will be happy to pay you 5 lakh rupees, 10 lakh rupees, 20 lakh rupees, whatever you demand. They are happy to pay you. But please prove your relevance. Please prove your value addition. Then functional classification of reports. On the basis of functions, reports can be, classified like individual activity reports. When you are focusing on a particular activity, individual activity of a particular business, like sales promotion, okay? In sales department, you are focusing on sales promotion, whether sales promotion is being done, correctly or not. That is an individual activity report. Then joint activity report. When two departments are jointly putting effort in some activity, in some dealing, like procurement department, purchase department, production department, all three are together to buy some good quality raw material, then that's known as a joint activity report. So joint activity report can be also prepared by a cost auditor. Now, indicative contents of the report. Okay, what can be the analysis that you can do in a report? What kind of a, so you can be, you are a freshly qualified CMA, you start your practice and you do cost audit. Cost audit, you know very well how to do. Cost sheet is to be prepared. Cost accounting standards are to be checked whether they are being complied or not. You know about cost audit very well. Now you think that, sir, how can we prepare management reporting, management appraisal report? How can we prepare that? What are the areas that we can see to, report to the management, which will be useful to the management? So guys, Institute of Cost Accountants of India have given you indicative areas. These are indicative areas which can be used for management reporting. Yes, the areas can be more than this. It can be a widespread area. Okay, sky is the limit for the areas. You can think areas for yourself also. But these are the broad areas which Institute of Cost Accountants of India have given you, that yes, broadly you can work upon these areas. But this is an indicative list. This is not an exhaustive list. Please understand, it is an indicative list. You can make performance appraisal report for any and every area which you think is a value addition to the client. Client should be ultimately benefited by your report. So the indicative area, number one is obviously, guys, the father CAS, the father of costing. Why do we call this as father of costing? Because costing starts from capacity determination. If capacity is not utilized properly, entire costing goes for a toss. Entire costing profit will go for a toss. You will never attain costing profit unless until your capacity is fully utilized and optimally utilized. If your capacity is utilized at a very, very less level, you are bound to incur losses as compared to your peers. You are bound to incur losses. You will never be in a optimally profitable situation. You will never be in an optimally profitable situation. Your capacity is, you can produce 1 lakh units per day. And what are you producing? 40,000 units per day. So fixed cost is being incurred by you on a regular basis, but profitability will not be much. So the first and foremost analysis which every cost auditor must do for a client is capacity utilization, whether the capacity is utilized appropriately or not. And CAS 2 gives you certain parameters to check your capacity, like installed capacity, then achievable capacity, normal capacity, actual capacity, capacity utilization ratios. All those things are given by CAS 2. Same detailed analysis can be done over here. So capacity utilization, capacity is usually expressed in the terms of final cost unit, and where not possible in terms of machine hours, people hours, etc. So capacity, first of all, should be measured in terms of units. How many units can you produce in a particular day? If you cannot measure capacity in terms of units, then you use methods like machine hours, people hours, etc. The auditor should comment on how the company responds to the variations in the product demand by adjusting its capacity. So you have to analyze, when there is a fluctuation in the demand. So suppose there are phases when the demand is really low. What does company do of the excess capacity? Does it lease, loan or license it to someone else for optimal benefit? And what does company do if the demand increases suddenly and it is more than the capacity? Then what does company do? Does it hire some additional capacity from the market? So how does company respond to the changes in demand? That is what you need to analyze. Whether company is irresponsive of the demand, they are insensitive to the demand variations. They say, okay, for 4 months our plant is almost idle. It's okay, let it be idle. Does company have that kind of a attitude? Or company has an attitude that yes, for 4 months our plant is going to remain idle. Let us lease it to some other client, some other company. Let us lease it. Or that is the attitude. What is the attitude which the company has? That is to be determined by the cost auditor, and cost auditor has to comment on it. The mathematical formula for calculating capacity utilization is actual level of capacity divided by maximum level of capacity multiplied by 100. We have already seen it in our CAS 2 computation. We have already seen. Example is given to you. A company is producing 20,000 units. It's determined that company can produce 40,000 units. Company's capacity utilization is 50%. If this rate is low, it signifies a situation of excess capacity or surplus capacity or underutilization of capacity, right? Now, what does company do to overcome it? That is the question which cost auditor needs to answer. Higher the capacity utilization, lower will be the cost per unit, allowing the business to gain an edge over its competitors. Many companies aim to produce to extent of fullest capacity. Low capacity utilization leading to opportunity loss, since fixed cost recovery will be a challenge. I told you that, if there's a low capacity utilization, fixed cost will not be recovered properly, right? So capacity should be appropriate. Yes, theoretically this question came in June 2025. Theory question, almost 6 marks question came in the examination. Describe how can company, how can cost auditor comment on the capacity utilization, and how can he analysis the same? And this can be increased, guys. This is just a small write-up which I have given you. You can expand this write-up according to the marks. If question comes for 8 marks, you can expand this to a greater level, right? Because you are aware about capacity utilization a lot. So you can expand it. So it depends on your marks for which the question is asked in the examination. You can expand each of these points. And if you want to add your own point, most welcome. You add your own points in this analysis, because analysis is not statutory. There's nothing statutory which is given. It's your own analysis. And you have done costing analysis in your intermediate. You have done costing analysis in your finals. So you are very, thorough with analyzing the cost sheet and the cost situations. Next is productivity or efficiency analysis. Yes, one of the most important consideration which the business has is that resources are limited, utilization is unlimited. So how to give your best output in the limited resources that we have? How to give your best outcome in the limited resources that you have? That is a challenge with every company. How to be efficient? How to be effective? Are we wasting resources? We should not waste resources. That is the aim of every company. So productivity or efficiency analysis can be done by the auditors. Yes, input-output ratio. Remember we used to do input-output ratio. That can be a first indication of efficiency. Input-output ratio can be used as efficiency indicator, the first and foremost and the very basic thing, guys. Okay. So the auditor should analyze the chain of input-output processing. This analysis would help the auditor to comment upon the performance of the organization across products and product groups. The performance measures in respect of this area could be inputs which are utilized, material, man, machinery, capital. Then wastages as a percentage of input. What is the wastage as a percentage of input? Indices could be developed for single factor productivity and multi-factor productivity and total factor productivity. So these are some indexes which can be used. Okay, single input. What is the efficiency which is there in single input, multiple input or total input? Interrelationship in various productivity measures. For example, output per man hour may have increased. But if it is accompanied by higher wastage per man hour, then there is no real benefit. So analysis needs to be done. How many man hours are you wasting on a particular, are you employing on a particular product, and how many man hours are useful, how many man hours are not useful. All this analysis needs to be done in great detail. Then very, very important from an exam standpoint also, what is the difference between productive and allocative efficiency? What is the difference between productive efficiency and allocative efficiency? So guys, productive efficiency means how many goods are you producing by using the lowest possible cost. Cost optimization is the basic essence of productivity efficiency. And this is a traditional way of costing. Costing always focused on reduction of cost. Costing techniques always focused on reduction of cost. Resources should be minimally used to produce the goods. That was the focus of traditional costing. But nowadays world has changed and now we are more focused on allocative efficiency. What do you mean by allocative efficiency? Allocative efficiency means along with focusing on cost control, you should also focus on what products are more acceptable or demanded in market. Put your resources more on those products. So suppose a company is producing product A and product B. Company is producing two products, product A and product B. Company is using two products. So productive efficiency is that, they should be produced at minimal cost. That is productive efficiency. What is allocative efficiency? Allocative efficiency means if product B is demanded more in market, then you should employ more of your resources in product B and less of your resources in product A. Don't just focus on cost control. Also focus on where to allocate your limited resources towards. So allocate your limited resources towards product B and not product A. That is known as allocative efficiency. So two kinds of efficiency which are really important. Productive efficiency, the traditional way of looking at things, cost control, you need to reduce cost. Allocative efficiency, the modern way of looking at things, that yes, cost control is important, but we also need to identify where should we channelize our resources so that maximum optimum benefit can be derived from the cost. So this is the difference between allocative efficiency and productive efficiency. Important from an exam standpoint. Okay, so productive efficiency, making goods at the lowest cost. Allocative efficiency, making the right goods for society. Whatever is demanded, making the right goods for society. So yes, efficiency can be detailed into two parts. Productive efficiency as well as allocative efficiency, which is important from an exam standpoint also. Next, utility or energy efficiency. Now it's really important to in today's world where energy is scarce and energy sources are very rare. Electricity, water, air. If you are in Delhi, if you are national capital of Delhi, then you yourself know How polluted is Delhi airs today? Delhi's air is absolutely polluted, okay? So it has become a scarce resource. Even, other metropolitans like Bombay, Chennai, Kolkata faces acute water shortages. Water is a resource which is rare now. It is in shortage. It is not in abundance as it used to be. So, our efficiency should be directed towards minimizing the energy consumption, minimizing the utilities consumption. That should be minimized, or looking for alternate ways or renewable ways of energy, like water energy. Okay, water turbines are there. Use water turbines to generate electricity rather than using coal. So use renewable ways of energy generation, like solar panels. Solar panels are fit everywhere in the entire country. They are being used now extensively. They are being used, solar panels. So use solar panels to generate electricity. I'll tell you one more important thing, right? Use the equipments which are energy efficient, like LED bulbs. LED bulbs which are there today are much more efficient than the old yellow bulbs. Do you remember when you were kids, you used to see that yellow bulbs which were connected through wires, and since one wire dropped, the bulb got fused, right? Their life was also very less. The electric, bulbs' life was also very less. So they were not energy efficient. But today, the LED bulbs which have come in market, they are very, very energy efficient. They consume less of energy. ACs, air conditioners are, consuming less of energy. Then, the tube lights are consuming less of energy. And nowadays, daylight saving is a very good concept. Daylight saving is a very good concept. Daylight saving means, you are sitting in an office and the office is made of glass so that light can pierce through, so that there's no need of to switch on your lights. Natural light is good enough. Sun's light is good enough. This is known as daylight saving. So this is also a concept which is very popular in corporates today. If you see corporate buildings, all are made of glass, and that too transparent glass. It's not because of fun. It is not because of they look good. No, it's not because of that. It's because of energy efficiency. They want it to be energy efficient. Yes, abhi bhi ghar pe hai. Okay. So one of our student has those yellow bulbs even at her home right now. But ideally those bulbs should have been replaced by LED bulbs now, because those bulbs are not energy efficient. They are old bulbs, so they consume a lot of energy. So I think you should replace the bulbs now with LED, because those bulbs are not good enough now. Okay, so this is the analysis that you can do for your client. So, but we are not energy experts. So what? Even if you're not energy experts, then also guys, basic understanding you have of energy efficiency as a cost auditor. Basic knowledge you have. I know you are not engineers, electrical engineers, that you will comment on the energy efficiency, but basics you are aware about. And just by reading the the general principles about energy efficiency, you can comment on the energy efficiency as well. So the importance of conservation of non-renewable energy needs no emphasis. So it's important to conserve the non-renewable sources of energy. Performance appraisal parameters for energy and utilities would include consumption of fuel for generating energy, and then the use of energy thus produced per unit of final product. The performance parameters should include energy generated per unit of fuel consumed. This should be applied for power, steam, electricity, etc. So what energy is being consumed by using per unit of fuel? What is the energy being consumed and what kind of fuel is being used? Measurement of improvement in power factor. How can we improve the power factor so that we can consume maximum energy with minimal resources? So that can be looked at. Trend analysis for energy cost as percentage of total production cost is a good indicator of performance. We can see what kind of energy has been used in past versus what kind of production has been done in past. Possibility of recycling of commonly used materials such as paper, glass. You can use recyclable commodities like paper, glass, which are recyclable. Don't use plastics. Avoid plastics. That can be done. Better capacity utilization for improving input-output ratio. Then replacing existing plant and machinery with new ones, although it's very costly, okay, to remove all the old electrical appliances and get new ones. It's ideally it's very expensive, but still you can consider it when its useful life is nearing the end, then you can at least consider it. Consider the cost benefit analysis, of course, and you consider the payback period. Possibility can be explored to use variable frequency drive on motors, blowers, etc. to adjust load of machines as per the process requirements. So whenever the process requires higher source of energy, then a variable frequency drive can be loaded so that the power can be regulated. It's not that when the low power is required, even then high power is being supplied. That will be a waste of power. So variable frequency drives can be used on motors and blowers to adjust the load. Possibility can be explored to have modifications of pumps. So pumps which are you are using for raising the water to above the ground level, those pumps can be used in an energy efficient way. Energy efficient pumps can be used. So that can be explored. Modification of pumps can be done. So this was the area of energy efficiency, and now we come on to a very, very basic area which you are an expert in. Okay, contribution analysis. Please tell me in the chat box, what do you mean by contribution? You have been studying contribution since your, I think, foundation. What is contribution? What is the formula for contribution? And yes, contribution analysis is one of the most important way of analyzing whether the profitability is appropriate or not. So what is contribution? Yes, very good, very good. Sales minus variable cost divided by number of units, contribution per unit. Very good, very good. Yes. So contribution analysis, guys, a basic fundamental which every cost accountant is aware about. A basic fundamental which yes, the reverse formula is fixed cost plus profit. Very good, perfect. So basic formula which every cost accountant is aware about. Do that analysis, show a trend over a period of time, and there you go. You'll be able to analyze the contribution and the components which are included in the contribution very well for the client. Client will be really happy. It's such basic analysis, the results can be huge. So the auditor could provide analysis of cost information by highlighting any significant variation therein during the reporting period. Sometimes these variances are caused by non-recurring one-time cost. Suggestions to avoid such variations may be provided in the report. In addition to these, it would be necessary to enlighten the company management with an in-depth analysis of contribution earned by each product group. Suppose the contribution of product is 10%, which is lower than other products of business. If company is unable to reduce the variable cost of this product, it may eventually decide to drop the product. So contribution analysis will tell you whether a product is profitable or not. If you know contribution of a particular product is very low and others is quite high, you can discontinue that product. Don't make that product anymore, because what's the use of making a unprofitable product? Employ all your energies and resources towards the profitable product. So this can be a very good indicator for the company. And guys, let me tell you, conglomerates. Conglomerate means companies which are dealing in multiple products. For example, HUL, ITC, Tata's, Reliance. All these companies are making multiple products. They are into multiple industries, right? So as a cost auditor, you can recommend them that, sir, if you remove this product and use the resources into some other product, your profitability will increase. They might not, take that decision immediately, but at least you have put it in their minds. They might not discontinue the project immediately. Oh yes, from tomorrow we are discontinuing. No, this doesn't happen practically. But at least they will keep in their mind that yes, this kind of a restructuring can be done in the business, and in future they can think about it. So yes, this will be a very good analysis. Contribution is total revenue minus variable cost divided by number of units sold. One example, for example, a company sells 15,000 units of shirts for a total revenue of 4 lakhs. Cost of goods sold is 1.5 lakhs. Labor expenses 1 lakh. Contribution margin is this, rupees 10 per shirt. Then yes, break-even analysis is also important, guys. Break-even is the place where no profit, no loss happens, right? And this is also a very good analysis. What is the number of sales at which we break even? We are not at profitable situation. We are not at loss situation. It's a very good analysis. So break-even point where the business makes no profit, no loss. One can calculate the break-even point using formula fixed cost divided by contribution per unit. And we are already aware about these formulas. We are not only aware, but we are experts in these formulas. You have done these formulas since early ages, okay? Since your 12th standard, when you were preparing for your foundation, after your 12th standard, you have been doing these formulas, okay? Okay, sir. Next is product or service profitability analysis. Now, profitability is one of the core of any businesses. So, to analyze profitability of a business is one of the basic essential things that auditor should do. Not must do, because it's not statutory obligation, but should do. As an auditor, you should involve yourself in analyzing the profitability of a particular company, and you are aware about the metrics. Yeah? Return on equity is a good way of analyzing profitability. Return on assets, earning before interest and tax. These are common profitability ratios that you can use to analyze profitability of a company and comment on how to improve it. So just finding out the ratios is not enough. Let me tell you, just finding out the ratios is not enough. You have to also suggest the client how to improve these ratios. The auditor shall provide a thorough evaluation of the products and services that are contributing more or less to the overall company's performance. The analysis helps to identify ways to enhance product mix to maximize profits both in short and long run. Are you aware what do you mean by product mix? Are you aware what do you mean by product mix? Yes, sir. 2 products are being produced. How much quantity should be produced of each of the product for maximum profitability? That is known as a adequate product mix. So product mix decisions can be taken by the company on your recommendation, on cost auditor's recommendation. If you analyze and you tell the company that, sir, you should reduce production of product B, you should increase production of product A, that will be more profitable to you. You can give that kind of an analysis to the company. This makes it helpful for budgeting purpose as managers work to create reasonable goals and map how they will achieve them. In addition to the study of product profitability, the auditor could comment on profits associated with markets and customers. There can be concentration risk in this analysis. For example, over dependence on few customers. Okay, so sometimes over dependence on few customers is also risky. So if a company is depending too much on one of the customers, so it's also risky, and cost auditor can highlight this risk. Okay, so concentration risk is there, focusing too much on a particular customer or selling in only one market. The profitability ratios are financial metrics that are used to understand revenue relative to its cost, asset, equity over time. So you can, do a trend analysis. For past 5 years, compute the return on equity. For past 5 years, compute return on asset. That can be a very good measure of analyzing the performance of the company and suggesting to the management, look management, you are lacking in this respect. And trust me, management feels really happy if someone tells them that this is the area where you can improve. Because management is so much engrossed in execution. Management is only focusing on execution, how to execute well, how to do the entire work well. Management's entire focus is on execution. They seldom get time to think beyond executing stuff in an efficient manner. So if you think for them, if you have some actionable items for them, if you have some actionable methods for them to take which can increase their profitability, they will be super happy. And trust me, they will be ready to pay you whatever amount you want, whatever amount you need, they will be happy to give you. And guys, let me tell you, many students think that, sir, we don't want to be in practice, we want to be in job, we want to be in industry. Okay, so this is not relevant to us. Why will we analyze stuff? Why will we do all these things? We'll be given a set of work, we have to do that work. No guys, that is not true. Even when you are in job, even when you are working for a particular company, whatever work is given to you, you have to do that for sure. But beyond that, you have to think what extra can you do out of your own expertise. You have got knowledge, you've got skills, you have obtained some skills in your articleship also, you have obtained good skills. So when you have good skills, when you have good knowledge, you can apply those knowledge, you can apply those skills in your work, and that can be useful to you in your job also. You can do something extra, you can give something extra to the company. Of course, promotion will be easier, salary increment will be easier, and your job security will be really good. So, very, very important thing to be noted over here is that, this analysis is not only for cost accountants in practice, this analysis is also for cost accountant in service. If you are doing job, then also these analysis will be helpful to you. Very, very important analysis, guys. Working capital analysis and liquidity measurement. Okay, liquidity is something which every business is really keen on looking at, because if we are running out of funds, then our business will come to a standstill. Short-term funds I'm talking about, working capital. So working capital should be adequate. It should not be very high because it comes with a cost. It should not be very low, otherwise we will not be able to fulfill the demand. So working capital should be at an appropriate level. Please tell me some ratios of working capital that you have heard of which can be used in this analysis. Please tell me in the chat box what kind of ratios can be used in working capital analysis. Okay, so yes, working capital analysis is one of the most important analysis that you can do for a company, and a very basic one, very, very basic one. Current assets, current liabilities, quick assets, quick liabilities, whether you will be able to fulfill your liabilities in near future or not, whether you will be able to meet your short-term liabilities. That's the question that we ask to the company while doing the working capital. Very good answer. Current ratio, very good answer. No, turnover ratio is the wrong answer. Current ratio, quick ratio is also a very good answer, right? So these are the ratios which tells about our short-term liquidity, working capital liquidity is told to you by ratios like current ratio, quick ratio, short-term liquidity. So the auditor should critically examine the working capital policy. Working capital means current assets minus current liabilities. It is necessary to check whether the funding of these components is considered with a period of requirement. The analysis of working capital can be done using traditional measures like ratios like current ratio, quick ratio, turnover ratios, yes, for long-term liquidity, turnover ratios, number of days in operating cycle. This is very, very important. Number of days in operating cycle. How many number of days are there in an operating cycle? These ratios could be computed for each product group separately. Analysis for operating cycle of the company would be immensely useful. So operating cycle is one of the very useful things, to be analyzed, to be taken care of. That operating cycle, what is the number of days in which we are recovering our debtors? Our debtors should be recovered. What are the number of days in which our debtors are recovered? The money is recovered from our debtors. That is an important aspect. Okay. Let's do one example. A very simple example it is, and analysis of this example is also important. Okay. So we've been given some data. Topple company has the following forecast figures for the first year of trading. Now figures are given to you. Sales is given to you. Purchases, expenses given to you. 30 lakhs. Average receivables is given to you. Average inventory is given to you. Average payable. Okay, payable. Average overdraft is given to you. Gross profit margin is given to you 25%. Now question is silent whether gross profit margin is on sales or the cost. So we assume that gross profit margin is on sales. Okay. Industry average data. What is the average inventory days of industry? 53 days is the average days of inventory in the industry. The competitors are keeping their inventory for 53 days. Then receivable days. Receivables are due for 23 days. Payables are due for 47 days in a particular industry. Current ratio, industry average is 1.43. Assume there are 365 days in a year. Calculate and comment on Topple company's cash operating cycle. So what is the cash operating cycle? Then we have to find out current ratio, quick ratio, and sales to working capital ratio. 3 ratios we need to compute. First of all, we need to compute the cash operating cycle. For how much time is the cash stuck in our business? So cash operating cycle needs to be computed, and then 3 ratios are required to be computed. 3 ratios are current ratio, quick ratio, and sales to working capital ratio. Okay, so first of all, let us compute the cash operating cycle. So let's start. Computation of cash operating cycle of Topple company. Computation of cash operating cycle of Topple company. Cash operating cycle means how many days are inventory dues, how many days are receivable dues, minus how many days are payables due. So this is the cash operating cycle. Okay, sir. So first of all, we need to find out the inventory days. The formula for inventory days is average inventory divided by cost of goods sold. So what is the average inventory? 4,95,000. So this comes out to 4,95,000 divided by. Now we need to compute the cost of goods sold. So 25% is the gross profit margin on sales. So we will reduce 25% from 36 lakhs. 36 lakhs minus 25% of 36 lakhs. 36 lakhs minus 25% of 36 lakhs. This will give us the inventory days. You please tell me what is your answer. What is the answer of inventory days? So this comes out to 36 lakhs minus 27 lakhs. Denominator is 27 lakhs. So 4,95,000 divided by 27 lakhs. Okay. Multiplied by this, we have to compute in number of days, no? So 365 days. So multiplied by 365 days. 4,95,000 divided by 27 lakhs multiplied by 365 days comes out to 67 days. 67 days is the time period for which our inventory is held with us. I hope you remember the formula, guys. This formula you are already aware about. Okay, this is not something new that I'm teaching you. You are already aware about these formulas. You should be aware about these formulas. Next is the receivable days. So for how much time is our receivables due? Receivable days. Okay. Now average receivable is given to us. Yes, sir. And sales is also given to us. Formula is average receivables divided by net sales multiplied by 365 days. This is the formula. So what is the average receivables? 3,06,000. What is the sales? 36 lakhs. Multiplied by 365 days. So comes out to 31 days. Comes out to 31 days. The other receivable days. Now we'll talk about the payable days. Okay, payable days that we are going to reduce from our computation of operating cycle. Payable days. Formula is average payables, which is given in the question already. Yes. What is the amount of average payables? Average payables 2,30,000. Okay. And purchases also given to us 30 lakhs. So average payables divided by purchases multiplied by 365 days. So this comes out to 2,30,000 divided by 30 lakhs. 2,30,000 divided by 30 lakhs multiplied by 365 comes out to 28 days. This is going to be in negative. Yes, 28 days. This is going to be in negative. So what is the ultimate answer? What is the cash operating cycle of this company? Cash operating cycle is equal to 67 plus 31 minus 28 comes out to 70 days. Cash operating cycle is 70 days. Cash operating cycle is 70 days. Next is computation of cash operating cycle is 70 days. Next is computation of ratios. We need to find out 3 ratios for this company. Ratios of topple company. Computation of ratios of topple company. 70 days is the cash operating cycle. What is the ratios that we need to now compute. First is the current ratio. We need to compute the current ratio. Current ratio is current assets divided by current liabilities. Guys, your presentation should be absolutely perfect. Please understand this point. Both in cost audit and BVM SPM practical part, your presentation has to be absolutely perfect. If your presentation is not perfect, then you're going to lose marks. So please ensure that your presentation is absolutely perfect. Okay. So this is inventory plus receivables divided by payables and overdraft. So you need to compute the current ratio. Then we are going to compute the quick ratio. So what is the quick ratio? We are going to compute the quick ratio. So quick ratio will have receivables in it, will not have inventory. Quick ratio will have receivables in it, but not inventory. So quick ratio formula is quick assets divided by current liabilities. So it is quick assets only, which is 4,95,000, which are the receivables. Oh, receivables. Okay. 3,06,000 is the receivables. $3,06,000 is the receivables. Please compute the quick ratio also. Okay. Tell me the answer. You please compute and tell me the answer. I want the answer from each one of you. Then the third is sales to working capital ratio. Sales to working capital ratio. This is sales divided by working capital. Sales to working capital ratio. $4,95,000. $3,06,000. $2,30,000 minus 5 lakhs. So what will be the sales to working capital ratio? That also you need to compute. So please compute all these parts and let me know what is your answer. So current ratio is 1.1 times. Quick ratio is 0.42 times. And the sales to working capital ratio is 50.70 times. Okay, so guys, many of the books would also contain one formula where the overdraft is not considered under the working capital. They don't consider it as current liabilities. The overdraft is usually excluded from working capital. That treatment is also fine, but I think that working overdraft very much forms part of working capital. Therefore, we have included it. But you can see the answer where sometimes overdraft doesn't form part of working capital. That's also correct. It's not incorrect. That's also correct. Sometimes overdraft doesn't form part of working capital because that's not actually the working capital that you are using in your business. Your current liabilities, your things that they are payable, they are actually the working capital. So that treatment is also correct. Both the treatments are correct. Yes, Srinath. That's what I explained just now. Yes, you can mention it in a note. Yes, you can mention it in a note. Okay. Now, this computation has been done, but our main work doesn't end over here. Our main work starts from here because we also need to comment on this, numbers. We need to comment on these numbers. So our work starts from here. Our work doesn't end here. Our work starts from here. So we need to comment on each and every ratio which is listed over here. Those comments and those observations are really important from an exam standpoint. And yes, they will fetch you marks. They will fetch you marks. So really important to now write the observation. So on a piece of paper, write the observation and you can staple it with this particular sheet. You can staple it along with this sheet. But those observations are really important. So let's write the observation. Observation number 1. Observation number 1. Okay, what is the operating cycle of the industry? That is what I want to know. What is the cash operating cycle of the industry? Cash operating cycle of the industry is 53 plus 23 minus 47. So it's only 29. Cash operating cycle of the industry is quite less. Our cash operating cycle is 70 days. Industry cash operating cycle is 29 days. Okay, let's write. The cash operating cycle of the company. The cash operating cycle of the company is significantly longer than the industry average. Is significantly longer than the industry average. Bracket open. 29 days. Bracket close. Full stop. This may indicate potential liquidity problems. This may indicate potential liquidity problems with the company. Potential liquidity problems with the company. Point number 2. Point number 2. the current ratio of the company, is 1.1 times, as compared to 1.43 times of the industry, full stop. This again indicates potential liquidity problems as the industry maintains a higher level of current ratio. The quick ratio of the company is 0.42 times, full stop. There is no industry average data available. Full stop. Therefore, benchmarking is not possible. Next point, the sales to working capital ratio. Is quite high. Sales to working capital ratio is quite high to the extent of 50.70 times. Full stop. However, this is the first year of trading. Hence may not be representative of the true picture. Okay, so this is how you have to analyze your answer as well, and analysis will carry the main marks. Main marks will not be of the computation of ratios, main marks will be of the analysis that you are carrying. So analysis should be absolutely perfect. Then next is manpower analysis. Yes, this is one analysis that you can do for any client in a very simplistic way. You can just calculate the turnover ratio. What is the ratio in which people are leaving the organization? What is the ratio in which people are joining the organization? What is the spend that company is doing on their training, on their recruitment, on their well-being? Employee welfare expenditure. What is the ratio of employee welfare expenditure over the period of time? Whether people are being retained efficiently or not, whether people are happy or not. So all these analysis can be done with respect to manpower by you. If you think that this is an area of improvement in the company, then manpower analysis can be part of your report. Auditor should analyze the figures of manpower productivity, idle time, overtime worked, absenteeism, etc. These factors could be compared with the respective outputs such as increased production, increased sales, the criteria such as sales per person achieved. Now this is a very good criteria, that if manpower is increasing, then of course sales should also increase. There should be a direct correlation between the two. And this analysis needs to be done, whether increase in manpower is reflected in the efficiency, also is reflected in the increase in sales also. This is a benchmark that we need to do. The criteria such as sales per person achieved, production per man hour, etc. will add value to the report on the performance analysis. The factor returns from the manpower is in terms of growth in production, productivity, enhancement of skills, knowledge of the organization. Other areas. There can be other areas also, and I've told you that there can be plethora of other areas, guys. This is just an indicative list. Whatever you feel under the sun, whatever you feel can be an efficient process for the organization can be benefited out of it, you can put it in your management report. Other areas, the auditor may include comments on array of issues in the performance analysis report. like variance analysis, research analysis, analyze the matrix, business matrix, any kind of business matrix, non-financial. Review competitors' performance. You can do a SWOT analysis. Competitors, what is the market, efficiency of the competitors. Decide on the changes, whatever changes are required to be made. You decide on scope of improvement that needs to be explored. All these things can be done by you in your management analysis and your management report. Then management accounting tools. There are certain management accounting tools which can be used. The data input is generally made in accounting systems used by a company. For example, ERP systems. So ERP systems are maintained where management accounting can be done, and in those management accounting we can actually put our efforts to see whether they are efficiently being organized by the organization or not. Most of the ERP system facilitate input and capturing of even non-financial data, which can be then processed to produce desired reports. There's a lot of information to be accessed from outside of ERP system. The auditor should identify such sources within and outside of the organization and use the information drawn from the same. So auditor has open access to ERPs. ERPs is the enterprise resource planning. So the auditor has access to all the accounting softwares, all the management accounting software. So just extract data from management accounting software, analyze it, put it in your management report. That is the expectation of the management. Very simple, very straightforward. Okay, sir, got it. Now we come on to the practical questions which can come from this particular chapter. And guys, let me tell you, practical question from this chapter can come from any part of your syllabus of costing of your first third group, SFM, not portfolio management, etc., but basics of SFM, the examiner can ask in this particular chapter. Then it can come from your intermediate costing, okay, make versus buy decision. These kind of questions can come from this particular chapter as a practical question, and 8 marks. Sir, now should we pick up our SCM book, our costing book of intermediate to complete this chapter? Answer is no. I have given you plethora of practice questions that I feel will be relevant from an exam standpoint from this particular chapter. Just do these thrice. Just do these practice questions thrice. These are practice questions. Just do these practice questions thrice. And whether the question comes from this particular, from these questions or outside, you will be able to perform well. You will be able to perform somewhere or the other. You will be able to perform. So just complete the question which I have given you behind the book. That's it. You need not do anything else. Just do these questions thrice. I have tried to include all the possible type of questions that can come from this particular chapter in the practice questions. So just do these questions thrice. That's it. I've also included the past examination questions in this particular compilation. So just do this compilation, and even if the most difficult question comes on the earth from this chapter, you will be able to solve it, say 40 to 50%, and that will be all. That's what I want. Okay. So no need to worry about this chapter. That's a question can come from anywhere. That's very true. But if you practice these questions well, I'm pretty much sure you'll be able to perform well. All right, let's do some practical questions from this chapter. In the class, illustration number 1. A company introduced a new product, Easy, with advanced technology in the product market where there is a huge competition with many competitors having individual market shares to 5 to 10%. Survey on the present market estimates that demand will increase of 80,000 units per year. The company is presently targeting 50% of additional market demand, as competitors will need at least 2 years to match this product. Okay, so 50% demand will be captured by this company. Okay, 80,000 is the total market demand, 50% will be captured by the company, which means 40,000 will be captured by the company. Okay, the product Easy passes through 3 departments. Direct cost per unit of the product at present rate. Material cost is 65, labor cost 45, overheads absorbed on the base of normal capacity. Following is the relevant information which is given to you. So these are the production processes through which this product goes through. Easy product goes through these processes. Units of measurement, machine hours, direct labor hour. Normal monthly capacity 12,500, 15,000 labor hours, 25,000 labor hours. Monthly allocated fixed overheads. What fixed overheads are allocated in each of the department? This is the amount which is given. Full overhead cost rate. The full overhead fixed overhead cost rate is given to you. Then hours consumed by each of the products. This is the hours which is consumed by each of the product. Company has set a target for selling and distribution cost of 3 lakhs irrespective of sales volume. The company normally sets a price by adding markup on cost between 30 to 40%. You are required to suggest the price so as to take care of competition in the right perspective. You have to recommend the adequate price which can be given for this particular product in the market. Okay, so the ask is that we need to compute the selling price of this product. What should be the selling price of this product? That we need to compute. Okay, sir, got it. So yes, a typical question, a question that can come in your examination in a very typical manner. Okay, sir. So first of all, let's prepare a cost sheet for this product. Okay. Now two costs are already given to us. Material cost 65, labor cost 45. We're gonna give it as it is, and overhead cost we need to compute. Okay. So 65, 45. So direct material cost is 65. Direct labor cost is 45. Direct material cost is 65. Direct labor cost is 55. Now we need to compute variable overheads and fixed overheads. Selling distribution overheads is also given. Okay, these two we need to compute. Working note number 1. So working note number 1 will give us the fixed overhead per unit and variable overhead per unit. What will be the amount? Now normal monthly capacity is 12,500, 15,000 labor hours and 25,000 labor hours. And the fixed overhead which is already given in the question is 50,000, 60,000 and 75,000. This is the monthly fixed overhead which is already given in the question. Now let us first compute the fixed overhead per hour. What will be the fixed overhead per hour? So this will be computed by dividing 50,000 by 12,500. Okay. So this will come out to 2. 60,000 divided by 15,000 comes out to 4. 75,000 divided by 25,000 comes out to 3. So this is the fixed overhead cost per hour. This is the fixed overhead cost per hour. Okay, this also. Now what is the full overhead per hour? It is already given in the question. Full overhead cost per hour is 10.5, 9 and 6. $10.5, 9 and 6 is the full overhead. Now what will be the variable cost? This minus this will be the variable overhead per hour. So this will be 6.5, this will be 5 and this will be 3. Variable overhead per hour. Variable overhead per hour. Now, how many hours are required for producing 1 unit? How many hours are required for producing 1 unit? How many hours per unit? So hours consumed by each product is 2, 1.5 and 3. So hours per unit is 2, 1.5 and 3. 2 hours in producing 1 product, 1 unit. 1.5 hours in producing 1 unit. And 3 hours in producing 1 unit, because we need fixed overhead per unit and not per hour. We have been given per hour, we need per unit. So we're going to multiply the fixed overhead per hour with the hours per rate to get our fixed overhead per unit. So this multiplied by this 8 is the fixed overhead per unit. 4 multiplied by 1.5 6. 3 multiplied by 3 9. These are the variable overheads per unit. We have computed per unit. Okay. This is the variable overhead per unit. 13, 7.5 and 9. What will be the total? 23. 19.5. $29.5. 23 and 29.5 will be the fixed overhead per unit and variable overhead per unit. Okay, sir. 23 and 29.5 is the fixed and variable overhead per unit. Then selling and distribution overheads, we have already been told that 3 lakh is the selling and distribution overheads. Divide by the sales volume. Sales volume is 40,000 units, okay. We have already computed that the sales volume will be 40,000 units. How is it computed? 80,000 multiplied by 50% capacity, 50% share, market share. So 3 lakh divided by 40,000 will be the selling and distribution overhead. Comes out to 7.5 is the selling and distribution overhead. This is the total cost. So please compute the total cost. Now we'll have two prices. So we'll have a price range. Because why should we have the price range? Because question is telling us that the margin should be between 30 to 40%. So we'll have a price range. So first we'll add profit at the rate of 30%. Then we'll add profit at the rate of 40%, and then we'll see. 51, 221. So the price range is 221 to 238. So the company can keep the price of its product between 221 and 238. This will not only cover the full cost, but will also ensure a reasonable profit on cost. At initial level, low price should be preferred to penetrate the market and keep the competition away for longer time to make the technology and the price. Guys, this is very, very important. You know, students always in the examination focus on this. They would do this to the best extent. They would do the computation to the best extent, but they will not write the conclusion well, and they miss out on marks because of the conclusion. This conclusion is very, very important. Please focus on conclusions of all the practical questions which come in your examination, especially in cost audit. Examiner wants this conclusion to be detailed and not one line. The price is between 221 and 238. No, not one line. One line is not sufficient. Conclusion has to be pretty detailed. Conclusion has to be little lengthy. So please focus on concluding your answers well. All your answers should be concluded well. Okay, sir, got it. Let's start. Illustration number 2, and a very, very popular illustration came in December 2023 as well. And a small question, but it's a little tricky. Okay, let's start illustration number 2. ABC company has planned for investment of 800 lakhs with 50% loan from bank at 10% interest. Okay. 50% loan is taken from bank, which means 400 lakhs will be the loan amount and 10% will be the interest cost. Direct cost for the year is 480 lakhs and 50% of which is material cost. So direct cost is 480, 50% material cost, which means rest 50% is direct labor cost. Other expenses is 80 lakhs. The goods will be sold at 150% of the direct cost. Okay, that's the profit margin. Tax rate is assumed at 50%. Determine the net profit margin, return on assets, asset turnover ratio, return on owner's equity and inventory turnover ratio. You have to determine all these ratios. Okay, sir, got it. So we need to determine the ratios, and for that we need to, of course, find out the profitability scenario of this particular company. Let's start with sales. The amount of sales will be okay, so 480 is the cost and 480 is the direct cost. Direct cost is 480 of this entire product, and the sales is 150% of the direct cost is the amount of sales. So 480 into 150% comes out to 720 lakhs. 720 lakhs is the total sales. What is the direct cost? Direct cost is 480 lakh rupees, which is already given in the question. 480 lakhs is the direct cost. So 250 lakhs. 240 lakhs is the gross profit. Gross profit is 240 lakhs. What is the gross profit? Gross profit is 240 lakhs. Okay. Now, we reduce the operating expenses and interest to compute the profit before tax. Okay, we need to compute the profit before tax. So we reduce operating expenses plus interest. Computation of interest is already given in the question. Operating expenses, we need to find out what are the operating expenses. Now, first of all, what is the interest? So interest is 400 lakhs multiplied by 10%. Interest is 400 lakhs multiplied by 10%. That is the interest. And what is the direct expense? Direct expense is 80 lakh rupees. Other expenses 80 lakh rupees. So 40 plus 80, 120. 80 plus 40, expenses 120. So profit before tax is 120. Profit before tax is 120. The net profit after tax, 50% is the tax rate, so net profit after tax will be 60. Net profit after tax is 60. So these are the matrices which we have already found out. Now based on these matrices, we'll be finding out the net profit margin, return on assets, return on equity, asset turnover ratio and inventory turnover ratio. So first of all, net profit margin, profit divided by sales is the net profit margin, 60 divided by 720, okay. This is the net profit margin. .33%. 8.33% is the net profit margin. Return on assets. So, you know, the total profit is 60, okay. Assets figure is not given to us, but we assume that whatever is the investment in business, of course, it will be employed in assets only, whether it's fixed assets or current assets, right? So we assume that the investment is equal to assets. 800 is the assets figure. So we divide by 800. So 60 divided by 800 comes out to 7.5%. Then we have return on equity. Return on equity is there. So the net profit is again 60. And what is the amount of equity? 50% is loan, so balance 50% is equity. 50% is loan, so balance 50% is equity, right? So 400 is the equity. Comes out to 15%. 15% is the return on equity. Then asset turnover ratio. Okay, so sales divided by total assets. Sales divided by total assets. 720 divided by 80. Sales divided by total assets. Total assets comes out to 90%. Asset turnover ratio is 90%. Or, you know, usually turnover ratios are denoted in terms of times. So 0.9 times. Then inventory turnover ratio. Now there is a catch in inventory turnover ratio, right? So, you know, inventory turnover ratio is sales divided by average inventory divided by sales. Average inventory divided by sales is the formula for inventory turnover ratio. Now sales is given to us already. We have computed 720 is the sales. That's we are fine. We are not given any data of average inventory. What is the inventory that we are keeping? We are not given data of average inventory. So there is a small assumption over here that whatever is the direct material cost out of 480, 50% is the direct material cost, right? Whatever is the material cost, we are maintaining equal level of inventory. There's an implicit assumption. I know it's vague. It's a weird assumption, but that is the nearest assumption that we can take because inventory figures are not given to us at all. Inventory figures are not given to us. So, you know what we can do is we can just take the direct material cost, which is 240 as the inventory, average inventory also, and we can use it over here. So 240 is, how is it computed? 480 multiplied by 50%. 480 multiplied by 50%, which is 240. So 240 divided by 720 is the inventory turnover ratio, which is 0.33 times. 0.33 times, or if you talk about percentage, 33.33%. 0.33 times or 33.33%. That should be the inventory turnover ratio. So this is the analysis, this is the computation which we have done. Now the question is only asked to determine these ratios and not to interpret them. If the examiner asks the question for a higher marks, then it will also ask you to interpret the results. You have to give each line of explanation for each of the matrices, if the question asks you to interpret the results also. But as of now, no interpretation is required to be given. Okay, sir, got it. So this is the answer for illustration number 2. Now we come on to illustration number 3. Let's see what is the illustration number 3. Okay, let's start illustration number 3. Based on the following information in respect of Grinding Mills Limited, a concern manufacturing cement, you are a cost auditor. You are required to offer your comments on the performance of the company and your suggestion on improvements. Although not statutorily required, but we are asking you to comment on the performance of the company and your suggestion for improving the performance of the company as a statutory auditor. You have already done the statutory audit of this company. Please also analyze the performance of the company. Okay. What has been given to you? Capacity related information is given to you. So you have to comment your suggestions on first matrix of performance, which is capacity utilization. Comment on the capacity utilization. Okay, sir. Now there are breakdown hours which have been given to you. Planned maintenance hours is given to you. Okay, this is for current year. This is for last year. Power restrictions. Saw shortfall, there are no orders. Want of wagons, because of wagons there are shortfall in wastage of hours. Total stoppage time has increased. Total running time, this is the total running time. Total available hours, total of these is total available hours. Okay. Production during the year, hourly rate production. So if you divide this by this, you will get the hourly rate production. And capacity utilization, you will get the capacity utilization. Also, annual installed capacity is 4 lakh metric ton. So the annual installed capacity is 4 lakh metric ton. You need to comment on the performance of this particular company. So guys, whenever this kind of question is given to you, where previous year figures are given and current year figures are given, and you are asked to interpret the results, the first and most obvious thing that you can do is just analyze the increase and decrease in percentage terms. That's it. Increase and decrease in percentage terms. You analyze that. That will be the most easiest thing to do if you have been given 2 years comparative data. Okay, so make this kind of a table for analysis of utilization of the machine hours. So I'll fill in the figures. Okay, you compute the answer and give it to me. Increase and decrease in numbers and percentage. You give me both the answers. I'm just writing the numbers. You please give me both the answers. Previous year figures are also given to you, current year figures are also given to you. Now we need the increase or decrease in numbers. In number form also increase decrease is required, and percentage terms also increase and decrease is required. In both the terms, increase and decrease is required. Okay, breakdown hours have increased. $1070. Decrease will be denoted in negative. Okay, increase will be denoted in positive. Guys, I'm simply calculating increase and decrease, that's it, nothing else. Shortfall number of orders, increase 127. Okay, 183. Okay, so this is the computation that we need to do. The most simplistic, the most basic computation that we can do, most simple computation that we can do. 19.10. That is true. Yes, 19.10. I have rounded it off. So the most simplistic computation, the most simple computation that you can do if 2 years figure is given to you for performance analysis is just to compare both the figures, compute the percentage increase or decrease, and then you write your conclusion, then you write your comments. That is the most easy way of doing thing. Okay, and don't just copy it from the board, calculate yourself, because sometimes simple calculations are also tricky in the examination. You just get confused. So my student was asking me, sir, this increase and decrease should be divided by 25-26 figure or 26-27 figure. This is the basic question which one of my students was asking. Obviously guys, base figure is to be taken for division purposes and not the current year's figure. Base figure should be taken for computing the percentage, because percentage increase is on the base figure. Base figure is 25-26 figure. Okay. Okay, total has increased by 609, 14.08, 14.08%. Stoppage, total stoppage, okay. Okay, now comes the major part. This is the minor part. This calculation anyone can do, even a graduate can do. No marks will be allocated if you just do this computation and give answer to your examiner. No marks will be given to you. If I am the examiner, I will not give you any marks. This is not of any worth to me. This is worthless to me. what will be useful is the comments which you are going to give. That is useful to me. The comments which you have to put in your own words, that is the most important thing that is required in this kind of questions. So just computation will not suffice. Just computation will not be, enough. So first of all, let's analyze the things which are happening over here. Okay, our stoppage hours have increased during the year. We want to reduce our stoppage hours. Our machinery should work non-stop continuously over a period of time. So our stoppage hours should not decrease. They should decrease. They should not increase. However, in the current year, the stoppage hours have increased by 609 hours. Now we need to analyze why are they increasing. Number one, our breakdown hours have increased. Machinery is getting breakdown after every few days. Breakdown means it stops working. What can be the probable reason? Probable reason is immediately in the next line. Planned maintenance hours is reduced. When you will not do maintenance of the machinery, how will it work efficiently? How can you imagine that a machinery will work efficiently if it is not maintained well? You are decreasing the planned maintenance, obviously breakdown will increase. So what should be your conclusion? Please increase the planned maintenance hours. Planned maintenance hours should increase. Maintenance should be done suo moto so that breakdown can be reduced, because breakdown is going to cost you more than planned maintenance. So the first analysis that we are going to draw in this particular scenario is that our planned maintenance should increase so that breakdown can reduce. We don't want breakdown to happen. We want to minimize our breakdown. We can increase our planned maintenance. That is the first conclusion. Then power restrictions have reduced. Power restriction, the stoppage of work due to power restriction has reduced, but still power restriction, wastage due to power restriction is huge. We should recommend the company, please install DG sets. Please install some electricity generation mechanism so that electricity can be generated in-house, so that you need not depend on outside sources for electricity. Outside sources for electricity are not enough. Please have additional or alternate sources of electricity. That is required so that this can be eliminated. We want to eliminate this. Due to power restriction, there cannot be wastage of 1236 hours. It cannot be so. Although have been reduced in the current year, but can be reduced further. So improvement, I will tell that additional electricity source can be acquired. Then shortfall and number of hours, sometimes orders are reduced. Sometimes there's a shortfall in orders are not there. So therefore the company stops working. So guys, in that case, if there's a shortfall in orders, then we can plan to outsource our capacity to someone else on a temporary basis. Whenever there's a shortfall in orders, you outsource your capacity. You can give your factory on a hire to someone else, but don't let the factory work stop. So if there's a shortfall in orders, there's number of orders is less, then the idle time can be hired by someone else. Give it to someone else. Loan and license, on loan license basis, the production capacity can be lease out to someone else. So that is the alternative that can be done. Leasing is an alternative that can be done. Leasing can be done. Okay. Next, want of wagons. Want of wagons. Wagons means we have equipment. We have shortage of equipment. Because of non-availability of equipments, we are having this shortage, and therefore our orders is stopping. And this is a bad thing, guys. We should purchase more wagons. We should purchase more wagons. This is not the way, right? More wagons are required. More wagons should be purchased so that the work should not stop. Ultimately, the work should not stop. So purchase more wagons so that this is eliminated. This should not be there. And this is how our answer will be drafted. For each and every line item, our answer will be drafted. That is how the answer will be truly drafted. Okay, let's read the answer as well now. There has been an increase in stoppage hours of machinery, because of which the rated capacity has not been achieved. So the capacity, we are not able to achieve our capacity also. Okay, so the hourly rate production is 72.70 was earlier, now it is 64.80. It has reduced. So our rated capacity has reduced. We have not been able to achieve it because stoppage hours have increased. Now further analysis is breakdown hours have drastically increased. This is due to drop in planned maintenance hours. So you should increase your planned maintenance hours. Okay, so your breakdown will reduce if planned maintenance is increased. There has been an increase in stoppage hours due to shortfall of orders by almost 19%. Please give your factory on a lease to someone else when there are no orders. Although there is a decrease in stoppage hours due to power restriction, want of vegans, still a significant number of hours are wasted. So because of vegans not available, our hours are wasted. This is not wages, this is vegans, okay? So you should, employ more vegans also. So our suggestion is plant maintenance should be increased to reduce the breakdown. Additional alternate source of electricity should be installed, like DG sets. We should have an in-house, electricity generation plant can be installed by the company. Then additional vegans should either be purchased or taken on hire. You should have additional vegans, right? The management may lease out, okay, this is lease, may lease out the production capacity in the event of no order. Please lease out the production capacity. Don't keep it idle. Don't waste the capacity. Lease it out to someone else, okay, in case of no orders. After following the above steps, the underutilization of capacity can be controlled and steep deterioration in capacity utilization can be curbed. So these are the steps which we can take to, to improve our capacity and to ensure that we are not wasting our capacity. These are the suggestions which we need to draw. So guys, the major marks that will be given to you for this particular portion. This is the portion where you will get major marks. This is the portion. Not the calculation. Calculation is not of high marks, but this portion is of high marks. How do you analyze your your entire question? That is the analysis which is important in this part, because ultimately in this particular chapter you need to perform a role of a consultant. You need to perform role of an analyzer. So first analyze the situation of the company, and then you give a consultancy to the company for performance appraisal. That is the ask from you, and therefore the questions should also be answered in the similar fashion. No fancy calculations are required, but this analysis has to be really detailed depending upon the number of marks which this particular question entails in the examination. So if it's high marks question, then you can detail up your answer, and if it's a short question, then you can squeeze your answer. Depending on the requirement, you can play with the answer. So this is how questions will come in your examination, and we don't know what kind of question can come in your examination, what kind of question will come in your examination, we don't know, okay? So my recommendation, please do all these practice questions. These are practice questions which are given to you, okay? Please do all these practice questions in writing, practice them 3 times, and I'm very sure that whatever question comes in the examination, you will be able to handle it, okay? And after these practical questions, we also have MCQs from this particular chapter. These are the MCQs. MCQs also are to be done by you in an equal, strong manner so that you can perform well in the examination. And don't worry, this chapter you'll be doing fine in this particular chapter. Although a little scary, because this chapter doesn't seem to end anywhere, but still reasonable efforts are made to ensure that all the type of questions which can come in the examination are incorporated in the practice question and the class question that we have done in the class. So now before ending the class, please promise in the chat box that you will do all the 3 questions that we have done in a class independently by yourself without looking at the answer, with full format, okay? 3 questions that is done in the class, you have to do yourself without looking at the answer independently. Please promise in the chat box, and also send me the answer that you write after the class. Will you send the picture of the answer to me on my WhatsApp number? WhatsApp number is already given on the screen. Will you send me the answer on this WhatsApp number? This is the WhatsApp number. Promise that you will give me answer to all the 3 questions that we have done in the class, which is independently done by you after the class without seeing the answer. Answer should not be seen by you. And also you need to practice all the practice questions which are given at the end of the chapter. These 2 things need to be done before you start the next chapter. Okay, sir. Alright, so that's all for this particular chapter, guys. We'll be meeting in a subsequent chapter. Till that time, all the very best and happy studying. Bye bye. See you in the next chapter.